about it. If
How's everyone feeling? Especially after last night. In fact, I'm quite surprised with the turnout. I was wondering, how many of you might make it. And I think it just might be those who've come from further afield who are jet lagged, who couldn't sleep this morning, even though most of you all went to bed at 2 a.m., I hear. So by a show of hands, how many of you have sent money across borders? OK, so that looks like pretty much everyone. I'm going to tell you a story. So typically, when we look at remittances, we take an aggregated view. So corridors like US to Mexico, US to India, or US to China, and we look at these global flows. But today, we're going to zoom in and look at what it would take an individual to actually send money from one part of the world across to another. So a friend of yours has come to you wanting to send money back home. You are a bona fide expert in digital financial services, especially since you're here at the summit. And so you graciously accept. But what if you're not sending money to Mamadou in Dhaka or to Mercy in Nairobi, relatively easier locations on the African continent to get money to? But what if your recipient was in a remote village called Yekua in Niger? And this is where your headache begins. But you are undeterred, and you start by asking your recipient. And it turns out he has a smartphone, thank God, and he has WhatsApp too. So you ask for the local cash out options, and you quickly get a snapshot. The first two are money transfer services in Niger. And even though their website advertises international transfers, it's really only for the French CFA region. So a practical dead end for you. The third BNIF bank is a local bank and not even a top tier one. You know, the global corresponding banking network is cumbersome and expensive. And you have no idea to find out even if this bank is part of the SWIFT network or not. The other two options here are mobile money. So Zemani is an Orange subsidiary. And judging by previous experiences of French banks, you know that this is going to be a uniquely frustrating can of worms. Airtel, on the other hand, is an Indian conglomerate not restricted by European banking laws. So, Airtel it is. Needless to say, you can't Zelle money from your Bank of America account to Niger. So, you download the Airtel Money app. But this is also a dead end, because it turns out you need a local number to activate a mobile money account. So being in the know, you go to a price comparison website called Monito. And Monito tells you that World Remit is the solution that you could use. But you're disappointed to find out that World Remit has discontinued their transfers to Niger. You've heard up-and-coming things about a fintech unicorn called Chipper Cash. They have funded to the tune of $300 million. And even though they're based in the US, they don't yet do transfers to Niger. Back to square one. At this point, you can throw up your hands and go for the tried and tested Western Union. But the fees are high, and the distance for your recipient to the agent is far. So after fiddling around with Google search parameters, you come upon EasyPay. Now, you've never heard of EasyPay before. You have no idea where they're based. And because you're a bona fide expert, you need to do some due diligence to keep your credibility intact. So you plug away, no red flags turn up, and quite frankly, you're out of options, and this is your only lead. So you go ahead, and for less than 10%, you're able to transfer the funds from the United States to Yekua in Niger, 3% to move the money from your Visa card to EasyPay, 3% to pay your recipient, and another 3% for him to cash out. And even though this transaction only took you a few minutes to execute, it took you days to put together this globally fragmented puzzle, monitor each step of the process to get the funds to your recipient. And as you bask in the satisfaction of having done it, you ask yourself, how many migrants would have the patience and the resources to do what you just did? Now imagine if each email you sent had a different pricing structure. And depending on who you were writing to, and that the costs would go higher, the poorer your recipient is. Now, this is the state of remittances today. So if you wanted to send $50, it would cost 10 times more than sending $1,000. And we know that $50 goes a long way in an emerging market. But you'd say, Arunjay, that's small, low value. It's going to be expensive. You don't know how the payment system works. There's a lot of costs. These providers don't really want to serve such small transactions. So let me ask you this. Is $1,000 $1,000? Right? It should be. But I'd say wrong. It really depends who the $1,000 belong to. So imagine two people wanting to send money from the US to Mexico, one of whom is an affluent customer. He or she would get preferential rates and therefore more pesos compared to the other customer who's less fortunate, even though the amount is the same. So this is not only a low-value problem, it is a problem for particularly blue-collar migrants. And what this really means is that it's expensive to be poor. So today, phone calls, text messages, and emails are completely interoperable. You see, if we could only call somebody on Verizon, it wouldn't be particularly useful. Or T-Mobile, for example. So it's the interconnectivity between the networks that give it its utility. And this is also true for email. So in terms of an email, if you could only send to everyone on your internet service provider, say AOL, for example, again, it wouldn't be very valuable. But let's say that the internet service providers in the 1990s got together and instead of what we have today, set up bilateral connections with each other. So the various 1,000 internet service providers connected to one another in a similar fashion to what correspondent banking is. Even then, you wouldn't have Gmail, because by the time Gmail came along 10 years later, it wouldn't be possible even for Google to go and connect to all of these internet service providers, even assuming that those internet service providers will be willing to let Google integrate with them. So we asked the question, why can't we send money the same way we could send email? Similar to what I saw when I came in on Friday, Interledger aiming to do, making money as easy as sending an email. And when we exchange emails, I don't need to know your email service provider, your internet service provider, whether you're receiving the email on Gmail or Outlook or on your mobile or desktop. I can simply send that email knowing that you would receive it. But when it comes to sending remittances, the equivalent of all of those pieces of information is required. And that doesn't roll off the tongue. In fact, most people have to go on a treasure hunt to find all the different pieces of information they need to do such a transfer. So 30 years after email achieved interoperability, in terms of payments, we aren't there yet today. This is clearly not a technology problem, neither is the solution technology. If we can make email work, make payments work like email, then sending money to anyone, anywhere, just like you can call, or message, or email, should be possible. And this means sending money from one network to another without knowing or needing to know which payment network your recipient is part of. Today, payment networks make one connection, a bilateral connection, with another network and call themselves interoperable. That same one connection, they call themselves open networks. But in reality, what we need is the ability for everybody to be connected to everyone. And in this exploratory paper, we propose such a solution. Now, I think we know that today remittances are expensive, they're slow, they're fragmented, and they're non-transparent. And frankly, this is an underwhelming experience for all parties concerned. So, an open, regulated global payment network would bring together all of the existing networks. And this is kind of what it would look like. It's not a new system, but it connects existing systems. So no matter whether it is incumbents like SWIFT, Visa, MasterCard, or some of the newer networks like Ripple, Stellar, Cello, a payment should be able to go from one to another. So we see this happening in 3 phases. The first is account addressing. So this is a global directory that would allow you to address a payment in the same way you have an email address. The second is tokenized compliance, reducing or rather finding efficiencies in compliance to reduce the cost. And the third is real-time settlement of funds. So some of you here might have heard of the G20 roadmap for enhancing cross-border payments. 2 years ago, the G20 came together and mandated the CPMI and the FSB to come up with a roadmap. So our work here, ties in to this roadmap, and we're leveraging it, working with the industry, convening the industry, bringing the industry together to work on this. So I'm going to go into a little bit more detail on how each of the 3 phases will solve the problems that we face today. So I talked about account addressing, and in the earlier example where we didn't need to know all of these different pieces of information, to send an email. On this, similarly, using an alias to identify your bank account reduces friction for the uptake of remittances or payments in general. So mobile money, which is about 15 years old, uses a mobile number, which effectively is an alias. In India, the IMPS, which is the Instant Payment Network, started in 2011. But it was only in 2016, with the advent of the Unified Payment Interface, allowing primarily mobile numbers within each of the apps like Google Pay and PhonePe, that it really took off. And more recently, Pix in Brazil uses aliases. And so our vision here is to bring together payment directories that exist today, the likes of UPI in India or Pix in Brazil, but also PayPal in the US, Zelle, and Square Cash, and Venmo even. So Venmo uses mobile numbers, PayPal uses email addresses. They all use aliases, and which is why it's so much easier to send money through one of these services than it is to go to your bank's website and put in all of the different information. So these directories exist, and our goal is to connect them in a federated architecture. And for service providers to query this and get back an LEI which would represent the recipient's bank, as well as the payment systems that the recipient's bank is part of. And this would allow you to make a payment using the rails that exist today. Phase 2 is to improve the efficiency of compliance. So today, a transaction has to be sanction screened, PEP checked, AML, CFT, all of that by every intermediary in the chain. Typically, there are 4, the sending and receiving bank, and at least 2 in between. And the cheapest cost you're going to have to do that check is 50 cents. So that's $2 of cost for the transaction alone on compliance. And so therefore, if you're trying to send $20, that's 10%. So by signing a token, the compliance provider who does that can sign a token and pass it along the transaction, and each of the financial institutions can check what was done. The third phase is real-time settlement. So today, almost all money transfer works on a pre-funded model where the money is parked in the country ahead of time. So what that means is that the money that you send me is not the money that I receive. The money that you send in the US stays in the US, and I get paid out from a pre-funded bucket. But for providers, that means they have to pre-fund that money, which is a cost of liquidity. It's also a cost of FX exposure, because they put the money there ahead of time, waiting for transactions to occur. And none of these currencies appreciate against the dollar, at least not very often. And so it brings a substantial cost to transactions. And so we see a world where money can move in real time, or settlement can be done in real time. And that would reduce the cost substantially. So as I finish, in terms of so the timeline of what we've been through, so we've done a very wide consultation process, spoken to over 30 different stakeholders, So 11 central banks, the public sector, World Bank, IMF, BIS, etc., and many of the leading private sector actors. In July this year, we had a workshop where we had the likes of Visa, MasterCard, SWIFT, the BIS Innovation Hub representing Project Nexus, as well as Mojaloop. And we started to work on phase 1. In August, we published the exploratory paper, and we also shared a draft for the technical paper for phase 1, which we're expecting to publish next month. So early next year, we are aiming to put together a pilot, a proof of concept of about at least 3 networks where the alias or payment pointers in the language of Interledger would operate across different networks. So in summary, our goal is to speed up total interoperability. And I'm going to steal the 3 words from Jordan's presentation yesterday and tell you that by allowing users to easily access the accounts by using aliases as proxies, we're going to, first word, increase the volume of digital transfers. And by reducing the cost and improving compliance and liquidity through real-time settlement, we're going to, second word, improve the infrastructure. And together, by increasing the volume and improving the infrastructure, we're going to make remittances cheaper, not just for all of you in this room, but everyone in this world. Thank you.
I was a kid and I cheated in school. I didn't get applauded by 100 people for it. You copied out of Jordan and you got applause from everybody. Thank you so much, Arunjay. Thank you so much. How's everybody doing this morning? Sorry for not coming out earlier, but I had a rough night. I know what you've been doing, but after our little parade, I felt like just going around the block once was probably not enough. But we've got Paula and Michael up next. Join me. Join me. And after Paula and Michael's talk, us as a group are going to orderly exit through that door and through the next set of doors. In front of this building, there's a plaza. There's going to be minders everywhere to direct us for a group photo. So everybody who's still hungover, we're going to hand out aspirins at the end as well, so we all look like we didn't party last night. With that, thank you so much.
Okay, thanks for having us here today. Thanks to Brianna for inviting us to this event. We hope to return the favor. Our next events, Brianna and Alex were able to join us in Tanzania a couple of weeks ago, so we're grateful for the collaboration. I want to ask a couple of questions first before I start. How many of you have heard of Mojaloop? About half the room, great. We'll work on that branding. And how many of you would say you are not technical? Okay, good. So I'm going to be speaking to you. Michael has the depth when it comes to the technical. So I'm going to give a little bit of background on Mojaloop and who we are, and then Michael's going to go a little more deeper into the platform and how it relates to Interledger. So as I said, I'm Paula Hunter, Executive Director of the Mojaloop Foundation. We're a nonprofit organization spun out of the Bill and Melinda Gates Foundation. Contrary to popular belief, we are not affiliated with them. We are a legal independent entity. We have our own board of directors, technical governing board, and other sources of funds. So we do operate independently, but continue to enjoy their support and encouragement. We spun out as an independent entity because we wanted to really expand our footprint with the community, the open source community, but also moving out into Africa and Asia for the Mojaloop platform. So it's been 2.5 years now that we've been operating as a Mojaloop Foundation. And our focus has been on central banks, particularly in developing economies. Primarily, our footprint has been heavily focused on Africa, although we're seeing a lot more interest in Asia now. And so we have some new projects blossoming there, and we have some team members in Asia as well. And really, what we wanted to be able to see happen is that central banks could adopt Mojaloop as the base infrastructure for interoperable instant payment systems, and then knit together their financial service providers in country to all operate on the same infrastructure. And we don't want to be exclusionary. I mean, we want the central banks, obviously, to adopt Mojaloop, but we also want fintechs and other financial service providers to use Mojaloop as well as a way to interoperate with other systems, but also as a way to expand their business. So we're not, anti-commercialism. We're happy to see people make a business out of deploying Mojaloop, supporting customers, implementing it to their customers. But our fundamental principles are that we are a public good. So all the work that we do in developing the platform is done freely. We contribute the code freely. It's an Apache software license. And we don't charge for our training, for our conferences, events, et cetera. So we really want to spread the use of Mojaloop as far and wide as possible. But you'll certainly see, a vibrant ecosystem of commercial players in the mix. And in my mind, having worked in open source for almost 20 years now, open source is a development model, it's not a business model. In order for open source to thrive, you need commercial actors in the mix, contributing to the code base, but also enhancing it, maintaining it, and providing services to their customers. So we feel that that's a really useful model to remind people of. We're not trying to undermine people's success in the fintech sector. We're happy to embrace fintechs and have them participate in the Mojaloop ecosystem. And that's the point is that, we do the non-sexy stuff. Let's face it, plumbing. We're about, the rails and the rules. And, sometimes I talk about it in the context of plumbing, sometimes in the context of the railway. In the United States, we're feeling the pain of a private sector rail system that doesn't interoperate well. And so if you're from Europe or other places where you have great rail systems, you do because the private sector doesn't control the rails. In the US, they do, and therefore, getting from New York to Boston on a train is expensive, it's long, it's slow. We want to provide rails that everyone can hop on and use interoperably and freely. So that's our focus. And then the differentiation to the consumer comes at the app and account level. So Mojaloop as a brand is probably not going to be recognized by the consumer because folks say, well, why don't you pump up the brand more to the folks through their mobile network operators and such. We really need to be transparent when it comes to the end consumer. We want the mobile network operators to know about us. We want the banks to know about us, the fintechs. But those folks own the relationship with the customer. They own the remit to differentiate their service offerings on top of Mojaloop rather than branding it Mojaloop. And as I mentioned, we obviously an open source platform, and I probably don't have to preach the wisdom of open source to all of you in the room, but for developing economies, they're still a little wary about open source. They don't understand it as well as developing markets. I mean, let's face it, Linux Foundation has been around for over 20 years. It's well understood in the commercial sector. But in the developing markets, we need to address some of the concerns and uncertainty and misconceptions about open source. And so, one of the things that's really important when we go into a developing market, which doesn't have a huge budget for infrastructure projects, is to explain to them that, first of all, there's a lower capital cost to engage. So, whether they want to test the waters, do a proof of concept, or go into full implementation, some of those upfront costs are mitigated by the fact that there's no licensing fees. That said, you need the skills, whether it be in-house or using a service provider, to help design and implement the solution. There's lower maintenance costs and lower costs to add additional functionality. Every 3 or 4 months, the Mojaloop community gathers. As I mentioned, we were in Zanzibar a couple weeks ago, had over 100 people there, and the whole week was focused on what are we doing with the code base? What does our roadmap look like? What are the customers telling us are important? We had representatives from Bank of Tanzania, from Guinea, from Myanmar, Philippines, on and on and on. All those actors came in and provided us input on what they think is important for the next iteration of the code base. So the customers aren't writing a check to XYZ company to add new features to the software. They're coming to the community and in some cases making recommendations, in other cases saying, and we'll help you write the code. So that's a really useful model for entities that don't have a lot of staff on hand. And then no vendor lock-in. They might decide to hire a service provider to implement Mojaloop in-house. They start operating it, they decide they don't like that vendor, they can shift to another vendor. The license is free, they're not locked in to working with one vendor. It sounds very fundamental, and if you've been working in open source, I forget how important these basic premises are for open source. But if you're in a developing market that's not familiar and wary about open source, these are the fundamental principles we have to really drive home. And I mentioned our community. Right now, we have hundreds of people touching our community on a daily basis. You're welcome to check things out on GitHub and Slack. But even to look at the breadth of contributors, these are people that actually sign contribution license agreements, are contributing code back to the Mojaloop Foundation. You can see it's a very diverse group of people across, all 6 of the 7 continents. So very robust group, continuing to grow, and we'll be meeting again in Rwanda in March. Just contact me if you want more details. So at the end of the day, what we're trying to do is build an ecosystem that can benefit from this investment we've made in this open source code base, whether it be fintechs, central banks, governments, merchants, and then ultimately the users, because our mission is to address financial inclusion. But the way we have to chip away at that is by talking to all these different parties in the ecosystem so that we can get those transaction costs down and interoperability up. So that's our remit. Arunjay really set the stage for us. A lot of the points that he made are our reason for being. So with that, I'll thank him for his comments and turn you over to Michael for the depth.
Well, let's hope so. Thank you very much, Paula. Now, when I sent my slides to Paula, she gave me what my mother would have called an old-fashioned look and said, "You got a lot of slides there." And I got to admit, it's true. So without further ado, let's get going. I want to start by looking at the state of affairs today, where there's bad news and good news. So look at today as reported by a recent report from Africanenda about the state of instant payment systems in Africa. Then it says, well, the good news is there are nearly 30 instant payment systems today in Africa. The bad news is almost all of them are financial institutions which rely on high transaction values. Read banks and real-time gross settlement systems. So these are the high-level systems that banks use in countries to do large-scale settlements between them. They don't include other kinds of non-banks, other kinds of institutions, and they're definitely not geared to low-value payments. The good news, on the other hand, is that when people are presented with solutions that meet them where they are, and that means both physically and mentally, people move to formal financial services regardless of their income level. Now, this is an important point because if I had been given this talk maybe 5 years ago, there would be a lot of research that says getting people included financially is really hard work. It takes a long time, and typically they go back into older forms of behavior quite soon after the experiment. It appears now that the problem is that we were trying to include people in the wrong way. We weren't going to go to them where they are and to try and engage with them in the way that they want to be engaged with. And when we do that, then it turns out things are much better. So our objective then is a simple one. It's profitably, reliably, and ubiquitously, if that's a word, to execute payments of an average value of less than $1. So they've got to be operable. People have got to make money out of them. There's no way around that. But they've got to be operable at a very low per transfer value. So I want to look at two particular stories this morning. First of all, I want to look at driving down cost, and second of all, at driving up openness. So those are the two key focuses for the work that we do in the Mojo Loop Foundation. So when I talk about driving down cost, I've got the following topics to talk about. First of all, what I'm going to call table stakes, which is a term I took over from a product manager whom we used to have. And second, eliminating indeterminacy. And third, convincing people that they will always get paid. So table stakes, what does that mean? That means the things that you've got to be able to do in order to join the game, but which no one gives you any credit for having done. So for instance, we say, we don't use specialized networks. We don't want to use VPNs because a lot of the institutions that we want to connect don't understand that kind of thing and can't get on with it. We want to use the open internet, the internet that everybody else uses, and we want to be able to secure the messages that we're passing across that open internet against any interference. Second, we want to avoid relying on long-running transactions. In a lot of the areas where we want to operate, internet service is unreliable, often things go down for short periods, and therefore the less time we keep a connection open, the more likely things are to succeed. Now, an asynchronous pattern, which is what I would call that, is much more complicated to implement, but it's much more reliable. And finally, we don't want to insist on sophistication in our participants. We use adapters, which conceal the complications which are inherent in things like making sure that messages are secure in transit and on the asynchronous patterns. We conceal those from the participants by providing adapters which they can use simply on their side, but which encapsulate the complexities of the actual connection to a Mojo Loop network. So those, as far as we're concerned, are the table stakes, the things that we just have to do, because if we didn't do them, nobody would pay attention to us at all. But as I say, we don't get, or indeed expect, any credit for having done them. So let me talk then in a bit more detail about eliminating indeterminacy, which is one of the fundamental importances for us. Now, Warren Buffett, whom I guess most of you will have heard of, once said, risk comes from not knowing what you're doing. Now, you can interpret that to say risk comes from being around people who don't know what they're doing, which I guess all of us have had some experience of. But I think that's not quite what Warren Buffett means. At least it's not what I want him to mean. What he means is that there's always a risk when you're doing things but you don't have an absolutely clear idea of what's going to happen as a consequence of what you do. So financial institutions will always hedge a risk. They'll always take out a form of insurance to make sure they're not left financially exposed by taking a risk, by doing something where they're not quite sure how it's going to turn out. But hedging, unfortunately, advantages big institutions at the expense of small ones. So it introduces an asymmetry into the market that makes it much easier for large institutions to succeed and much more difficult for small ones. And in the end, that's all money wasted. I mean, the cost of insuring against failure is a waste of money. It doesn't get you anything. Moduloop's answer is, first of all, we want to remove indeterminacy from the payment so that people always know what's going on and what they're doing. Now, how do we do that? Bit of complexity here. So first, we always ask the parties to agree on the terms of the transfer before anyone is asked to execute the payment. So this is something which I think is, it's not unique, but it's something that when we talk to other people who implement instant payment systems, they generally don't do this, but we think it's a point of fundamental importance. We think that if we get parties to do the heavy lifting, first of all, to agree that a particular beneficiary can be paid, to state up front what the fees will be as a consequence, if currency conversion is involved, what rate will be used, all of those kinds of things. And then, once we've done that, the terms are cryptographically locked so that all parties can verify that the execution is an execution of the terms that were previously agreed, and that nobody came in and said, oh, actually, I think I'm going to add an extra fee there, I'm going to change the rate, all of those kinds of things. So the terms are cryptographically locked so that everybody can verify and that nobody needs to commit funds except under the terms of that agreement, so that everybody knows in advance what they're going to have to pay, what they're going to get. So second, we use non-repudiation signatures to make sure that everybody knows that a message, when they get a message, it came from the person who is on the sender label, it really did come from them, and also that it didn't get changed by anybody else. There were no man in the middle of attacks, nothing like that, that the message that is received is exactly the same as the message that was sent. Now, again, for technical people, this will not be a new idea, but it's a fundamentally important one because it gives people, participants, confidence and trust that when they get a message, it really is coming from somebody else in the network and that it really is what they intended to send. Third, when the debtor party, the sending bank or institution, requests execution of the transfer, it resigns all its rights to influence the outcome. So once the debtor institution, the sender, says, please execute this transfer, it has to abide by whatever happens. It can't intervene after that and say, oh, actually, I'm not really sure I wanted to do that. It's got to go ahead and accept what happens as a consequence of requesting the execution. Now, the creditor party, on the other hand, is the party that's taking the risk. We're asking the creditor party to say, I will transfer those funds to my customer before I actually get them from the sending institution. So we allow the creditor party, the receiving party, to postpone completion until it gets notification from the central hub that the transaction has actually completed successfully. And the creditor party is allowed to reject the transfer. It has to be like that because one consequence of agreeing the terms in advance is that it's possible that something may happen before the payment is executed. For instance, an account may be suspended so that it's no longer possible to make payment to that account. So what we have to allow the creditor party to say, no, I thought I was going to accept this, but actually I'm not going to. And if it says that, there is no comeback. It's allowed to say that, and the transfer fails, and in the end, no funds get moved. And finally, there's just an edge case where a transfer times out. And that's because we use timeouts to ensure that transfers can't remain in an indeterminate state. Now, as I said before, we want to be able to operate in situations where it's possible that people may drop out of communication at various points. They may not be able to get onto the internet. Institutions may not be able to communicate with each other. So one of the things that we do when a transfer is requested is the timeout is set. And the switch checks that timeout, and if it's exceeded, the switch cancels the transfer and notifies all the parties to the transfer that it's been cancelled, and they will have to send it again. But that means that we don't have transfers that are sitting about, sometimes for long periods, without anybody knowing whether actually the funds should be transferred or not. Okay, so that is how we plan to remove indeterminacy. Let me move on to the question of how we make sure that people are confident that they will get paid. And by people here, I mean the receiving institutions. Now, we want to be able to include lots of institutions, very small ones, and therefore we need to be able to provide them with guarantees that if they're getting a transfer from a big bank, the big bank will pay them. So we require participant institutions to provide collateral pardon me, to cover transfers where they are the debtor. That is to say, to cover transfers where they are sending the funds or promising to send the funds. We also have a strict but fair policy. And the strict but fair policy says, because we insist on the agreement of terms, they don't have to commit those funds until they actually request execution. So they can be confident, or reasonably confident, that the transfer is likely to succeed before we ask them to provide that liquidity cover, the collateral, to cover the transfer. And also, we only reserve the transfer funds, we don't finally debit them until the transfer completes. Now, this means that creditor institutions can always be confident that the debtor institution has the funds to reimburse the creditor institution for the transfer, and that those funds can't be spent until they've actually been transferred to the creditor institution as part of the process of settlement. So that means that even if you are a small village and savings and loan association and you're receiving remittances from people who are working in the city, coming through to you, you can be confident that you can pay out to your customers and that you will get the funds from the big city banks on a timetable that's agreed and on which you can be confident about. So that's my story about reducing cost. Next up, I want to talk about driving up openness. And here I've got 4 things that I want to talk about. First of all, support for lots of different financial institution types of financial institution. Second, support for many participant types. I'll explain in a bit more detail what I mean by that. Third, being able to pay beneficiaries, not accounts. And finally, opening schemes to external parties. Now, as Paula said, what Mojaloop does is it connects financial institutions. So it does that by implementing a hub-and-spoke architecture. So each participant in a Mojaloop system talks to the hub. It doesn't have any direct connection with the other participants. But what that means is that it interacts with the hub, I should say, in a standard way. So any institution interacts with the Mojaloop hub in exactly the same way. You can't tell from the way in which you get messages from an institution whether it's an international bank or a large mobile money system or an MFI or a tiny village and savings loan association. They will all behave in exactly the same way. The API, which is one of the cornerstones of the Mojaloop system, enforces best practice for inclusive for inclusive instant payment systems. So we've figured out how we think payments are best managed, and we ask everybody to work in that way. So we enshrine best practice. We also enable participants to interact with confidence without needing to know who they're talking to. They can just need to behave in the right way, and they can be confident that other people will behave in the right way back to them. It's do as you would be done by in practice. And finally, it allows small, non-traditional financial institutions to get clear and unambiguous statements about how we need them to behave. They need to comply with the API. There's a clear statement of what the API contains, what they need to have, what they need to include, what they can't include. But it means that they don't have any doubt, or shouldn't have any doubt, about what they need to do to comply. But we also provide adapters which people can use to shield the complexities of the API interactions from what are sometimes the simplicity of their internal systems. So the adapter will look like their internal system on one side and look like a fully functioning modular loop system on the other side. And these are publicly available. People can download them. We have adapters for numerous kinds of standard core banking systems, Marphos, Temenos, those sorts of things. So people can configure them quite simply to be good citizens in a modular loop world. Second, I want to talk about other types of participants. Now, we want to extend the reach of the modular loop system beyond financial institutions themselves. Now, this is not to say that financial institutions aren't providing a 100% fantastic service to all of their customers and indeed to all of their non-customers today. But nevertheless, we think that there will be creative innovations by people who understand the local market, which will drive up usage, which will drive up transactions, because people will be providing services that other people want to use, services which involve making or initiating payments. So examples of that, you can see merchant support applications, bulk payment managers, bill payment aggregators, invoicing agencies, and online marketplaces. All of these are things that innovative fintechs in local markets can easily set up, and we want to provide them with a simple way in which they can interact with the payment system. Now, one way in which we could do that is to rely on the financial institutions themselves, the banks, the mobile money companies, providing external APIs to allow people to connect with their systems and to initiate payments through those. The drawback of that is that not all of them will necessarily have the same API. It's certainly the case that open banking initiatives, certainly in developing economies, are often an aspiration, and that when you look at the actual content of the interfaces, they're very different from each other. And that means that a fintech who wants to, so let's imagine a payroll bureau, for instance, which needs to be able to interact with any financial institution where the payroll owner has their account, might have to do several different forms of API interface in order to be able to provide that service at any of the financial institutions where they might want to. So we have a third-party payment interface, and that provides a standard way for what we're calling third-party payment initiators, who are people like the fintechs, to request and confirm a payment contract with a financial institution. That is, to make a request to a bank that the bank should give them, I should say financial institution. Make a request to a financial institution that the financial institution should allow them to debit a particular account. Now, obviously, the financial institution will need to satisfy itself that it really is the customer asking that and not some bad actor saying, oh, excuse me, I'd like permission to debit Mike's account, please. So they will need to have some form of out-of-band confirmation that enables them to be confident that the request really did come from me and not from my bad acting cousin. So We allow that to happen. We provide support for various types of validation of that kind. And what we will then allow a third-party payment initiator to do is to initiate a payment from a customer's account according to whatever permissions the customer has said they may have. It provides confirmation also to the financial institution in an agreed form that the customer has assented to that particular payment. So that means that, for instance, smartphone users can use fingerprint recognition and the consequent signature can be passed back to the financial institution so that the financial institution can be happy, can be confident that I really did say, yes, you can go ahead and make this payment. And it also means that the third-party payment initiator can provide a payment service without any need to take a financial stake in the system. Now, I've lost count of the number of fintechs who've come to me and said, so what we want is a kind of escrow agreement where we put funds into an account which is kept in escrow so that it can't be used by anyone, and that's how we're going to do this. We want to say, no, you don't have to have any financial stake in the system at all. The funds will be transferred directly from the account that you have an agreement about to wherever they are supposed to go. You won't have any financial stake in the system at all. It also provides a standard way for a financial institution to give third parties controlled access to their customers' accounts. It means that if they want to, they can offload user experience to specialists. Now, I don't know what most of you feel about some banks, but they don't often, I won't rephrase that. That was a bit unfair. Some banks don't provide the best possible user experience. And if you're used to using something like Google Pay, for instance, or Apple Pay, you might think that there are better ways to give the user experience. Now, for financial institutions who do not want to have the time, effort, and trouble of providing that user experience, this allows a way for a fintech to come in and say, it's okay, we will manage that for you, and we will just allow the customer to debit their account. It also reduces for the bank the cost of onboarding new fintechs because they're all using a standard interface. Once the bank supports that interface, then they can go out and get any number of fintechs to attach using the same interface. There is no, well, I would say no. The additional cost of new fintechs is low. And finally, it provides a way for the instant payment system itself to regulate those participants. Because those participants are participants in the system, though not of the same kind as the financial institutions, they can be regulated in ways which are effective and which meet the requirements of the jurisdiction where the scheme is implemented. Okay, so now I'm going to move on to the question of paying beneficiaries and not accounts. Now, account numbers are a kind of Masonic handshake. They're a way for institutions to say to each other, we belong to the same club, don't we? We're both banks. I can tell because you've got an account number, I've got an account number. We don't want to do that. We have, as I say, to take our customers where we find them. And we don't want to have to know how these institutions identify the customers. All we want to know is to be able to convert something that a sender knows about the beneficiary. It might be a phone number, it might be a nickname, it might be an email address, whatever, into a commitment from the beneficiary's financial institution that they will credit the right customer with that payment if the payment is routed to them. Now, it's a subtle distinction, but I think one that's of great importance to us. And we've certainly had conversations with Arunjay in the past about what the best way of managing this sort of thing is, because we really don't want to know anything about how the financial institution manages crediting the correct customer. And in particular, we want to leave KYC information with the financial institution. Again, we don't at present want to go into the business of maintaining central KYC information So what happens in the modular loop system, if you ask, the question you ask in a modular loop system is, which financial institution answers for this particular identifier, this mobile number, this national ID number, that kind of thing. You get an answer back from the institution that says, I do, here is their name, and here, if appropriate, is their KYC information. So that is not stored in the modular loop system at all. It's just passed back to the requester, so that the requester, for instance, can go back to their customer and say, did you mean to pay Adrian Hope-Bailie? Which you say, no, 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 definitely not. Ah, yes. Yes, the cup dashed from his lips, unfortunately. So, as I say, we want to leave KYC with the financial institution. So, we support multiple identifier types. We allow individual schemes to decide how to assign identifiers to FIs, to financial institutions, and how to manage the problems of uniqueness. Now, uniqueness is a looming problem for us, in particular because we make no bones about it. Modular loop comes from a mobile money system world, and a mobile money system world identifies accounts, broadly speaking, by phone numbers, MSDNs we call them. Now, where mobile money systems are operated by the mobile network operators, by the Vodafones, by the threes of this world, there is no problem because there's a direct identification between the mobile number and the mobile money system. However, there are lots of mobile money systems which are not operated by by mobile network operators. They're operated by third parties. They also use phone numbers. But a given customer can belong to more than one of them, sometimes two or three. Worse than that, a family may be sharing a handset, and the one partner may be having a mobile account with a particular mobile money system. The other partner has an account with a different mobile money system. Both of those are identified by the same mobile number, even though they refer to two different people. So this is a problem we need at the moment to understand, to allow individual schemes to decide how they want to manage that. But one thing that's important to emphasize is that we don't, broadly speaking, have any interest in direct interactions with customers. We've talked a number of times about whether we should, but at present, we've always said, no, we're going to go through the financial institutions and not direct to the customers. So, we also provide APIs to allow participants to register their claim on a particular identifier. Again, it's up to the individual scheme to say, will I allow more than one person to claim the same identifier, like the mobile phone number in the example I was just talking about. We allow them to decide that. But essentially, there's an ideological divide in this world. One side wants to work with account numbers or PANs or whatever, different kinds of direct representation of the account itself. What needs to happen there is that both the account holding financial institution and the requester need to agree on that value, but the beneficiary doesn't have to say anything about it. The identifier is an identifier which is assigned by the institution. The customer doesn't have to make any action in order to get that registered. But there are problems. For instance, there are jurisdictions where branch identification is either patchy or non-existent. A lot of people will talk about IBANs, international bank account numbers, but there are numerous jurisdictions in the world that don't use IBANs, and therefore for them these things are completely useless. So it's not an easy question of itself to resolve. It's also the case, for instance, that if you don't have proper branch identification, lots of banks are using the same core banking engines, and those core banking engines use parts of the account number to designate things about, for instance, what kind of account it is. So therefore, the chances of overlap between banks and account numbers is very high. And of course, The same bank account number in different banks will refer to completely different people. So it's a problem. The other side, our side, wants to work with identifiers. So that's just something which, it's a trigger which an account holding institution can use to decide which account or which person, which customer is being referenced. It doesn't have to expose the actual account to anybody else. It doesn't have to say anything about the assignment process itself. But the downside is that the customer does have to register their identifier with the account holding system. It has to, in the same way as you do when you sign up to PayPal or something like that. You will have to give the identifiers that you want to use to identify yourself. Okay, so that's the question of identifiers. Now I'm going to talk a little bit. Oh, I see it's counting down to 0. I told you there was going to be a lot of slides. Sorry, I should be paying more attention. Okay, let me gallop through this one. So according to the World Bank, 36 countries in the world receive more than 10% of their GDP by personal remittances. That's in 2020. In 4 of those countries, the average cost of remittances was over 9%. Remittances is one of the top 5 sources of finance for development, and Sustainable Development Goals say we should reduce the average cost to 3% and eliminate all remittance channels with an average transfer cost of 5% or more. So we do that via cross-network providers. They are basically simple. It's an adapter pattern. On one side, it talks Mojaloop. On the other side, it talks the language of the external scheme. Can things be that simple? Well, a cross-network provider has to belong to a settling participant in the scheme. There has to be some way for those funds to be transferred to the recipient institution. External systems often don't structure payments in the same way we do. Particularly, they don't have the agreement of terms phase, which, as I said, is quite uncommon among instant payment schemes. Oh, currency conversion. There are specific issues. I'm not going to go into those because they are quite complicated. But as we've started proofs of concept of external connection via cross-network providers, we've come to talk about these. If anyone wants to discuss them, I'll be very happy to talk about them afterwards. Specific initiatives, Mojaloop is a member of the ISO 20022 standards community, and we are in process of creating an ISO 20022 version of Mojaloop, i.e. something that will do the things that Mojaloop wants to do, but will be recognized as a standard by the ISO 20022 body. We are building a Rafiki cross-network provider, which will allow institutions which support the Interledger Protocol to route payments to and indeed from Mojaloop schemes. And we're also building a cross-network provider to allow institutions which support the Visa Direct API, which is a proprietary Visa cross-connection scheme between identifiers, to allow them to route payments to Mojaloop schemes. However, the problem is not a technical problem. It's settlement and the process of currency conversion, and at bottom, it's a problem of correspondent banking. Now, I was kind of hoping that Arunjay would talk about correspondent banking, but he didn't. And I'm not going to talk about it either, because you've been a good audience, and this will just depress you. So I'm going to tell you a joke instead. And my joke is, how many psychiatrists does it take to change a light bulb? The answer is only one, but the light bulb has to want to change. And these systems are like that. You can't implement these things technically unless the society and the regulatory environment wants to change. These systems, if they're implemented properly, will result in a new world, a world in which things will be different for everybody, different for banks, different for mobile money companies, different for people. And unless there is the political will to change institutions and to change regulations to support those things, they either won't happen or they won't happen successfully. So that is your reward for not hearing about correspondent banking. Thanks very much.
Michael. Thank you so much, Paula. We won't be taking any questions. Oh, sadly, we won't be taking any questions. I know I told everybody we were going to go outside for a picture, and then I went outside to see how it was, and fuck no. So I'll watch my potty mouth from now on. Pardon my French. I'm sorry. I got the message. What are we going to do instead is we're going to wait for a ladder to show up in here, and we're going to take the picture in here. The stage isn't rated for 100 people, so I qualify for 3 people. Me and 26 other people can be on the stage, and everybody else in front of the stage, and we're going to take a picture. Can we get the ladder in? I'm not gonna go on the ladder, I promise. I'll stay on the stage. But to incentivize you to, take the picture, there's also snacks and coffee outside if you need to wake up. Yeah, come on in. How are you? Gonna be okay. That's why God invented coffee. Then on the calls. Yeah. In the home, I am completely different when I'm, in my little cocoon, in my little chair, in my little thing. Are we gonna be one of the people on the stage? No, I'm gonna go down. I'm gonna go down from the stage. Wait.
The signage.
Do you think the letters can withstand being moved?
The ladder?
The letters.
Yeah.
Yes. I was going to say, can you move the letters?
No.
He got it. I don't know how he got it. Like on here.
They're stuck to the floor.
And also the
No,
cables.
they're stuck to the floor.
And the cables are...
That's not. It's stuck to the floor and stuck to the thing.
The board.
We want the ladder.
Where's my photographer? Give me a second to see my photographer. He's got the beanie on top. Yeah, ask him where he wants to stand. I'm sorry. I will identify a short. Vertically challenged people at the front of the stage, please.
Thank you.
Hello. All right, beautiful people. They done made a mistake and gave me a microphone. This looks super good. Justin, tell me what you need from. All right. We're going to squeeze in a little bit as we would have done in 2019. Oh, I'm sorry, Alex. Oh, God, he is so... What are y'all gonna do with Alex? That is my question. Yes. So I love your pose. You're giving like, yes, it's giving. You getting up there? Which one? Yes. What you say? Yeah. Yeah. That helps. Y'all look so good. I need you to say that you're doing this at your own risk. Yes, Erica made sure of that. We are good. Y'all look amazing, by the way. What you say, Alex? Can, all right. 1 second. What'd you say? Oh, God. You stopped it for that?
No? Yes.
All right.
Yes, we stopped for this.
Yay! Wait, don't take your other hand off. Hold it, y'all. Wait.
They're ready.
All right, our video guy is about to get what he needs for the video. Interledger. Thank y'all.
Testing.
All right.
Kind people, please take a seat. Kind people, please take a seat.
Yes.
I'm glad we all got the room this morning. Now please take a seat.
I know y'all all need your coffee because if you're like me, I'm pacing just so I can stay awake. Next time, please, if you invite me back, please, next time have me go before the turn-up party on Saturday evening. All right. So, good morning, good morning, good morning, everyone. My name is Erin Brown, and I wanted to talk with you. I'm not here to talk about fintech per se. I'm here to talk about the principles of diversity, equity, inclusion, and accessibility, and why these principles are important, especially in the spaces in which we operate, to optimize what we do, strengthen what we do. And so I want to thank the Interledger Foundation for allowing me to come to this summit to talk about a topic about which I am super passionate. At USAID, United States Agency for International Development, I actually helped to stand up the DEIA program, and this DEIA program was across the 5 Ps, meaning that we wanted to, and I will talk about the 5 Ps a little bit later, but you know, the 5 Ps are people, policy, practices, programs, and partnerships, because DEIA is not an internal thing. It's not something that's nice to do. It is not just a moral imperative. It's good business, point blank. And given the spaces in which we operate, given the diversity of the people that we serve, it is absolutely necessary for us to remain relevant, for our solutions to be viable. And so I, as part of my day-to-day at USAID, I, like many of you, I work towards eliminating poverty by empowering and enhancing the self-reliance of people all throughout the world. I'm going to repeat that because this is what we all do in some way, shape, form, or fashion. We work towards eliminating extreme poverty by empowering and enhancing the self-reliance of people all throughout the world. That is one of the most powerful purposes that anybody could ever have. And so for all of that, and since all of us are engaged in that, can we all give ourselves a round of applause? Okay, so is there anybody, I said that I did work at USAID. Does anybody not know who USAID is? I figured that would be the case. And see, and just for you 3 or 4. I made sure to bring a video. All right. And so would you mind cueing the video for us? Because this is where I work. Hopefully you get a better understanding of what USAID is about. And I get to work there. I get to work there. I get choked up every time I think about it because I spent 13 years in the private sector. And I was, before I left the private sector, I was a senior principal for the Building Effective Organizations practice in a company, a global consulting firm called Hay Group. And I was concerned about managed revenue, sales revenue, growing my practice, accounts and things like that. And I was like, what in the heck am I doing all of this for? And that's when I decided to make a change and actually go to USAID, where what I do on a day-to-day has purpose and has meaning. And so just to explain a little bit more about what USAID does. And this is important because diversity, equity, inclusion, and accessibility, if you understand, we work on 5 continents. We have presence, our programming presence is in over 100 countries. There, we have missions in 86 countries around the world. That means that who we need to serve and the diversity of what it is that they need, it is crucial for us to incorporate diversity, equity, inclusion, and accessibility within our operations. And if it's important to us, then given the fact that you operate in these same spaces and you're trying to deliver solutions to these same people, then it should be just as important to you. So USAID, as you could see, we are basically the lead foreign assistance agency for USAID. And so what is foreign assistance? That is the aid that the United States government provides to these developing countries to help with, peace, prosperity, increased stability, and again, help to elevate out of extreme poverty. And so what that foreign assistance look like, what that aid looks like, is through acquisition and assistance. What do we mean by acquisition? We mean, in fact, let me take a step back. USAID we aren't the executors. We provide the funding. We design and we work with partners, host country partners, to design the programs, and then we provide money to implementing partners to deliver the solutions. How do we do that? We do that through contracts, we do that through grants, we do it through cooperative agreements and other assistance mechanisms. But at the end of the day, and I know that there are a number of you that are grantees here from Interledger, but just to give you an understanding, USAID obligates $35.91 billion with a B. With a B, right? In fiscal year 22, and our fiscal year is October, so fiscal year 22, that's October 1st of 2021 to September 30th of October 2022. In 1 year, 35.91 billion with a B. In grants, that was 21.1 billion of that was in grants alone. From a total of new awards from an outlays perspective, that's 2,960 new awards. We are in the business of giving money, from an acquisition, from a contracts and grants, cooperative agreements perspective, or in government to government assistance. So that means that when we're thinking about who we give the money to, why we give the money to them, if we have a single story or a single focus or a single perspective as we're doing this, then there's no way in the world that we'll be able to achieve sustainable development outcomes. And so this is what USAID does. And oh, by the way, the sectors in which we operate, a number of different sectors, whether it be conflict prevention and stability, whether it be democracy and governance, global health, which is the biggest part of our portfolio. Whenever you see, just think of a USAID, when there's an earthquake in Nepal, who are the first responders from the United States government? USAID. When there's an Ebola crisis that is impacting the continent, who are the first ones there? USAID. When it comes to the work that we're doing to help to promote and build infrastructure, health systems in countries, that is USAID. That is what it is that we do. But who is USAID? So USAID, because we're a government agency, you will probably think that, hey, you're all American, and so you as Americans probably all think the same way, have the same perspective, and you would be absolutely 100% incorrect. The United States citizens, we are the minority of USAID. The majority of our workforce of over 10,000 are actually what we call, we used to call them foreign service nationals. We now call them cooperating country nationals. That means that they're the citizens of the countries in which we operate. That is the majority of our presence at our agency. So if any agency needed to get diversity, equity, inclusion, and accessibility right, it needed to be us. It had to be us. And not just because we need them to be bodies and seats. We needed them involved in helping us to design our programs. We needed them involved in order to help make decisions. So in this workforce, again, of over 10,000, the minority of us are civil service, that those of us that are back in Washington, D.C., Then we have an equal amount of foreign service officers, just like a State Department, foreign service officers that are in posts and rotate in their different posts in our 86 missions. And then we have a number of contractors. And so again, because we have a diversity of hiring mechanisms, meaning actual government employees, contractor staff, because we have a diversity in the race, ethnicity, a tribe, et cetera, that as far as racial, ethnic makeup, because we have from a gender perspective, because of all the diversity of which I'm just speaking, it was crucial in order for us to put ourselves in a situation where we would achieve sustainable outcomes for us to focus on diversity, equity, inclusion, and accessibility. But USAID has been around since 1961. And our ability to be able to achieve outcomes has been spotty at best. Our ability to, and the diversity of our staff has been spotty at best. I believe that we've achieved outcomes. I believe that the different perspectives that would allow us to achieve those outcomes has been spotty at best. And even government oversight agencies have told us, y'all have had some mixed results. For the past, 20 or so years, y'all have had some mixed results in what you have been able to achieve from a diversity perspective, which means that what we were doing, we were not being intentional. So, before I keep talking about diversity, equity, inclusion, and accessibility, I recognize that definitions matter. Words matter. And we have to, if we're truly going to make progress in diversity, equity, and inclusion, and accessibility, we need to first be on the same page as to what they are. Don't worry, I'm not going to read that. I'm not, if you want to read it, knock yourself out. It gives you something to keep your eyes focused on as you're waking up from last night's revelry. But I do want to be able to at least talk about what they are and why they're important. And so diversity. What do I mean when I say diversity? I mean, what are the myriad of differing perspectives that I bring to the table when I am making decisions, when I am executing agency operations? What are the diversity of the perspectives? And that will be based upon the identities of the people that I have in the room. And identity is a powerful thing. And the reason why diversity is so important is because of identity. What you see about me is that I'm Black. That's all you know. You don't know there are 12 levels or 12 dimensions of identity for any one individual person. So that means you can't assume anything about what I may believe or what I might decide or what I might do. What you can do is make sure I am in the room in order to provide my perspective, because identity, and why it's so important, is that identity, your identity, whether you know it or not, explicitly or implicitly, informs how you see the world, how you perceive, how you receive information. We call it ladders of inference, right? When you receive information and you interpret information, that is based upon and shaped by your identity. So when I talked about those multi-dimensions, here are other things of my identity. I am Black. I am a woman. I identify as a woman. I'm heterosexual. I'm Catholic. I'm a daughter and caregiver of a mom who has dementia, right? I come from a middle class background. I am educated. I have 2 master's degrees. So there are multiple things about my identity that inform how I do, how I see, and how I maneuver in the world. So you would think that if everybody in the world has those same dimensions of their identity, and you need to be able to capture all the different perspectives of those people, it would behoove you, don't you, to have people representing different identities, as you are not only gaining input for the decisions, but you are actually making the decisions. And I'll let you know, at USAID, when I first got there in 2012, Jenny Barahona over there in the back will be able to tell you, if you pulled up the leadership page to look at the diversity of our leadership, it looks way different now than it did then. What it looked like then, my colleague, Ambassador Gina Abercrombie Winstanley, who is the Chief Diversity Officer at State Department, she said, pale, male, and Yale. That's it. That's what it looked like. with few exceptions, right? And so if you have all of those folks that share the same identity making decisions, don't you think that perpetuates groupthink, right? How robust are your solutions if you're all thinking the same anyway? Yeah? So that's why diversity is important. Now let's check to the E, equity. For that, I'm actually going to move to this slide because people confuse, again, words matter, equity and equality. They are not the same, okay? So can anybody in the room just look at that and be able to tell me what is the difference between equity and equality and why it's important for us to focus on both? Yes, ma'am. Could you say that louder, please? So that is correct. It's based on what someone needs. What else do you notice about this picture? Yes.
That was a site about the face. Like said, equity is the same. Whereas the equality is different, even though,
I appreciate that. I am focused on the input when I'm focused on equality, right? I am focused on the fact that, I want to make sure that all the kids are able to stand on something to prop them up in order for them to see the game. I just want to make sure every kid has a box. That's all I'm focused on. They just need a box. And it's going to be amazing. And yeah, this one still can't see with that same box. I just want to make sure that they have the same. It's important for fairness for all of us to have the exact same number, exact same height, same, because we believe in principles of fairness and we equate fairness with same. That's equality, right? Getting to equity. Clearly, we've got that is really about what is it that we want them to be able to do? What is the outcome that we are trying to achieve? The outcome is not that, the desire for me is not that out of fairness, everybody has the same box. The outcome that I want to achieve is the fact that you can see. I need you to be able to see. And in order for everyone to be able to see, I might have to give one child one more box in order for them to see. I have one kid, you don't get a box. You can see. And if what I care about is that you can see, that's what equity is. And then for this one child, all you need is one. But at the end of the day, what I've wanted to make sure that everyone has been able to do is to enjoy the game. Don't you think that's also fair? Right? And so when you're thinking about the solutions that you're providing, and I hear about financial inclusion, it's like access. Is all access equal? Does everyone have the same need? Are some people starting from a different vantage point? And somehow the solutions need to be crafted differently in order to better address all the needs of the various identities, populations that you will serve. Okay, so that's where we want to go with equity versus equality. Inclusion. This is and from an internal perspective, am I creating an environment that is welcoming for all, for everyone that feels like they belong? The fact that I am not just that I have you here. It's not just great that you're here, that you're involved in actually helping to make decisions and that your voices and perspectives are represented at the table. That is inclusion. So I heard from a couple of sessions that, we gathered input. That's great. That's one level of inclusion. What's the next level? How exactly are you not just gathering input, but you're also engaging and help in making decisions? How are you creating agency? How are you creating shared ownership in this? I was listening at a session yesterday about community and sustainability, and that is what inclusion is. That is, that whole sense of community and that sense of belonging, that sense of shared ownership, that is inclusion, and that is a necessary condition for us to achieve the sustainable outcomes that at least those of us at USAID are trying to achieve. And I would think that those of you that are looking to in the financial inclusion and fintech spaces are actually able to, or looking to achieve as well. And then there's accessibility. That's the one that nobody's really talking about, but in the US government, we are. And accessibility is about, are we thinking about those that have physical or mental impairments and what they may need in order to be able to live out their lives with dignity and respect, okay? So that's what accessibility is. I'm gonna move forward. So hopefully now we're all on the same page with what we mean by DEIA. And so from a USAID perspective, why did that matter? We've been in existence since 1961, haven't focused on it. Why do we care now? Let me start at the bottom. It's a US government priority. For those of you that are US citizens, you may not have known that as a federal government, the policy priorities of the president, in this case, the Biden-Harris administration, they lay those out for us. Our marching orders are from these various, what we call executive directives. So they're executive orders, presidential memoranda that let us know this is the policy priority of the United States. The policy priority of the United States, based on 13, not one, not two, 13 various executive directives, executive orders, presidential memoranda, national security memoranda that said it's a national security imperative for us to diversify our national security workforce. There are 13 that tell us that diversity, equity, inclusion, and accessibility is important. So if you didn't know, now you know. It is definitely a priority to this administration. So why does it matter to USAID? First and foremost, it's a US government priority. Two, it helps us to achieve better outcomes. I've spoken to this before, but when it comes to the diversity of the people that you have in the room, those that are even outside of the room and that you still find a way to meaningfully engage in collecting their input and involving them in the decisions, it leads to better development outcomes for us. It better promotes innovation because when you have a group of people with the same perspectives, it's really hard to innovate. Because at the end of the day, you are not truly, you don't have the felt experiences, the lived experiences of those who you are helping to serve. And the only way that innovation is truly impactful is when you have those diversity of perspectives. And then of course, from a risk perspective, hey, there are things that you miss. When everybody thinks the same, you're gonna miss something. You're going to miss something. And so that is what, that introduces risk into our day-to-day operations. And so it's also from a risk mitigation perspective, that is why it's all important to us at USAID. But I guess the question is, why should it matter to you? I hope that at least some of what I've been sharing kind of speaks to why it should matter to you. But just in case I need to make it clear. So there are benefits to diversity and inclusion in this fintech space. If the financial inclusion and fintech sectors are more diverse, then you will inherently be able to understand the financial needs and aspirations of underserved communities, which will increase the likelihood that financial services that are developed actually meet the needs of those communities. From a situation where we have more useful, equitable services to the underserved, whether we work with consumer advocacy groups, universities, industry actors, or the public sector, like USAID, you can better ensure that the tech-enabled financial services being designed and distributed to underserved communities actually meet their needs and advance positive financial well-being outcomes, not just access for access sake, but better financial well-being outcomes. It gets to that whole equity versus equality thing. What are we really here for, right? And what we're really here for, if we're, and what the goal is that we're trying to achieve, what we do from it to advance equity perspective will be different. And that's why it is optimal for us to align on what it is that we want from an outcome perspective. But it also is that if we identify mismatches between what a service promises and the impact that it actually has, we can invest resources to revisit the service features, the business model underlying the service, or even the assumptions that led to the service being offered to underserved communities in the first place. And when I talk about those assumptions that led to the service being offered in the first place, that's where bias can come in. Bias is a powerful thing. Bias is not a good or bad thing. Bias is. That's it. It just is. We all have it. All it is a preference that we have towards one thing or another. And it's based upon identity, lived experiences. And so that's why we want to be inclusive, because we've got blind spots. Those biases that lead to our preferences lead to blind spots. And if we have those blind spots, when you want to know, what, don't you want to, it's like, when you're in the military, someone's like, have my six, have my back, see things that I can't see. See things that I can't see. That's all that it means. And that is one of the reasons why DEIA should matter to you, so that you can see, you can put people around you that can help you see what you can't see. That doesn't mean that you're not awesome and amazing and a subject matter expert or whatever. It just means that you have a blind spot. We all have them, and it's just our duty to make sure that we protect ourselves, that we mitigate that risk. And then the last thing, of course, is from a laws, regulations, and oversight perspective. Because from a DEIA perspective, one issue that can be pursued is ensuring that the policymakers and oversight bodies, that they themselves are diverse. And USAID, of course, we, in some of our work, we are helping towards that right through our democracy and governance work. And so that those oversight bodies themselves are diverse and are equipped with evidence, and we need to give them the robust, diverse perspectives through that evidence that helps shape the sound and equitable policies. Okay, so it's like, okay, Erin, all right, so DEIA is important now all of a sudden to USAID. So how did you do it? So for those of us that have organizations, and we're all in an organization, right? And let's say that we've heard this and we think that DEIA and my organization and enhancing, optimizing DEIA in my organization is important, then how do you do it? And so when I had to build the DEIA program at USAID, I was like, you know what? Here's what we're not gonna do. What we're not gonna do is say, oh, it's nice to have, it's something extra to do, because I already knew that it was gonna fail. I already knew that it's just training. We're going to train people on DEIA. No. If it is not, because because part of my background as, organizational change, continuous process improvement, I'm a business optimizer. That is what I do. I help organizations achieve the outcomes that they are trying to achieve and moving from point A to point B. That's what I do. And I knew when they asked me to help build a DEIA program at USAID, what you're not going to do is have me sitting there and telling people what you need to do is take training. Because that in and of itself is not going to make it stick. What's going to make it stick is if we use a framework, the 5 Ps, people, policies, practices, programs, and partnerships, and ensuring that we are intentional across all of these dimensions. And dare I say, because I love alliteration, I'm the daughter of a retired English teacher. She taught English for 50 years. I love alliteration. It is amazing. That's why I had the 5 Ps, but because I just wanted, I'm an overachiever, so let me throw in a 6th. Come on now. You're like, Erin, come on, 5, and isn't 5 enough? Thank you. Principles. And why did I throw in principles? Principles are based on your values. Values is a part of what? It's your culture. It's the culture of your organization. It is your shared values. It's not just about what leaders think. It's your shared values that you promote or perpetuate as an organization that basically form the culture of that organization. So I'm going to throw P, the 6P. Principles is not on there, but it needs to be. And so this is just, I just got, hey, I need a 6P. Let me throw this up there. But it's the truth. From an organizational perspective, it is the truth, because culture drives everything that we do. It is permeated across the operations. And one thing that I needed to make sure happened, and not to mention the fact that I knew it, but also the Biden-Harris administration expected it, was that I was going to not just think about DEIA internally, but I was also going to think about how do I diversify the partner base? How is it that I am including local voices in the programs that we design? And oh, by the way, from a program perspective, starting at the strategy, the country strategy, who am I engaging? Who's in the room when we're setting the strategy that drives the programs in the first place, right? So what we have to do now is step back and say, we say it's something that's good to have, but what are we doing in order to actually focus on people, policies and practices, programs, partnerships, and principles, right? And so from a people perspective, we're thinking about how do we, across the employee life cycle, so how I recruit, how I hire, how I retain these diverse voices, that's the people part. That's the internal part, right? And so I'm happy to say that USAID, we had one of the most diverse foreign service officer classes last year than we've ever had. Over 40%, I think 42% of them were actually from underrepresented groups at USAID. That's amazing. That has never happened before. But why did we do that? That was intentional focus. There were things that we intentionally did in order for us to achieve that particular outcome. When it comes to our policies and practices, and I know it doesn't go with my whole alliteration thing, but strategies too. It's an S, but go with me, right? It's S, but strategies is important too. So the idea of the policies, practices, and strategies that we have as an organization, how have we deliberately infused inclusion into our policies and our practices? It's not just enough to say we have training. I need to know that from an operational policy perspective, which governs how we do business at USAID, that we have invested in examining equity in our policies, in our practices, and our strategies. And now we're at a point that when our changes in policy, practice, or strategy go up to our administrator of USAID, she will kick it back. And she's like, oh, I didn't see the implications from a diversity, equity, and inclusion perspective. Erin, can you opine on that? Wow, that's never happened before. But we have an administrator at USAID now that cares. And oh, by the way, we have a president of the United States that now has it as a policy imperative. And oh, by the way, they are paying attention. When my stuff was late for an equity action plan, Ambassador Susan Rice did reach out to the head of my agency and go, where's this equity action plan? I'm expecting to see it. And then she reaches out to me, Erin, I know you thought it was important. Where is it? There's accountability baked in into what it is that we do. Programs, partnerships, again, I've spoken a little bit to that, but that's a frame that we now use that if we have, it's a check. It's a check that we do on ourselves. And I guess the question that I have for you is how can you do that within your own organizations in order to optimize the integration of diversity, equity, inclusion, and accessibility across your operations? So if we truly want to achieve more sustainable outcomes, and we can't do outside what we don't first do inside, full stop. You can't do it out there if you're not doing it within your organizations. It's not possible. It's not possible. And so I guess the question is, how will you take on advancing diversity, equity, and inclusion and accessibility? I applaud Interledger Foundation. When Brianna did her presentation on Friday and she pulled up who was part of the decision makers in Interledger, I was like, wow. That ideally is what we would all hope to see. And so at the end of the day, again, it will take all of us. Inclusion, just to let you know, we talk a lot about financial inclusion, which is why I wanted to align on definitions. In financial inclusion, and what I mean when I say inclusion is different. So financial inclusion, you mean access, increasing access to all. And when I say inclusion, I mean how we're engaging in order to, engaging people in the actual decision making so that they have ownership and agency in the solutions that it is that we're developing. Because just having access is not enough. If we want sustainable outcomes, we need to be able to focus on inclusion. Second, technology is not a shortcut to better financial outcomes. It's the shortcut to access. It's not a shortcut to better financial outcomes, right? And if, again, we're wanting to focus on equity, then what we're looking for is how do we embed the diversity, equity, inclusion, and accessibility principles into all it is that what we do. And then we can use the 5 Ps as a rubric. As you are engaging about your day-to-day operations, how are you integrating across our 6P, principles, the people, the policy, the practices, the programs, and the partnerships? Have a checklist. Doesn't have to be anything major. Have a checklist. Have a pause and reflect upon how we are integrating all of those Ps across what it is that we do. And I guarantee you that when you do so, that you will, that the diversity of your organizations, the way in which you include and engage not just people within your organizations, but with stakeholders, and how you define equity, and that you focus not just on equality, but equity, I can guarantee you that that you will work towards more sustainable outcomes in the end. And so with that, that is all that I have. Thank you very much. Oh, are there any questions before I just go off the stage? Any questions? Don't have time? Yeah, I've been told we don't have time. But I'm here if anybody has any questions of me.
I think I need your clicker. Okay. Morning, everybody, or mid-afternoon, everybody. Welcome. Thanks for coming to hear our talk, and thanks to the Interledger team for having us here. My name's Kendall. I run the DFS Lab, and I'm going to talk to you today about some kind of a research and learning agenda we've been working on with the Interledger folks to better understand the African payments landscape. So first, I'll just give you a quick overview of who DFS Lab is. So we're primarily an investor in early stage tech companies across Africa, most of whom are in what we call the digital economy space. So they're companies that are building kind of a new digital economy stack for Africa. But we also do research and innovation programs, boot camps, things like that. So here's kind of a list of some of the things we do. As I said, we're investment fund managers, but also researchers. We run a global investor community of angels who invest in the startups alongside of us. Actually, some of you might be interested to participate. It's called Sufficient Capital. And we run some sort of boot camps, innovation programs, innovation labs, accelerators for different partners. And we're also just starting to get into the carbon market. So that's us in a nutshell. And here's our team. Some of you may have met Shernay, who's here. Hard to miss. She is our head of research and actually probably more responsible for the work you're going to see here today than I am. Of course, I gave her an opportunity to present it, and she was like, "Oh, no, you get up there and do your own work. Don't try to shift your work. Don't try to shift your work onto me." Okay, so when we first started to engage with the Interledger team, we wanted to first, kind of set out some goals, and they came to us saying, we really want to start to engage in the African payments landscape, but we want to do so in a careful, methodical way. We want to do it through research first and really understand what we're getting into and engage the right partners and around the right issues, right? So some of the goals for the research were to gather and make sense of the African payments landscape, to surface and share the experiences of small businesses and the folks on the ground who actually live and breathe having to deal with payment challenges, engage directly with some top experts, folks who are deep in that space, and some of them are here this weekend, and then begin to chart a path forward for ILF's engagement in Africa, basically. And so some of the outputs from this research based on those goals were, one, an African payments landscaping report that is kind of the bulk of what I'm going to talk about today. Also, a set of structured interviews we did with small business owners across South Africa and Nigeria, which I'm going to touch on, although that work's not completely finished, so I'm not going to go very deep on it today. A live learning trip in Lagos that we organized for the Interledger team to be there on the ground, meet people, really get to interface with partners and folks there. And then some diagnostic discussions that we've had since then, where we're trying to engage experts in kind of a closed-door format and deepen the understanding and deepen the engagement with the Interledger team. So I'll start off with our sort of flagship African payments landscaping report. Is based around a series of conversations we had with experts across the sector. So market participants, folks who are actually building solutions, running financial institutions, folks who are working at switches, various market experts of different kinds, and also kind of a deeper dive into the literature around the space. And all of it was based around trying to understand, in particular, as is appropriate, of course, for Interledger, what's happening with open and interoperable instant payments in Africa. So we first wanted to ground ourselves in what's actually the most kind of the outcome aspect of this, right? So we're going to get into what's happening in the payment space, but payments is kind of what determines financial inclusion, right? And so just starting off to give kind of a picture of financial inclusion across Africa, it's actually a lot more varied than you might expect, right? So you have countries like Kenya and South Africa who have financial inclusion rates up near the bottom of the range for Europe, right? Greece and Italy might not be so much further along than they are, but then most of the countries in Africa are quite a bit lower, where you have less than half the population, half the adult population, with a bank account or having used a digital payment service. So there's a lot of work to do, obviously, but also a big variety of different contexts and sort of situations, right? So that's first thing. Through the conversations that we had and through the research we did, we found that basically there's a lot of challenges, right? And historically, sort of national and domestic payments across Africa suffer a lot of challenges. We'll get into some of those more specifically, but you can see some of them here, right? So the light blue ones are more prevalent in kind of the national or domestic payment side, and then the blue ones more in the cross-border side. But all of them affect sort of the outcomes and the payment landscape in general. There's a lack of interoperability in a lot of contexts. The low-value retail cross-border segment's very poorly served, as Arunjay talked about earlier in his talk this morning. Regulation's quite fragmented and sometimes not clear at all. Lots of coordination failures, getting large players to act in concert, getting the market to kind of come together around individual solutions, et cetera, right? So just to kind of double click on one of those, the cost aspect is huge, and the ability of some of the switches and payments initiatives to reach appropriate scale can be pretty challenging. So here we collected data on cost per transaction across a bunch of different switches in Africa, and you see KenSwitch, quite expensive, InterSwitch Kenya, InterSwitch Uganda, Umoja Switch, all of them quite a bit higher than sort of international benchmarks would normally put it right down, closer to the Visa or MasterCard level, where things are quite cheap. And it's important to understand kind of where this comes from, right? So cost in payments and just sort of success in payments in general is very much driven by volume and adoption. It's very, very critical, right? If you can't get enough people using the switch or your payments initiative, you're going to have, all that cost is going to be spread over a much smaller number of users and transactions, and so the per transaction cost and the per user cost are going to go up. And this can create a very kind of a vicious cycle, right? So part of the reason why some of the ones that are quite expensive is that they have a really hard time driving kind of comprehensive adoption across all the banks and all the financial institutions in their given market. And so what happens is, you know, the big banks may decide we're going to sit it out, use our own infrastructure, use a kind of a one-off home-built solution. That means that all that cost then has to be borne by the rest of the market participants, and that drives up the per transaction cost. It also can very much affect service quality. So it means that the switch is kind of starved for resources. They're going to invest less in their technology and in their service quality. And so then the rest of the participants have even less incentive to participate. And so you get a negative feedback cycle. And this is one of the most critical things about payments, is that you need to drive adoption. You need scale is kind of everything in the payment space. And you get very negative effects when you fail to achieve it, negative network effects and negative scale effects. And if you do achieve it, you get very positive network effects and scale effects. So it's a very critical kind of component of success in the payment space. So we wanted to, Interledger really encouraged us to kind of unpack that a bit. And this diagram is a bit of a kind of a causal model of how better open interoperable instant payments can lead to financial inclusion, which is a big priority for the Interledger team and for, of course, lots of other policymakers and initiatives across the continent in Africa. And you might be saying, okay, so this, you know, you guys maybe want to get better at drawing these diagrams. It's a very complicated diagram. It's very hard to understand. But actually, I think it's appropriately complicated because the causal mechanisms that relate better open instant payments are quite complex, and there's a lot of feedback loops, and not easy to always tease out the kind of causal mechanisms. But you can see, you know, if you do achieve open instant payments in a good way, you'll get some of these mechanisms on the bottom. We have more use cases that you can serve. You'll have reduced transaction costs for customers and increased competition can all drive sort of better product quality, better experience for the user. And you can also get lower cost for the service provider. All of those eventually lead up into a better experience and improved financial inclusion. And you might say, okay, so that's a nice theoretical diagram, but how does that work out in the real world? Well, when I was at the Gates Foundation, about 8 or 9 years ago at this point, my team engaged with the mobile operators in Tanzania. And at the time, there was no interoperability anywhere in Africa, actually, across mobile money players. And so we spent a couple of years really cajoling them, getting them to the table, taking them out to fancy dinners as a group, trying to get them comfortable with each other, to initiate and to instantiate an interoperability scheme that connected the different mobile money players in Tanzania. And that kicked off in 2014 with 3 of the smaller players. And then eventually in, I think, 2016 or 2017, Vodafone, which was the biggest one, joined. And you can see that the growth after that phase was pretty substantial. And a lot of that growth is definitely cross-border, cross-net transfers, so transfers that wouldn't have been possible without the interoperability. So it really grew the market and behind that growth, it's not just sort of a, sort of cold numbers of increasing volumes. Those volumes come from people seeing that their needs are much better met by a system where they don't have to have 4 accounts on 4 different systems in order to be able to transfer to other people. They can have 1 account and do a lot more with it. So when you achieve open instant payments and interoperability, you really see growth in the whole system, and you see more benefit for the end user. So then how is that playing out at kind of the regional level, right? So we think there's cause for optimism. This is a map of some of the instant payment schemes that have been launched or in the sort of the process of launching across Africa. And you can see that there's quite a bit of progress already starting to happen. In the report, we have kind of some case studies on a few specific ones in here to sort of understand their experience. But we do think that there's a lot of activity, but again, long ways to go still, right? So certainly not true that open instant payments has been solved all across the continent. So a lot of room, I think, for Interledger and the Interledger community to play in this space and to help move things forward. So that's a sort of summary of the main results of the paper. There's a lot more to it, of course, if you want to go download it. It's on the Interledger website in the Our Work research section. I had actually tried to put a QR code up here, but I'm probably too old to do that kind of sophisticated technology where you could download it. So, but then in parallel to that report, we also did a series of interviews with small business owners across Nigeria and South Africa. And the Interledger team really encouraged us to do that partly because they wanted to make sure the voices of people who are, on the ground living with the problems in the payment sector and the people whose sort of economic ambitions and lives are being frustrated by bad payments, that their voices were brought into the conversation, that we weren't just sort of talking to high-level experts and people who run banks and things like that. So, and it was a very valuable exercise, and we're going to release another report based on that research as well, those interviews. It's not quite done yet, so I'm just going to kind of give you some snapshots of some of the results that came out of it, right? And in particular, focusing on, again, just kind of the voices and the quotes from people who actually live this stuff. So one area that we talked about with these small business owners was how challenging cross-border payments are. And Nigeria is a particularly bad example. Nigeria is the biggest country in Africa, of course, and there are pretty strict capital controls in Nigeria, so it's very difficult to get US dollars or euros or any of the sort of global hard currencies. And so for small business owners, they face this constant challenge, especially ones who are maybe importing goods for resale or doing exports, anything that, anyone who's managing anything that's going across the border, they have a really hard time sourcing US dollars. And actually, unless you have a particular kind of account, you can't really even get more than like $20 to $30, $40, $50 at a time. And you can see some of the quotes here, right? I mean, oh, sorry. Jumping the gun here. Okay. I once had to discard a business idea because I could not raise enough dollars to pay for the equipment, and yet had enough naira. So, someone who had a profitable opportunity but completely missed it because they couldn't find and source the dollars to make the transaction happen. I've received a quote to buy supplies from China. Then I go around searching for dollars and compare the rates of the dollars from the banks in the black market. So it's what most of us would consider kind of an everyday thing, buying something, maybe buying something from another part of the world, sets off this mad scramble for a Nigerian business owner to find the currency. Another one is the kind of lack of recourse. And we talked to folks about both kind of international payments providers like PayPal, but also the local brand, Mobile Money. And in both cases, there's both the fear of fraud, but also errors in payments. They do occur. I'm sure you've all experienced it, and it's especially challenging, I think, for small business owners to get recourse, to get reversal of transactions, or to report when they feel that fraud has happened. And part of it is just, like PayPal, the international payment operators, don't necessarily have local numbers people can call. It makes it quite challenging to kind of reach out. And even within the mobile banking sector, which is local, you find, in particular, mobile banking, there's a lot of, you're basically sending money to someone's phone number. And, as often as you've ever made misdialed a number and called the wrong person, that's how often you'll send money to the wrong person. So that was another big area for a lot of the small businesses we talked to. And then a final one was there's a whole rich set of kind of traditional financial practices that people use mostly to get around some of these problems that we surfaced with sort of bank or sort of more formalized payment mechanisms, right? So there's all kinds of sort of traditional networks based on social trust where people will send money through bus drivers or just sort of through local syndicates of people who are sort of the equivalent to the local moneylender that take money, and they have kind of these, like I said, traditional networks that allow them to send money all across the continent. And actually, some of them are quite sophisticated. Maybe you've heard of Hawala, which is more in kind of the South Asian context, but they're all pretty similar. They usually rely on some sort of internally, invisible to the outer participant, the sort of internal accounts that happen between people based in different parts of the country and things like that. So we talk to folks about using those, but of course those practices and alternative financial mechanisms often have a lot of lack of transparency. It's often hard to predict what price you're going to be charged. As you can see in this quote, they kind of feel like you just get charged based on how much money they think you have and how much you're willing to pay. So those aren't necessarily gonna fix the situation. They're a response to a bad situation, but they're not like an optimal situation. So then looking forward, we see deep challenges, but also innovation across Africa and cause for optimism. And we tie success to sort of three key enablers that we laid out here, right? So one is, and these came from conversations with folks across the sector where we said, look, if we break down where we've seen payments initiatives fail in Africa, and many have, and if we break down where the ones who have succeeded, what did they do right? The ones that failed almost always stumbled on one of these three things, one or more, often all three at once. And the ones that succeeded tended to get these right. Even if they stumbled initially on one of these, they eventually fixed it. So technology and operations is one that I think it gets a lot less kind of coverage in discussion and in the literature, because it's kind of boring. It's just like, how do you actually implement this within your system as a bank or as a financial services provider? And but for conversations we had, it's actually quite important. It's often kind of a hidden reason why banks or others don't want to adopt a particular solution or move in kind of a new direction in terms of adopting new innovations and things like that. Is that they put a big burden on the bank or their existing operations and existing technology. It creates a lot of complexity for them to manage. Commercial incentives and business models, that's obviously very important. And I'm gonna dive into that a little bit deeper in a second. But it's very challenging sometimes to align everyone's commercial incentives, and it's kind of nonlinear, which I'll talk about in a second. And then regulation and policy compliance, sort of an obvious one, but was often a place where payment initiatives we talked to had struggled, and some things had been seen to fail based on not being able to achieve regulatory and sort of compliance. To the extent that they needed to. And then at the bottom, as I mentioned this before, but it can't be said enough. So all payment systems must overcome kind of these strong network effects. Or I should say they need to overcome them in the beginning when they're small, and the network effects are working against you, and then they benefit from them if you get big enough, and the network effects are working for you. And that that kind of cuts across all these. You can get all these right, but if you don't drive enough volume and get enough people and get enough users and get enough transactions happening, you won't succeed. So just diving in again to the part about operations and complexity, or sorry, about the incentives, right? These are something, here we sort of broke it out by the different types of institutions who are involved in a typical payments deployment. And then broke it down by the kind of the positives, incentives, and the blockers that that we heard when we had these conversations. And you can see that none of the sort of participants here, typical stakeholders, have the same incentives, right? They're all kind of slightly different. A lot of negative incentives not to participate or not to be the first mover or not to adopt. And so this is a really important thing to keep in mind when trying to launch something new in the payment space, is that it's both very hard to get everyone's incentives aligned, and also their incentives move and shift depending on who else is participating and at what level you get the system to, in the sense that as the system grows, it expands, starts to get more volume, more users, et cetera, people's incentives start to change. And so it's a very complex thing to align around, and something that, you know, I think as the Interledger community goes forward trying to implement and deploy solutions, we'll have to wrestle with. So I didn't want to make it all seem doom and gloom, right? And there are some pretty interesting and pretty innovative examples of new initiatives across the African payments landscape that are, you know, either have already really changed the game, or we think have a lot of potential to do so when they get fully launched. I'm not going to go into these in any real depth because the kind of case studies are in the report, and we only have a certain amount of time. But you know, MFS Africa and AZA are two kind of private sector players. They've created pretty interesting cross-border payment solutions. MFS Africa is, you know, regulated in 30 countries across the continent, and has a very, you know, sort of robust technical platform. Manages a huge amount of payments across Africa. AZA is trying to tackle the currency liquidity issue. And one of the things I haven't covered very much, but is a really big aspect of doing payments in Africa, is the fact that you have 42 currencies across 54 different countries. And you know, a lot of those currencies are not ones that's very easy to find liquidity in. And so if you want to do transfers between Ghana and Ghanaian cedis and Malawi and Kwacha, I mean, you know, good luck, you know, finding somebody who's willing to take the other side of that trade, whichever side you're on. And there just aren't, I won't get into all the sort of deeper economics of why it's very challenging to be a market maker in those smaller currencies, but it is. And so you just, you know, they're one of the few places you can go to kind of source currencies across the continent in a reliable way. BankServe is launching the SADC switch, and PAPS is a new Pan-African payment settlement system being launched by the Africa Exim Bank, I think, if I'm pronouncing it correctly. And that one is one that a lot of people have their eyes on, very exciting potentially, because they are really trying to create a switch that interoperates all the national switches across Africa. And they're trying to be the liquidity backstop to solve that multi-currency payment challenge that I mentioned a second ago. So watch the space, I guess. We'll see what happens. They haven't really yet proved that they will, you know, achieve enough buy-in and achieve scale. As I said, it's kind of a critical factor, but should be pretty interesting to see what they do. So a few lessons from our conversations I thought were hopefully relevant to the Interledger community as, you know, you and the other folks in the community go forth, you know, and build solutions, right? One is to navigate the regulatory space carefully. So in a lot of countries, there's become this kind of like oppositional sort of atmosphere between the fintechs and the crypto companies on one side and the regulators on the other. And I think it's been, you know, often the fault of the fintechs and the crypto players who have, you know, taken this oppositional stance toward the regulator. You know, they're slow, they're incompetent, they're getting in the way. Well, they're slow. I wouldn't necessarily grant that they're all incompetent, but I think that, you know, at the end of the day, they're going to have their say. They are the regulator. And so it doesn't help to create that kind of oppositional atmosphere. And I think for Interledger, I think it's especially important to be aware of that. And because I think Interledger is not a fintech and is not a crypto company, but looks like one a little bit to a policymaker. And some of the implementers in the Interledger community are fintechs or are crypto companies. And so you know, the community will have to sort of navigate that space. And I think you want to stay on the right side of, you know, having a good relationship with the regulators whenever possible, right? I think, as I mentioned before, studying the commercial incentives for banks and telcos and other financial intermediaries, and avoid trying to fight against them. Sort of learn what makes them tick, what drives their revenue, their products, and you know, try to ride the horse in the direction it's going, to use a metaphor my dad used to use. Related to that, understanding, as I said before, sort of the extent to which implementing the Interledger Protocol would really cause them to have to make technology investments, change their operations, add new complexity for them, and just push against their learned muscle memory, doing things that they're not used to doing, right? You know, we think that that's going to be a big part of it is learning how to navigate that for ILP. And then kind of cross-cutting these, and I think sort of maybe a potential path forward is finding ways to get real-world demonstration cases off the ground. Because real-world demonstration cases, they can help regulators understand what they're dealing with. They can help make the point to financial intermediaries and other market participants that there's a commercial business case. They can help show that the technological and operational requirements maybe aren't as bad as people might initially think, et cetera. So those real-world demonstration cases will be critical, we think. And this, just a couple of potential short-term things that either Interledger as a team or the folks in the community could take on that we think would, not necessarily solve all this, but might be sort of, helpful concrete outputs, right? So one would be sort of detailed playbooks across some of these different areas. So around regulation and compliance, to the extent that some folks out there maybe in the grantee community who are already navigating some of these things could write some of these things up and help share them so that others can benefit from that knowledge. Again, writing up commercially relevant use cases and kind of showing the business case for implementing ILP and sort of open instant payments generally. And reference manuals to deploy the technology stack. And when I say that, I don't mean how to deploy Rafiki or ILP itself, because I think actually you guys have done quite a good job in the technical documentation, but really understanding what it implies for a bank, let's say, or MFI to adopt and use it for the rest of its operations and systems that it has. That's the kind of thing that I think would be helpful. So, and then of course, not to repeat myself too many times, but trying to get real-world pilots stood up that really sort of show the value in real life. I mean, that's obviously going to kind of move things forward. So that was our research. Hopefully found it useful. Is there any questions from the audience before we wrap up?
The audience.
There is no questions from the audience. Thank you for having me.
Sorry for that. Thank you so much, Jake. Sorry for depriving everybody of questions. You can find Jake at lunch after this. I asked everybody if they knew who Stefan was. I'm not going to ask if everybody knows who Adrian is. Adrian is probably just as famous as Stefan. Hop on. Don't be shy. And I was trying to come up with a way to introduce Adrian. And I figured out if Stefan was like the Pope, right? Is Stefan in the room? Is he alive? Smile and wave, right? If Stefan's like the Pope, then Adrian is definitely one of the cardinals.
Okay, I'll take it. So last talk before lunch, I'll try and keep it reasonably quick, but I promise if you hang around, I'll tell you what to do with this. You all have one of these, and I know you haven't all used it yet, so stick around. First time I'm doing a talk without much on the slides, so it's all me. So hopefully get through everything relatively simply. And I'll try and leave some time for some questions. So don't have a lot I want to get through, want to leave some space. I have some questions I hope you ask, and I'll ask them if you don't ask them. So we'll leave some time for that at the end. There's that first Stefan. So I'm the CEO and one of the co-founders of a company called Fynbos. Matt, our CTO, is here with me, and the rest of the team are based in Cape Town. We have somebody in Istanbul, actually a couple of people in Istanbul, and in Dublin. We're building a digital wallet which will connect to the Interledger ecosystem. And today I'm going to be talking a little bit about one of the features of that wallet. And I guess the first thing you're asking is, what is a digital wallet? Because when I tell people we're building a digital wallet, a lot of people, the first thing they ask is, well, what exactly do you mean by digital wallet? Is it Apple Pay? Is it more like Venmo? Is it more like MetaMask? Is it Coinbase, GateHub, Uphold? And I think the definition of a wallet is so broad that, in fact, PayPal has two wallets, right? They have Venmo and PayPal. So for us, a digital wallet is an agent of the person who holds the wallet. It's a bit like your browser is your user agent on the web. The way we see wallets going forward and into the future is it's an agent of yours or your trustee that is a bit like the digital version of that thing in your pocket with your cards and your cash, except it's semi-autonomous as well. It can do things to make your life better, to participate in your online life, interact with services you interact with, and act on your behalf. But it's completely under your control. It's your agent. You choose who you want to be your agent. You maybe build it and deploy it yourself, or you outsource it to someone like us. We run it for you. You configure it. But the model is that it's a semi-autonomous agent of yours that is going to become a critical part of your life online going forward. And so in that way, it's very different to a bank account. A bank account is something you put money in, you have a card to access it, but really you don't get to control who accesses that account on your behalf, and you don't get, your bank account doesn't really get to do anything intelligent for you. So it's sort of an evolution of that. Something that I think we're all familiar with is as a sort of a center of our digital lives is an inbox, right? So we all have an email inbox. That's sort of the center of our online communication lives. And we have other communication mediums, Slack, WhatsApp, various, but they're generally little closed systems. So if I'm on Slack and I want to speak to you on Slack, you have to also have Slack, right? Or Signal or WhatsApp or whatever the case may be. But email, its unique property that makes it so valuable and so central to our online communication is its interoperability. So the word interoperability has obviously come up a lot this weekend, but that's the key piece. And the thing that I want to talk to you about today is, hope I'm pushing the right button, the big green one, is the email address for your wallet, payment pointers. I'm going to go through 5 or 6 slides and talk to you a little bit about how payment pointers design came about, why we think they're so exciting, what you can do with them, and why they're so powerful. So everybody knows what UX is, right? No? User experience. So that was a pretty terrible user experience, throwing a big acronym in front of you. And that's a classic example of payment engineers not really thinking about user experience. We're very good at that as engineers. We're very good at building things that are technically elegant, but incredibly difficult to understand and use for everyday people. And so that's become kind of an obsession for us at Feinboss, and very fortunate to have a team who share this obsession with me, where very often, almost everything, or not everything, but a lot of what we share internally are, links to a website or videos or something. Look at this awesome user experience. Look how these guys have implemented this thing, or look at this terrible user experience. They could have done so much better here if they just did X, Y, and Z. And I think user experience has been a kind of an interest of mine for probably a decade. And especially finding things that work really well in one context and seeing if you can reapply it in another. So you see a user experience you really like, and then you think, well, couldn't we do that, in this other context? And a particular example that I was reminded of was probably about a decade ago. I got really interested or really frustrated initially. The problem I was trying to solve was sharing payment details. So I don't know if this is the same for everyone the world over. Certainly in South Africa, and I think in the US it's probably similar. If I want to pay someone, they need to give me their bank details. And I send them, in South Africa we call it an EFT, here an ACH or a wire. It's a pretty crappy process, to be honest, because first I've got to go dig up my bank account details. I don't know my bank account details off by heart. I don't know if there are any savants in the audience who do. But you've got to go find your bank account details. That used to be a real pain in the ass. It's gotten better, and I think because banks have realized this is a process we go through all the time and the user experience sucks. So these days my bank app, I can dig through a few menu options and eventually find it. And there's even a share option now. I can share it with people. But then I've got to give that to somebody. I've either emailed it to them or I've written it down for them. They've got to put it into their online banking system or their bank app or whatever the case may be, or fill out a deposit slip if we're talking 10 years ago. And that's how they actually send me a payment, right? And so I got to thinking, there's much more elegant user experiences for sharing details than that. And the one that I really liked was contact cards. So I don't know if you remember way back when, if you share a contact with someone, you go onto your phone and you find the contact and you say, I want to share it. And it produces this little thing, which is a VCF. It's a text file format, virtual card format, I think it stands for. And those are still used today. I tried it this morning. I exported a contact from my iPhone and I shared it to via email, and it was a VCF attachment. So that really simple process, I was like, can't we just put the bank details in the VCF file? And so I got completely obsessed with that. I did what all good engineers do when they have a clever idea. I bought a domain name, openpayee.org. I set up a blog, so I did go one step further than most of my other hobby projects. I actually created a website under the domain name. And I started putting some crazy ideas there about using V-cards, using NFC to share payment details, and so on. So it's been when I say this has been an obsession of mine, I'm not lying. This is like a decade obsession of how do we make payments user experience better. And it didn't really go much further than that. I joined Ripple soon after that and got involved in Interledger. And I guess part of the lesson in that whole process was focus. The blog became a whole spattering of ideas. But the great outcome of that was it got me involved in the standards process and understanding how do things become a standard, how do people adopt ways of doing stuff. And that led me to meeting Stefan and Evan and the beginning of the Interledger journey. So inspired by that, a few years later, when we were thinking about the user experience of Interledger, and then looking at existing systems which Arunjay alluded to earlier, like pay by proxy, we wanted to come up with something similar for Interledger. The challenge I have with pay by proxy systems where I use your email address or your mobile number is I'm overloading an existing identifier. So that means somebody has to maintain a registry specifically for mapping that identifier to my account. And then there has to be governance over that registry to make sure that Matt doesn't come along and point my email address at his bank account so that when you think you're sending me money, it goes to Matt. So not ideal, and also because they're overloaded, it makes them not obvious what they're used for. So if I give you my email address, you don't know that you can actually send a payment to it. You don't know if, for example, my email address actually is attached to a bank account on some registry at all. So all of those kind of design rationales led us to payment pointers and the use of URLs as the medium for a payment pointer, and leveraging what is kind of the most ubiquitous global registry of all, the web. And so you end up with a payment pointer, I'm pushing the wrong button again, that looks a bit like that. So that's my payment pointer at Feinbos, and it really is a URL. What we did is we took HTTPS, dropped it from the front, replaced it with the universal symbol for money, the $, and you've got feinbos.me/Adrian. And it's got all the right ingredients for not only an identifier, but a really powerful handle into my digital wallet. And I'll go into a little bit more detail about that in a second. The other trend that has been kind of an obsession of mine for the last decade or so has been APIs, and specifically things like open banking and API access to accounts. I was chatting to Matt yesterday, actually, about a presentation I did in 2014, where I took a mock-up from the Facebook developer documentation. They have a page where they were showing how you could log into an app using your Facebook account. And I replaced Facebook with Standard Bank, a South African bank, and I replaced the app with a personal financial management app we have in South Africa called 227. And I presented this to a whole lot of banks 8 years later, and none of them really do logging in with your bank account. So clearly the idea didn't resonate. But it's again, that's been a thing that I've been quite passionate about for a long time, and recognizing the value that you can get out of open access to resources of your own. So if I have a bank account, I want to access it through APIs. Obviously, banks have resisted that whole idea, and open banking is kind of a trend that's taken a long time to really get traction and move. But I think if you look in Europe, where it was mandated, some of the innovation that's getting built on top of that is really encouraging. I'm going to take a quick sidebar. I had a debate on Twitter with two people I really respect and admire, Dave Birch and Simon from Sardine, about banks' role in payments. And it's interesting to think a little bit about why are banks the custodians of payments, right? Because banks' business model is not payments. Banks exist to take deposits and to lend money and to make money on the difference between the interest they charge and the interest that you pay, right? So how did they end up being the kind of custodians of the payment system as well? And it was almost like an accident, in my opinion, because they had the money sitting in their accounts, so it became easier for me to pay somebody by just telling the bank to move the money from my account to their account rather than going and taking it out and giving it to the person and then putting it back in the bank. So banks became the hub in the payment system, and the banks started working together when we were doing cross-bank payments and so on and so forth, and that evolved. But then politics came along and said, well, actually, payments are quite an important part of how we do things like preventing money laundering and preventing terrorism and imposing sanctions. And so banks got given all this extra work they had to do because they had become the de facto custodians of payments, and all these extra regulations they had to adhere to. And as a result, we have this regulatory moat that banks all sit behind. So it's kind of it's an unfortunate situation because the banks are having to do a lot of work to be banks. It's really difficult to be a bank, but as a result, it's really difficult for somebody to compete with a bank. And so they build all these products and they give us all of these services that are meh, they're not amazing, but it's really hard to offer them if you're not a bank because becoming a bank is so hard. They sit behind that regulatory moat. So APIs and open banking are quite threatening to the banks. So all of a sudden, people can come along and build competitive products to what the banks have built. In my opinion, there's an opportunity for the banks to realize like they could stick to their knitting, embrace that, let people build amazing products. But sidebar over. The result of the banks pushing back on open APIs is you've ended up with fintechs like Plaid, MX, Yodlee, and so on, who just went and did screen scraping. So instead of accessing your bank account through an API, they ask you to give them, random third-party fintech, your online banking password and username. They'll go log in on your behalf, store that in a database, and this is not being stored as a hash, right? They have to store it so that they can decrypt it later and reuse it the next time they want to access your account, okay? And all of that has actually resulted in some of the best innovation in the last 5 to 10 years in fintech. Those guys are kind of the stimulus or the catalyst for so much innovation, and yet they had to hack their way into our accounts because the banks wouldn't give it to them in the form of an API. Another kind of interesting thought experiment, if you think about API access to bank accounts, is the original API key, is the PAN on your card, right? If somebody wants to access your bank account through an API, the API is called the card networks, and the API key is your card number that you give them. And MasterCard and Visa have cottoned onto this. They've introduced new products in the last few years which allow you to not only pull money from your account, but push into it as well. So if you want to build some pretty compelling fintech products today using just a debit card, you can. You can forget about the bank. There's a bank account behind it, but you don't even need that anymore. So what you're stuck with is API access to accounts is an all or nothing game. You give somebody your login and password to your online banking, or you give them your card details, and basically they have complete access to your account. They can pull all your money out, push all your money in, they can do whatever they like. And what we needed actually is APIs with a proper authorization framework, a way to say, I'll give you access, but only to do these things. And that was the main motivation behind PSD2 in Europe and why the European banks are all starting to roll out APIs. And that was the kind of the early inspiration for the very first version of open payments. So the background on open payments was we had this idea of payment pointers. We had a very primitive protocol for using them to resolve to an Interledger address. But we were sitting looking at what was happening in open banking, and we were looking at some of the developments in OAuth 2, which is the authorization framework they're using, and we thought, we can build something pretty cool here that's a lot simpler than open banking and a lot more targeted at wallets and something appropriate to the Interledger ecosystem. And that was the beginning of the first implementation of that was Rafiki Money. So if you go to rafiki.money today, that site's still up and running. And I think there's some plans afoot from the ILF to bring that up to speed and for that to run actually the latest version of the Rafiki stack ultimately. In the next 6 months. So what you've ended up with a payment pointer is not only do you have an identifier of your account, kind of like your email address, but it's also the service endpoint for APIs into your account. It's like a double whammy. And the next evolution of that whole process was when Matt and I, after spending a lot of time tracking the OAuth work within IETF, was the discovery of originally a protocol called OAuth XYZ, but what became called GNAP. And GNAP is awesome. What the shortened background for GNAP is the people who originally developed OAuth 2 in leveraging OAuth 2 for banking and payments realized its shortcomings. There's a whole bunch of extensions they had to add to make it more secure, to facilitate things like granularity in payments. Anyone who's worked with OAuth 2 knows, like, trying to figure out what a scope is or how to use a scope is an absolute nightmare. It's a real blunt instrument. So what GNAP allows you to do is provide much more fine-grained control over your authorization on your APIs. So the roles in GNAP are pretty simple, and I apologize if this gets a bit too technical, but you've got a client, you've got the entity that wants to access the APIs, you've got the APIs themselves, the resources, resource server hosting those APIs, you've got a resource owner, the person whose resources are being accessed. So let's think of that as bank account holder, and third party. But then the most important person in all of that is the agent of the resource owner, of the bank account owner, and that's the GNAP authorization server. So you want to access those APIs, you first speak to the auth server, and you say, this is what I want to do. This is the scope of what I want to do. This is who I am, okay? And the authorization server looks at you and says, well, as an agent of the resource owner, of the account holder, I think what you're asking to do requires them to approve it. And so they kick off an interaction, they get the owner approval, and so on. It's a really simple and yet really powerful protocol for negotiating authorization. And that's, the name stands for Grant Negotiation and Authorization Protocol. And I think one of its most powerful features is the way it does interactions. So when you ask for access to a resource, so I've given you my payment pointer, you've hit that payment pointer and you've said, I want to send a payment out of Adrian's account. What you do in that request is you say, and by the way, I have Adrian here on my website right now. As the client asking for that, I can actually redirect Adrian to a page, or Adrian's on my app, so I can ask him for a one-time PIN. You can specify all the ways that you can interact with the client, with the resource owner at that time, the account holder. And the auth server can come back and say, well, based on what you want to do, this is how I want you to interact with them. And right now, the protocol has a few very basic interactions, but there's some really, really exciting ways that this can be leveraged, especially in payments. The other interesting thing about GNAP is there's nothing stopping a single authorization server issuing access tokens to multiple resource servers. So I could have a wallet that issues access tokens to my other crypto wallet, to my bank account, to a server that I self-host, which has some identity credentials on it that I'm only prepared to share with certain people. So it's a really powerful model where the AS, the authorization server, can sit and act on behalf of the wallet holder or the payment pointer owner and issue tokens for access to all of these resources. I think the one example of the interaction mode, which I think is worth mentioning, is there's some work at the W3C at the moment called Secure Payments Confirmation, where within the context of making a payment in your browser, you can actually use WebAuthn. So if anyone's ever been on a page online where they've been prompted to use Face ID or scan a fingerprint or use a hardware key, that's a technology called WebAuthn. Normally the way that works is it's just logging you in. So it's signing a random challenge. The server sends a random challenge, your hardware key signs it and sends it back, and that's proof that you are who you are. That's your hardware. They've taken that one step further and they've said, we're going to sign a whole transaction. We're going to put the details of the transaction in there, and that's what you're going to see, and you're going to scan your fingerprint or do a Face ID, and you're actually going to send a signed copy of that transaction back. Now, if you submit that into your GNAP auth server, no further interaction required. You don't have to do a redirect. So you can imagine the online payment checkout flow goes from, redirect 3 or 4 clicks. Forget 1 click, this is 0 click. 0 click checkout. It's faster than fast. Inside joke. So I think the potential with GNAP is really powerful, and I really love the model we've ended up with payment pointers, pointing you in to this ecosystem and being kind of the entry point into this protocol. There's a whole future ahead of things we still have to explore what we can do with GNAP. GNAP supports user info sharing as well. We haven't really even scratched the surface of that. So part of your request that you make to the server for access to a resource can also be request for information. So there's a whole bunch we can explore there in terms of sharing compliance data, sharing other data. If you go and have a look at our YouTube channel, you'll see we've got a concept video of a e-commerce flow. If you look very carefully on the last page of that checkout flow, you'll see on the consent screen that the user is not only consenting to pay, I think it's $24 or whatever it is, they're also consenting to share their email address and their shipping address. So they only had to type in their payment pointer. That's the only data they entered. But the shop got the payment authorized, their email address, and their shipping address, all as part of that interaction. So these are like really exciting flows and interactions that I think we still want to explore a little bit further with GNAP. I'm running out of time, and I said I was going to be short. Last slide. The other really cool thing about payment pointers, and I think one of the things I like the most about them, is that they're part of the web. I love the web. Final sidebar. App ecosystems suck. Sorry. Mobile app ecosystems are closed gardens, closed ecosystems where the mobile system operators have leveraged the fact that they don't allow other people to offer stores on their platform to kind of corner the market. So when you build an app for the Play Store or for the App Store on iOS, you get all these fantastic benefits, like the App Store deals with payments for you, and it deals with identifying the user for you, but you pay a nice fat tax for that. It's been in the news, obviously, the last year or so, and a lot of people pushing back on that. If everybody just built for the web, they wouldn't have to deal with that. If we all just focused on making the web platform better, we wouldn't have to deal with all of that crap. So, sidebar over. Last few points on payment pointers in the web and why they're so fantastic. A payment pointer is a URL. The great thing about the web and HTTP and URLs is you can do more than one thing with one URL. So if I gave you my payment pointer, you can get that payment pointer, but you can also post to it. So let's say you want to fetch that payment pointer, you can get back information about the payment pointer. Whatever I choose to share with you, it could be a public name, it could be some information about who I am, it could be a pointer to somewhere else where you can go and find that. Whatever I want, I can share with you at my payment pointer. But that payment pointer is also an entry point to an API interaction. So instead of getting, you can post. You can post your authorization request to that same URL. I didn't have to give you a whole bunch of information. This is where you go to get information about me. This is where you go to access my APIs. It's all the same URL. So I think that's a pretty cool aspect of HTTP that we can leverage with payment pointers. The second, which kind of feels a little bit like a superpower and underappreciated one of HTTP, is a thing called content type negotiation. So we already use this in SPSP, and I'm getting deep in the weeds of the ILP technical stuff. But something that you can do with HTTP is with the same URL, you can ask for different forms of content. So I can go to a payment pointer in my browser, and I can see a page, because my browser is telling the server, this is a human. Give them something that a human can interact with. So I get an HTML page that says, this is Adrian's wallet. Do you want to send him some money? What do you want to do? But if it's a machine, and they send the request, and they say, give me back the response in machine-readable JSON, I get back a completely different response. I get back the response to an authorization request. So that allows us to do some really cool stuff. And I think a good example, because I'm running out of time, is this mug that we gave everybody in their bags. If you didn't get one, I think there's still a few left. So every single mug that we made has a unique QR code on it. That QR code is a payment pointer. But it's not a payment pointer yet. Because it's a URL, there's so many flexible and cool things we can do with it. If you visit this URL on your mug today, you'll end up on our waitlist page. But when you sign up on the waitlist, we'll have linked this mug to your account. So as soon as you activate an account, you've now got a payment pointer that points to your Fynbos wallet that's also on this mug. So next time you want somebody to pay you, you just get them to scan your mug, and that's a pointer to your wallet so you can get paid. And that's a pretty cool use case that you just can't do with, I don't know, a bank account number. If you don't have a mug, that's where the waitlist URL is. If there are any other questions, I think I've managed to save like a minute or two, but it is lunch, so I'll leave it to MC.
You're the only thing standing between people and food. How do you think this is going to go?
The day after the party.
Yeah, we've got hangover food upstairs, so yeah. Brianna, do you want to say a few words?
Yes, I thought that there was some questions, but, and Adrian, you talked about the idiot savant who knows their bank account information.
Oh,
that
wow.
is me. Fun fact, I remember random strings of numbers, including my middle school best friend's phone number. So I just wanted to come on really quickly and thank everybody for coming. A lot of people have to head out after this, and so while we're all still together, I just want to tell you how full my heart is from this weekend. We hope that you have found it enriching and that you have made some really great connections. We look forward to seeing you participating in the community going forward, and we hope to see you next year at the summit. Thank you so much.
I think that was a solid commitment that we're going to do this again next year.
Yeah, I want to say, well, I mean, while I've got the mic.
Can you cut this mic?
I mean, I think on behalf of everyone, this has been amazing. So thanks very much. I meant to say it at the beginning of my talk and I completely forgot, but I was at the first ILP gathering. I wouldn't have called it a summit. It was an Airbnb next to a lake somewhere, and there was like 5 of us from Ripple trying to figure out what to do with this thing. And it's just gone like strength to strength, but this is next level. Thanks. I think this has been an amazing event. So Brianna and team, awesome job.
Right, lunch is upstairs. If you have questions for Adrian, you'll find him stuffing his face.
Okay, cool.
Upstairs. And we'll be back here at 2 p.m. The people who aren't heading for the airport will be back here at 2 p.m.
Cool, cool.
In our modern world, technology moves at light speed. But why has our financial infrastructure failed to keep up with the pace of change? The Interledger Protocol was created to make sending money across the internet easy. We envisioned a payments network that acts as a bridge between anyone in the entire world. Today, when we send an email, we take it for granted that once we hit send, the email will appear in the recipient's inbox almost instantly. It doesn't matter if you're sending from one email provider to another. It works seamlessly in a matter of seconds, not days. The Interledger Protocol is designed so you can send money as easily as you can send an email. It's a network that reflects our interconnected world, accessible to all, regardless of identity, geography, or income. One that's more inclusive, without minimum transaction amounts or costly transfer fees. The closed networks of the past keep people disconnected. Our mission is to bring our financial infrastructure into the 21st century and give everyone equal access to a global financial network. Email your digital bank or digital wallet provider and ask them to consider joining us to help make the world a more interconnected place. Visit interledger.org/today to learn more.
Hello. Check, check. 1, 2. All right, 1 second. We're gonna bring you up. See if we can hear you. Hello. You can give us an audio check real quick.
Trying again. This is an audio test.
Awesome.
Can you hear me?
Yes, we got you. And it's just you presenting?
I don't think so. Oh my God.
Maybe Steph.
Shall I try that audio test again? This is Stephanie Perrin speaking. Can you hear me?
Yes, we can hear you. You're
Great.
good to go.
Thank
We'll
you.
bring you to screen to join the panel shortly.
No, because I think I was supposed to. Nobody's come down. I'm gonna guess so. I know. Michael asked me to dinner. I'm asking, but one of y'all. A bunch of people asked me to dinner. Yeah.
By the way, just.
I think you're. I thought there was a coupon in your email.
She will actually. I'm just. Yeah, I presume so. Just curious if we will get like a countdown as to. Oh.
Well, they're gonna make everyone come in first.
There's a timer there, so we can see how long. So we know when it's the next session to begin.
Oh, the 1840?
It's not really visible here, but so I probably won't see it. I'll just have to use my watch. Okay. But there is sort of a timer to count down.
Wait, end 240.
Can we?
Yeah. Behind us, at least. I don't know if she
Oh,
can hear us.
I think
but I
she
guess
can.
she's muted.
I guess I should unmute.
Oh, we haven't started, Stephanie, just yet. We're just doing sort of a test to make sure that everything's working.
Everything works, yeah.
But really pleased to see you here.
Yeah, great seeing you.
Should we wait a few more moments for the room to...
I'm happy to wait. Also happy to go, whatever you want.
We might wait 2 more minutes because most people are still at lunch and we have 3 people in the audience at the moment. But I think people are going to come in shortly.
We can just cut our session. I could, yeah, we'll just be concise.
I'm going to give it until 5 past and then
sure.
Start. I think we'll get started. Are we good to get started now?
If you want to wait a few minutes and see if people come on down for lunch.
Okay, sure. Should we stop still at 40 past or do we extend?
I don't feel like we had some fair to stop short.
Okay.
So we'll keep 40 minutes.
Okay, sure.
If you happen to stop earlier, that's totally up to you,
perfect.
but I'll give you the
Oh, perfect. No. I respect whatever you prefer.
well, just timekeeping before and lunch was actually way better today than yesterday. Everybody was still cold and there were hot things in there. It was kind of hard to take lunch out. Get a room. No pressure. We've got like 70 people on the line.
Have we? Wow.
Yeah. The online has actually been doing better than the
Okay, will you give me like an indication when we're live? Yeah. Perfect. Hi everyone, thank you so much for joining us today. My name is Ayden Férdeline. I am a public interest technologist, and I was also a grantee in the first cohort of Grant for the Web. Really excited to be here today among friends, because what you're working on matters. You are building pathways to financial inclusion. You are bringing people together. And speaking of that, I'm happy to be joined on this panel also amongst friends. To my left, we have Ellen Magnolalis, who is Senior Counsel at the Wikimedia Foundation and also Secretary of the Internet Law and Policy Foundry, where I also just disclose I am also a fellow. And we have Xiaoji Song, who is an artist and researcher based in Berlin. And joining us remotely, we have Stephanie Perrin, who led the drafting initiative that resulted in Canada's current privacy legislation. And while she is far too modest to mention this, she was also the recipient of the Electronic Frontier Foundation's Pioneer Award back in 2001. So thank you, Stephanie, for joining us. Thank you, Ellen, and thank you, Xiaoji. Really pleased to have all of you on stage today to be discussing what may be an uncontroversial statement to make at the moment, which is that the internet, and particularly the advertiser-supported internet that we are all using on a daily basis, has some flaws. It's broken. And so the questions that we're debating is, how do we solve this? And also, are web monetization protocols part of the solution to some of the challenges that the internet faces? And with that, I'm going to put the first question to you, Stephanie. And it's a broad one, and that is, what is wrong with our advertiser-supported internet at the moment? And also, why haven't we been able to solve these problems already through regulation?
I apologize if you're speaking to me, Ayden. I can't hear because of the back chatter. I hear other voices, but not yours. So that's been a bit of a problem.
Okay.
So if you could repeat the question, that seems to be a bit better now.
Perfect. Hopefully you can hear me now. If not, we'll come back in a moment. The question was, from a privacy perspective, what is wrong with our current advertiser-supported internet? And why have we not been able to solve some of these challenges through regulation?
Well, I think one of the key things is we bet on the wrong horse back in about 1998. 1998 was the year that the European Union was passing its directive and making it necessary for the nation state.
I think we just lost you, Stephanie, if you're still able to hear us.
Can you hear me?
Yes, we can.
Okay, I'm still hearing a lot of background noise, but I'm talking over it. So 98, European Union was passing their data protection directive, states within the union had to line and pass legislation. Canada was, we were drafting ours in Canada, but the United States did not pass data protection legislation. And that meant that there was, so we've had a 20-year struggle arguing about whether or not they should. Now, the core issues in terms of privacy problems with the advertiser-supported internet is we've got, as a result, deep profiling of every user in competitive markets for those profiles. We've got intrusion into and surveillance of our various devices in ways that are competitive between the companies, not user-friendly or beneficial, and it's up to civil society to come up with ways to educate consumers to protect themselves, because that's not coming from the core platform operators. And of course, there's always the risk through insecure payment systems that are integrated into the provision of services. So those are three things. Obviously, we could talk all day about what's wrong with the current model, but those are the three core ones. And we must understand that back in '98, we could have started to work on token systems, secure payments, but we didn't, because the entire market started to focus on knowing the customer and profiling and manipulating the customer. And that is what we're trying to correct now. So I hope that answers the question.
It does. Thank you, Stephanie. And just to follow up, so if we take an example of an emerging technology, and I'm thinking here perhaps the browser extension that Coil has developed, that in many ways offers total privacy by not tracking audiences at all, is this one of those corrections that you think is necessary? But I'm also wondering, if we are not tracking audiences, if we're not even at the aggregate level able to allow websites to customize and to personalize content through their recommender systems like they do today, what is that going to mean? Are consumers going to voluntarily adopt these technologies, or is there going to be a market failure and consumers will continue to use these problematic alternatives that are already out there?
Well, I think the key thing to remember is that we have things in tension here. I want to protect my privacy. I don't want to become the subject of profiles that are being traded amongst people I don't trust, companies I don't trust. But that doesn't mean that I want to get away from the historical niche taste groups. That's not really an expression. I hope you understand what I mean. In other words, if I like beat poetry, I will congregate with folks who like it. I'll go to places where I can hear it live. I will buy things. I will trust journals that cater to that taste. That's an older example, beat poetry, but I'm going back to the old MeatSpace days when there were separate communities. The way we're understanding communities, and that's air quotes required here, today, those communities are being set and established and favored or disfavored by the platforms. So we want to have payments that are anonymous to the platforms, but identifiable to user groups. In other words, I still want to be able to know what people whose work I read and whose work I trust, what they're following, what they're doing. So there is this tension, and therefore I think that whatever browser extension we use, it has to be able to do both these jobs. It has to stimulate free thinking, experimentation, the ability to go and read something that might have you typecast as, oh, who knows, a Nazi. If I want to read Mein Kampf today, it's not because I want to turn into a Nazi, it's because I want to understand the rise in authoritarian leaders from the perspective of how it happened in the 30s. So that's the kind of freedom of thinking and dissent and content availability that we want to strive for. So you have to balance the two, and I'm sure it can be done. It's just a question of where in the layers identification takes place.
Xiaoji, I saw you nodding your head at several times as Stephanie spoke there. I'm curious if you have any follow-ups there, particularly on the trade-offs that we can accept when balancing privacy and functionality?
First, thank you very much for having me. Yes, indeed, I was nodding my head a lot because I think, let's say, if we really talk about trade-offs, I always have a bit questions on, I think not only on the one side, I agree with what Stephanie was saying, that I definitely think that a different form of internet would not only, let's say, I would even go further to argue that the diversity and plurality of the content would even be encouraged, in the sense that I don't just think that there's a chance for the niche taste and for different kind of macro tastes to be accommodated, but also I would further argue that it might even be encouraged because of our current internet is with the echo chamber. I'm talking echo chamber, disinformation, misinformation, revenue-driven content recommendation. I think when it comes to trade-off, however, what I would be questioning a little bit, and that's something that, even though I'm nodding, I'm still feeling uncertain about, is when we are really talking about our own preferences and our own, let's say, the preferences of a community and what the community really wants, what kind of taste and what kind of content the communities really need, how much of those is really of our own choice after this years of platform heavily influencing what we consume and heavily influencing what we read and what kind of people we interact with. So for me, there's a little bit doubt there on the trade-off to say that I feel like this is in some way of a dynamic process. Yeah, so.
So the language that platforms, and I'm thinking social media platforms like Facebook, for example, often use to describe their recommender systems is that they're personalizing content to interest the individual, when of course that is not necessarily true. They are personalizing the content based upon what is going to attract engagement and therefore generate revenue for the platform. The incentives are a little bit different. It's not necessarily based upon what you want to see, but based upon what the platform thinks can show you that will allow your eyeballs to remain engaged on that page. And so one of the interesting things that I find, at least, about web monetization technologies is that we can change that incentive structure to an extent. So rather than there being that dependency on a platform, we can create potentially new middlemen or new intermediaries, or we can create an environment where creators with more niche audiences are still able to attract an audience for their work, to be remunerated for what they're producing, and that they are able to be directly funded by those who enjoy seeing what they are producing. At the same time, the payouts that some of these platforms, Koyo, for example, streams is quite low. I believe it's 36 cents per 1 hour of content. Curious what you think, Xiaoji, about whether, is that enough for a creator to live on? What kind of audience would you need to be getting through web monetization in order for this to be a viable alternative to platforms, centralized platforms like YouTube that are paying more, to be honest? And also whether it matters. Does it matter if someone can't make a living generating important content? Is there a more important principle that they are just receiving a contribution at all?
Thank you for the question. So before I answer the question, to just very firstly, quickly respond to some of your comments that you made here. What I find really interesting, let's say, in the last few years, we're all familiar with platforms like Spotify. They like to publish by the end of the year what kind of music you like. So what have you listened to? This kind of data, when people are sharing it, I always find it really interesting that some people, there are a lot of things that people claim to like, and there are a lot of things people are actually consuming. Oftentimes, and a lot of music streaming platforms are doing that, but I'm always interested in really seeing sort of like a data report on what kind of content I'm actually consuming on social media and my friends. Because we always say that we care about certain things and we like certain things, but there are a lot of hidden patterns in our actual consumption that is a dissonance in what we say we care about, what represent our identity, and what we are actually driven into, or what is the things that we actually like, but we just don't really want to admit it. So then to go back to that question, I think both of what I was talking about, they're about the preferences that we claim to like and the preferences we actually have, and also in which way creators should be funded, or in which way creators should be monetized. These are the questions that I think we need to go back to. How do we define the quality of content? What kind of content we need in our digital future? And to be honest, when I first think about the question, my answer is no, that I definitely do not think with the micropayment creators can live with that, especially with niche taste, right? But I think the more important question is that we shouldn't have to, because if you are creating a niche content, this content, the quality of those content, they are not determined by the traffic you're getting. They're not determined by the size of audience. There are more ways and determinants of the quality of the content and the importance of the content, especially no matter when we're talking about art, politics, science. I'm often wanting to ask, in this kind of cases, where is the public funding on those things? Monetization models are very important, and they should serve as a basis, and they are definitely an important alternative. But as much as this is as an important alternative, we should not expect it to solve every problem we have in a society as a whole, as a global community, in our current global injustice and epidemic violence. All these problems need to be addressed. Outside of this, and there's only certain responsibilities that the technology can bear. And yeah, so I would say that would be my question that I would have still. After all this really insightful talks, that this is a question that I still really feel like we need to be careful with.
I think the problem, I'm sorry, I'm injecting my opinion here. I think the problem with public funding, though, is that it can be captured, and that certain actors, particularly when it comes to producing content that appeals to very niche audiences, particularly on political topics, is not necessarily going to be fundable through public means. Even in countries that have strong traditions of funding public service media, we still have these issues. Look at Hungary, for example. And so one of the things that I find very interesting about web monetization technologies is this idea that you are able, at the protocol level, to be able to sort of disintermediate and to be able to provide alternative ways of funding these voices. That being said, I'm going to bring Ellen into the conversation now. Thanks for waiting. And that's to do with the funding model that Wikimedia has, which is that it's a donation model. It also has a very novel governance structure that is quite, in my opinion, bottom-up. And so I'm curious about why Wikimedia has adopted this model, and why does it not simply rely on advertisements to fund its work like so much of the rest of the internet does?
Yeah, thanks for the question. So I'm sure you all know about Wikipedia, one of the most popular websites in the world. Did you know that the average donation for us is US $15? Do you know that 80% of our donors, of our donation total, is from small donors like that? Did you know that only 2% of readers donate? So with that, those statistics in mind, I will also say Wikipedia still works today. Our funding model does work today. And whether or not to advertise has been discussed in the past. We do not currently advertise, and the community discussed that at large. There are some pros and cons. Some pros, like it would be an easy way to make money. We're very popular. Cons, and I think it's really, like they said in the discussion, which is publicly available, it would cheapen the encyclopedia. There would be a conflict of interest. How can you try to present encyclopedic information and also try to sell things? It would detract from what we're trying to do, which is provide free knowledge. And I think, and you didn't ask this, but another method of funding that has been discussed is paid editing, which might be more akin to like paying the contributors like Xiaoji was talking about. And we also do not pay the editors. And people are like, but why? They do the work. And I think we don't pay the editors, firstly, because they also decided not to be paid. These are community decisions. Wikimedia Foundation just hosts, supports the projects, and the community, the Wikimedia community are the ones that make the decisions. But there's actually similar reasons, like the conflict of interest. Undisclosed paid editing is an issue on our projects, where people who have agendas or who are paid to have agendas edit things to bring people to a certain perspective. I'm talking about like medical device companies editing Wikipedia entries saying that certain surgeries are way more successful or less controversial, just removing the part that they're controversial to make their products sell more. So paid editing would remove a lot of the independence and the neutral point of view that we strive to have on our project, and that what makes Wikipedia successful today.
Thanks, Ellen. Stephanie, I'm going to put the next question to you, so hoping that you can hear us still.
Yes.
Perfect. So most of us probably agree that accessing the internet, if not a human right per se, is at least something that should not be restricted. And the internet enables us to access to express our thoughts, to connect with others, to gain knowledge and information. However, if all of this is true and the internet is so critical in our world today, what does it mean if knowledge starts to be increasingly monetized? What is the risk here if all of the information that we need to access is paywalled in some way or requires a subscription to COIL, for example, in order to be able to unlock information that is currently free?
I think it's important to stress that, you know, we have had access to literature and knowledge through libraries, and we may have a wonderful internet that comes to our door, but that hasn't replaced the library, and so there has to be a library equivalent in an online-only mode, and I'm thinking for remote participants who might not have access to the same resources, for the increasing numbers of disabled folks who can make use of knowledge through their devices. So we have to, once again, it's this balance and tension. How much we've put an awful lot of emphasis in the last 20 years on the independence of the individual, but these other basic public structures that we want to fund normally through governments or through donations, through foundations, have to be healthy and maintain their ability to provide access. And of course, they've had fights with the intermediaries for control of that and for how much they have to pay to get access to information that they can make available for free. So I think that's a key point. One should always be wary of plugging a book you haven't read, but I just heard about the new book by Rebecca Giblin and Cory Doctorow called Choke Point Capitalism, which basically goes after, she's a forensic auditor, and they go after some of the really corrupt practices, you have to name it, that have been going on with the big monopoly providers of information. I think if we, as an action item, were to go after those practices and try to democratize them, try to make room for smaller niche providers, try to provide payment systems that are indeed true micropayments, support the public library system, for lack of another word, I think we won't have a problem. I don't think we're going to price people behind paywalls. The existing paywall structure is very clumsy. I might want to read an article that a friend sends me that is paywalled. I don't necessarily want to subscribe for a full year. So micropayments answer all these questions. And to respond to your earlier question about is it enough? Well, I think we can afford to up the ante a bit. In terms of what we pay. I'll pay a nickel for an article. Granted, I'm in a Western country and I'm, not starving, but there can be a gradient system here, depending on the economies. Hope that answers your question.
It does. My one concern when it comes to micropayments is simply, does it actually fund the material that you're accessing? News, for example, has a very short shelf life. You read an article, maybe even 6 hours later, it may be out of date. Sure, longer investigative pieces might have a longer shelf life, but at the same time, if people are paying just a very small micropayment to read it, is it really able to cover the cost of producing that piece of content? That's the question I sometimes have.
Well, that is really something worthy of a lot of research. To be frank, the inquiries into the death of the newspapers in my country, in Canada, most of them went on 30 or 40 years ago, and we haven't really figured out what it would take to restore a free press in the country, and time's running out, We now no longer have effective community newspapers. They've all been bought out. It's one of the points they address in Choke Point Capitalism. So I think further research is needed, but it's not a reason to shy away from a payment system, because these guys aren't getting paid right now. The scams that are going on with the content controllers, with the big platforms, in terms of not paying the artists and not paying the providers and yanking back payments that once they've made them, it's kind of shocking. So I think that we should move forward and try these micropayment systems. They can't be any worse than what's going on now.
Thanks, Stephanie. So Ellen, I'll put a follow-up question to you. So Stephanie was talking about the importance of libraries, and I'm curious what you think online equivalents could be. Are there certain websites or is there certain knowledge that is so essential online that it should always be free to access?
Mm-hmm. I think you can probably guess my answer to this. I think Wikipedia is a great online resource library, if you will. And I absolutely think that there is information out there that should be free to access. When I say free, I mean free as in beer, not as in speech. So we're talking in the context of money, in the context of web monetization. So you said you stopped shy of making access to knowledge like a human right. I think personally, it's pretty up there for me. Like, I think that information or knowledge that is local and accurate and reliable means, like, it's the lens through which we view the world around us. And I think that everybody has the right to access that knowledge, no matter where they live, or what language they speak, or what kind of currency they use. That information should be free for them. And I think that the Wikimedia model, it's not publicly funded, like you were talking about, Xiaoji, in that like governments don't support it. But I think it's publicly funded in that it's funded by the public. And so it's, a public good for the public good, somehow stepping away from our tendency to fall into the tragedy of the commons. We take care of Wikipedia, and Wikipedia is a good resource for all of us. And that is Like, that is the hope. That is what the Wikimedia Foundation hopes to accomplish. That's what I hope to support as an attorney at the Wikimedia Foundation. So yeah.
Thanks. Xiaoji, I'll put the next question to you, which is that there are certain audience segments and certain creators who face unique challenges in monetizing their work. Queer people, for example, disproportionately demonetized on YouTube. Activists and advocates in authoritarian regimes like Iran, Russia, for example, are unable to fund their work because of sanctions that are imposed on the payment systems that many of us use. I'm curious what you think, particularly in the context of those people who are, to borrow a term that Ellen just used, contributing to public goods, who are doing important work in these spaces where, at the moment, conventional payment systems simply cannot accommodate them. What is the potential that you see in web monetization protocols for allowing these people to potentially be supported?
I think this is a very, very important question. That I think this is a question kind of like I've been having this in mind throughout a lot of, let's say, the discussion we've been having. I definitely think on the one hand that web monetization protocol is a very good alternative, and let's put it in a way. This is something that we can see as a potential solution. But on the other hand, I am also thinking on existing examples of content monetization on platforms, existing platforms, and that include both platforms that, let's say, the social media platform we are commonly using, or I'm thinking on certain, let's say, specific platforms in China that maybe people are not really familiar with here. I think the existing monetization in those platforms, in the long term, I don't necessarily see it as a way that really help those kind of creators. What I'm giving here is probably not really any sort of like a really concrete idea, because this is definitely an under-research field that I think we need more empirical evidence on. First, what are the differences of the current monetization schemes in platforms, and how's that logic intervening with the web monetization protocol? What kind of lessons we can learn from the monetization schemes we currently have in many countries that are already being implemented in the long term? The second thing, I'm also thinking for those kind of creators, what are their actual goals of their work? I wonder web monetization, if it really brings them to the audience that they need, because their specific purpose on their work, that's either for visibility, for social and political impacts. Most of the time, I realize that withdrawing them, let's say, when they are demonetizing a certain platform, they're being disproportionately impacted by those platforms' algorithmic logic. Withdrawal from those centralized platforms does not always seem like a solution for the purpose of their work, because you still want to be engaging with the audience in those platforms. You still want to be the oppositional voices there. So I would say those are the things that I would put as a question, or let's say as important directions we need to go in research to really answer that question. And I don't see enough. I think there are certain fundamental conceptual differences between monetization on those platforms and monetization on the web.
Just to follow up on that, so web monetization technologies in the context of, say, Interledger Protocol, purely transactional. COIL, for example, is not licensing content. It is not exercising editorial control over the content that is being produced, which is quite different from centralized platforms like YouTube, who are, through private ordering, enforcing their community guidelines, perhaps in an arbitrary way, perhaps based upon commercial interests. Curious what you think about this, because I think it's an important distinction, the fact that you're able to potentially receive payment for the content you're creating, absent the threat of being demonetized for putting perspectives out there that may be unpopular or undesired by the platform that is hosting it. It's sort of this unbundling, if you will, of payment for content and hosting of content.
I'm thinking a lot sometimes on, I think we have some discussion on the possible, let's say, access to legal resources for people who were under this kind of situation. But I think this depends on a few, let's say, conditions. I think the first is that there are certain cases where for oppositional voices or contentious publics, this kind of resource is not the most urgent one. And I think oftentimes those kind of resources, especially access to justice, access to legal help, they do not necessarily help with their cause. The second thing I was also thinking that is, I guess, relevant to your question is that we often fail to separate the global audience and the local audience for individuals who are actually working in those situations. If their purpose is archiving, or if their purpose is really to make certain things visible, then this is helpful. But not all of them have that purpose in mind with their content. I'm not sure if that answers your question, or do you have any?
I think it answers my question to an extent. That being said, I got the countdown that we have 5 minutes left, so I'm going to bring Stephanie back into the conversation quickly just to offer a brief closing remark. And maybe the one question that I'll put to you, Xiaoji, is, so when you're talking about the legal protections that you expect from a platform, maybe in your closing remarks you can clarify for me what you mean by that, and also whether you think that is, or how that could be the role, for example, of, in the context of a Web Monetization Protocol, where the content is not being licensed. How could that work? Because there is no sort of contractual relationship between the producer of that content and the payment provider. It sounds something, what I'm hearing is like you believe there's some sort of social responsibility potentially, but maybe you can elaborate on that in a moment. First though, Stephanie, any closing thoughts?
Thanks, Ayden. I think it's really important that we move forward and try a few things. So I'm in favor of trying micropayments and try to disambiguate the actual coin payment for receipt of content and profiling. I don't mind being profiled. I want to be profiled within my taste groups, within, I think of it more as curated content that I'm interested in, and right now most of us subscribe to lists and get, to a certain extent, curated content. But there's no reason to hand that control over to the monopoly service providers. So that's one thing. I think it's important that more research is done on the economics, and that there be more transparency of how these big players are misusing the personal information that they're getting hold of about us, and misusing their power in the marketplace. Wake up the competition departments of the world's countries and get them to enforce competition law. Stop the vertical integration, because that is what is snuffing out small artistic content providers. Personally, I'm going to read Choke Point Capitalism because I think that's a good start on understanding that. But I think it's important for foundations to fund more research into what's happening to the stifling of content and the homogenization of what appears. I hope that helps.
Thanks, Stephanie. Xiaoji, you have 60 seconds.
Okay. I would say that the very major point that I would want to bring today is that as a creator, I have really high hope, I think, or expectation on Web Monetization Protocol, but not necessarily that in the sense that I expect it to solve every barriers I've ever faced, political barriers, economics barriers. I think we should understand monetization in a way that we are not putting all sort of responsibilities that we're not able to solve with any other field on it. But at the same time, I'm very interested also to understand, I think we should understand our online activities, especially in relation to the creation and consumption of content, as much of an economic process, but it's also an important social process under specific political condition. I guess that's a major thing I want to bring to today's discussion.
Thank you. And Ellen, you get the last word.
Okay, what an honor. I am really grateful for everything I've learned about web monetization over the course of the summit. And I'm thinking about how it might relate to the Wikimedia Foundation and our projects like Wikipedia. And I think, like, we mostly want the same things. Like, we want to be able to have equity and like ease of financial distribution. And we want to be, I guess we're both in the open knowledge space also. I think that where I see more concerns is that like Wikipedia as a product is like has a lot of integrity, and we take a lot to build into our policies things that uphold that integrity. And I think the community, as in the Wikimedia community, is happy with the status quo of our donor and donation model. And I actually brought some proof of that by a cute little quote that I got from work. Let me read it out for you. It says, so this is from a donor and they said that something struck me. Years ago, there's a documentary about how an underground system of fungi permeates forests, reaching from tree to tree, supplying nutrients, and possibly even acting as a warning system, mostly invisible, silent, yet so vital. During this unimaginably devastating time, there is a system of kindness and care nourishing our people, often invisible, quiet, but enduring. We feel it, and it sustains us if we just allow ourselves to be open to it. Thank you for reaching out and being a part. We will get through this together. So that's what a donor emailed to us after donating to us. So I think there's a community there, and maybe there is hope that altruism exists today.
Well, that's a nice message to end on, and hopefully there is some potential collaboration in the future between the web monetization community and what Wikimedia is working on as well. Thank you, everyone, for joining us for this session. Appreciate your time today.
Thank you so much. Thank you so much. That was very good. That was very good. I'm gonna ask you to vacate the premises. Oh well, vacate the stage. You can stay on the premises. That's very helpful. Néstor, do you want to go up? Néstor's one of our grantees. The pointer's on the stage, I think.
Here.
Néstor's one of our grantees, and he's gonna speak a little bit about Interledger in Latin America.
Hello, can you hear? Yeah. Hello, everyone. It's a pleasure to be here. I'm going to talk about financial inclusion, about Latin America, and let me, it works. Oops. It's here. A little summary. We have many problems in Latin America. I'm from Chile, I was born in Argentina. I speak, I live as a Chilean. Latin America, it's very special. Except for Brazil, we are speaking the same language, but at the same time, we are very different in many contexts. Also, when we are talking about financial inclusion, we think it's just about the money, the value of the money. It's about giving a credit card. It's about give access to bank accounts. I think it's more than that. Let me give an example. Let's imagine a world without without inflation. The value of the money is the same now, tomorrow, next year, in the next year. For example, with $10, you can buy the same thing now, today, and tomorrow. So I will ask you now, what do you prefer, $10 now or $20 tomorrow? We have no inflation. Maybe you are saying me $20 tomorrow. It's more money, you can buy more things. Let me now add some constraint. You have a family because you decide $20 tomorrow, your family won't eat today. So let me ask you again, $10 today, $20 tomorrow. Now it's $10 today. You prefer feeding your family. So the problem is not just the value of the money, it's the time of that money. We need the money now. That it's a big problem. So this presentation is about the expectations versus the reality. So, as you see, the expectation is that photo. The reality is me, as you see right now. So, I'm not here to talking about my project. I'm here for explain you my experience working in our project. I have experience in a technical, from web, big data, artificial intelligence, blockchain, now with Interledger. I come from a poor family. I understand that situation, but even still, I made some mistakes. So I want to talk about what mistakes. If I tell you millions of people, they don't have access to the digital economy, you know that. I'm not telling you some news. It's the reality. Also, small and medium business have problems for international payments. You are working in that. You know about that. But I'm going to talk about a specific problem. There is a vicious circle. Some families need to request a loan, a bank loan, or in any context, for pay bills, for buy food, for live. When they get their salaries, so they need to pay the loan with interest, with inflation. So in the next month, they need again to request a loan for buy food and later get the salary and pay the loan. It's a vicious circle. And in some contexts, we think give a credit card, we can solve part of the problem. That is not a solution because it's the same process, it's the same problem, just with other tools. In Latin America, we call that as a literal translation, financial bike. Yeah. Imagine you are on a bike, you need to move, you cannot put your feet on the ground. Yeah. So you cannot stop. If you stop, you fall. That's the problem in this context. If they don't request a loan, they don't eat. That's the problem. Other problem, in Latin America, we have informal commerce. People with degrees, with knowledge, with experience, they sell things in the street. Why? Because, again, they need the money now. If they work in a formal commerce, in a formal job, they need to wait 1 month. It's a problem. Again, I have here with many problems, but with opportunities. Also, there is a little transparency about the taxes. I'm paying taxes for everything, but we don't trust in government. We don't trust in fintech. We don't trust in anyone. Other problem, not just the time, now is the trust. You have the same problem. We don't trust in anybody, and we have to pay high transaction cost. So if I accept a credit card, for example, those people have the possibility to accept a credit card. So accept in the street with a mobile phone, they can receive money in a digital way, but they prefer the cash. It's very complex, and we have internal problems, internal volatility, because, for example, again, I was born in Argentina. I know the situation. In Argentina, they have 6% inflation per month. So, again, it's the trust, it's the value of the money, and it's many restrictions. So the Argentina have many boundaries for buying dollars. There are many problems. In Argentina, they have an uncontrolled monetary printing, money printing. They print money every day, millions of Argentinian pesos. So when I'm talking about, in Latin America, about financial inclusion, every month appear a new fintech with giving a credit card, a bank account for those people. I don't think that is financial inclusion. Financial inclusion is not, hey, I have a solution. I'm forcing you to adapt to my solution because we have many problems, and those people don't live, they survive. Again, for example, you and me, we are using a credit card for an expensive dinner, not for buy the food today. It's very weird. We need to understand that, and we need to think about how can we help them, because they cannot they cannot create a plan for the next week. They need to create a plan for today and maybe tomorrow. So, for me, the key is integration. Where is Interledger? Interledger, the protocol, in the center. Why? Because for financial inclusion, we need banks, we need central banks, we need fintechs, we need blockchain protocols, we need any company. Why? Because, again, in Chile, in Argentina, we don't trust in the system. We don't trust in anyone. We cannot trust in one company, in one person. So how can I build trust? So, for building a trust, you need many years. For destroy the trust, you need 1 second. So our idea is building trust in the ecosystem. So if you don't trust in bank, your money can be in a central bank, in a blockchain protocol. It's your decision where your money is. So, but also, before some years ago, I believe the Web3 on cryptocurrency, it's the freedom. It's about the freedom, it's my money, I decide how use that money, etc. But we forgot what freedom means. Freedom is not just about using my money anytime. It's about also responsibility. If I lose the money, I lose the money. So I need freedom. I need to assume the responsibility in this context. So for other person, maybe freedom means other thing. So freedom is about my money in a bank because I don't have to worry about if I lose my money, because maybe I won't lose the money. So for me, for us, the key is integration. How? A monetary portability. It's not just if I send you $, you receive Bitcoin. It's about now I can work with Bitcoin. Tomorrow, maybe I don't trust in Bitcoin. I move my money to other wallet, to a bank. Maybe in 1 year, when CBDC, central bank digital currency, exists, I move my money there. The trust, it's about move the money in this ecosystem. As, for example, you don't trust, maybe you don't trust in your mobile plan, in your mobile company. You trust if you don't like your current mobile company, you can change. That is your, maybe you trust for that. That's our first idea, monetary portability. So we learn about that because if, again, I'm talking about financial inclusion, many people don't understand about private keys, cryptocurrency, what is fiat. I cannot to sell the Web3 for those people without step by. I need to run or walk step by step. I mean, maybe if those people never had a bank account, I cannot give just a blockchain protocol, create a wallet with blockchain protocol, etc. I need to start with a small wallet, maybe centralized. They need to learn, and many days or months they can learn, and they can decide where their money will be. Also, it's a real-time, not just payment, it's the real-time money. For example, some people are not content creators, are not selling things or service. Maybe they are consultant, they are, they clean houses, etc. Any job. Yeah? So for yet formal jobs for them, yeah, we need to think about pay the salary day by day, so in a proportional way. Instead to wait at the end of the month, I pay part of the salary day by day. So we learn about that. We are building that. So it's like a web monetization, but in the real life. It's for everyone. Also, the embedded finance. So there a post not written by me explain about the real financial inclusion. It's about the embedded finance, where every company are going to integrate some financial product in their core. For example, a consultancy company who pays the salary day by day. It's embedded finance. It's using financial products without know we are using financial products. Using financial products without know we are using financial products. That's our it's other challenge. So we learned that while we are building our product. At first, our product was about remittance. We thought in that moment, send and receive money, we can solve part of the problem. We solve a tiny part of the problem. But also, we have more challenge in Latin America, in Chile, in South America, in Chile, Peru, Argentina, more. If I mention the word ledger, crypto, blockchain, Web3, etc., people don't understand me. People don't understand the difference between fiat and crypto. If I try to help them people, I need to try to explain without technical words. I need to speak in their language, not in my language, not my technical language. The problem is, thanks to the Web3, we have more opportunities, but we need to get out of the hype about NFT, cryptocurrency again. So I like the cryptocurrency. I don't like to sell just cryptocurrency. We need to explain the difference between dollar and Bitcoin without explaining what is a Lightning Network, how works the blockchain protocol, etc. We need an integrated ecosystem. So you and me. So we need to work. We are ecosystem. And for that, we can integrate every system, fiat, crypto. So let's imagine I finish our product, PeerPay, and in this context, still I am a single point of failure because I'm the actor who integrates everything. So for building a trust, I need you. I need your success. I need your products works. Because if I fail, still you are working in financial inclusion. And for finish, in Latin America, we speak every day about innovation, but we don't create many innovation really. For me, it's easier to try to sell a mining software and not solve this financial inclusion. It's we speak about innovation, but we don't work in that really. So for finishing, in your countries, in my country, this is a long-term, difficult, stressful, and with many problems. And in Latin America, we know how to approach this kind of projects. This kind of projects about financial inclusion integrate, create an ecosystem. It's not a work for 1 year. It's a work for the next 10 years. That's, we live in the chaos, you also live in the chaos. We live in a crazy world, so we need to expect that when we are working in that. So it's time to work even harder. Thank you.
Thank you so much, Néstor. Thank you. Everybody else, we've got a little breaky, about 15, 20 minutes break. At the end of this hallway, all over the hallway, you've got snacks and stuff at the end of the hallway. You've got something called the King Cake, which apparently is a New Orleans institution. If you find the baby in the King Cake, you get the pick where the Interledger Summit happens next year. Enjoy. I'm sorry? Wait, do you want the photographer? I'll bring you the net. Have you seen Karl? You also do photos? Sorry to take you away from your vignettes. Can I ask you for a photo? The lady on stage. Where's Aisha? No, I'm not going to clown on your session. You go. You're messing with.
Good afternoon. Good afternoon. Okay, I have got audio. I'm really impressed to see anyone here at the end of like 2 quite intense days of learning. I've been really blown away by some of the conversations I've witnessed. It's quite a privilege to be witness to some of them and to be here amidst what feels like the start of quite a lot of interesting new things. I'm also very lucky to have received foundation support, and I'm talking today about a project that came out of one of those, came out of that support. Revenue sharing language. After hearing about this nice simple version of Interledger as make sending payments as straightforward as sending an email, I thought I need a better elevator pitch. So my elevator pitch is to make creating a revenue sharing agreement as easy as writing a grocery list. Now, if you don't know what a revenue sharing agreement is yet, that's fine. I'll come on to that very soon. But the principle is you have a very simple list of who needs to be paid, when, in what order. So if tonight we all go to the bar, we end up creating an amazing song, we record it. First, we have to settle the bar tab, and Alex has to get repaid for that. And then we split the rest of it. Everyone who was in the bar singing shares 50%. The UN World Food Programme gets the other 50%. But before I kind of go into the details of exactly how that works and why we're doing it, I want to talk about an industrialist businessman who we actually discussed a bit yesterday. He's kind of in the presence of this conference. He was brilliant at everything he did, changed the world in countless ways. When he encountered a certain kind of media, however, he sort of created such a backlash that it changed the face of media as we know it. So I'm talking about Mr. Edison. And in 1908, he set up the Motion Picture Patent Company. I don't know if this means anything to anybody here. And no show of hands? Okay, that's great. I'm speaking to a room who either doesn't know or is pretending they don't know, which is great. So Edison bought up patents in movie cameras. So at the turn of the century, if you wanted to shoot a film in North America, you had to pay a license to the Edison Trust. So effectively, production slowed down to a halt, and most of the film distributors and exhibitors, they started importing films. So he was like, okay, well then I better buy up the patents for the projectors as well. So the MPPC was an end-to-end monopoly that controlled the production and the distribution of movies in this country. And as a result, there was a kind of, as you can imagine, a bit of a backlash. So this guy, Karl, he had about 300 lawsuits from with the trust, battling away. In New Jersey, which is where the MPPC were also based, he set up the Independent Picture Company. And this is where the phrase indies come from, and independence in the film industry. They were known by the trust as outlaws and pirates, also where that kind of concept starts. This guy, Adolf Zucker, he had this big idea, maybe people don't want to just watch 10, 15-minute films. Maybe we can do 4-reel, 5-reel, 6-reel films. He heard that France had made this big production about the life of Queen Elizabeth I. It was going to be a 6-reel film. He put $18,000 in it, which he had to get back somehow. So he went to the MPPC. They kept him waiting 3 hours and then said to him, nah, nothing in features. It's not going to go anywhere. So they kind of really didn't just like charge. They also kind of dictated the sort of films that got made and they got shown. He actually funded it anyway, and when they showed it, it became the first film premiere when he opened it on Broadway. William Fuchs, another guy, another one of the rebels. And these 4 brothers who were soap salesmen from Pittsburgh. No, Pittsburgh? Oh. Pennsylvania. So they basically got to the point where they just couldn't handle this patent oversight anymore, and they fled as far away as they could from the lawyers on the East Coast to the West. And these guys set up Warner Brothers, Fuchs set up Fox, Zucker set up Paramount, and Laemmle set up Universal. The rebels won. And, you know, the empire was defeated and the world would never be the same again. We've, ever since then, been living in a kind of post-Star Wars utopia. And, yeah. Move forward to the end of the century, and Hollywood also becomes known for its issues as well. You've got Hollywood accounting. I don't know if this phrase means anything to anyone, but it's basically the process by which a profitable film isn't profitable. Very famous example was in a court case. Winston Groom, the writer of the novel Forrest Gump, was promised 3% of the profits. The film made cost 55 million, made 678 million at the box office. You'd think that might be profit. It made a loss. It was loss-making. Return of the Jedi, back to the Battle of the Empire and the Rebels. Again, loss-making. In fact, David Prowse, the actor behind the king of the empire, himself said, you know, he'd get these occasional letters from Lucasfilm saying, "We regret to inform you, Return of the Jedi has never entered a profit. We've got nothing to send you." So, Return of the Jedi, loss-making film, a total disaster of a movie. So, when the web first arrived at the end of last century, I think there was, in a lot of people's visions, maybe an alternative way of doing things. Maybe the web would, by the way, I'm a frustrated filmmaker, so this is going to be full of like crummy animations which have gone through Keynote and then been exported to PowerPoint, so they get an extra layer of crumminess that I can kind of blame on the software, but really it's me. So this kind of led to this question: what if the web could empower filmmakers and free them from studio empires? And that's what kind of inspired the creation of Netribution, which was the website I set up with another friend. We were both studying film together, and another friend who was working as assistant at a film distributors. It launched on December 31st, 1999, and our first news story was that AOL was going to buy Time Warner. We kind of went through a whole series of trying to get money, and eventually, at an event called First Tuesday, we'd gone from asking for like £60,000 to 35 million drunkenly, and the guys from Enron were like, "This is great, this is exactly what we want." So I tell by that laugh, at least some people remember Enron. Yeah, so thankfully, yeah, we were like, this is going to be great. We dropped out of our film degree, and 2 weeks later, the dot-com crash came. But we decided to somehow sort of carry on. We did a weekly film magazine on netribution.co.uk, ran for 99 issues, covering indie filmmakers' concerns, and at the same time having a bunch of resources. So from this, then, one of our most popular sections was actually a book on film finance. Sorry, not a book. This is a book on film finance. It came from one of the most popular sections on our site, which was trying to explain to indie filmmakers how funding works. How do you get your film funded? And it was a strange, mysterious art. There were books, but they cost hundreds of pounds. This was like 22 bucks, I guess, in dollar terms. The next book was 25, and yeah, then the final book, which came out just after, like a year into YouTube, that was a kind of global book, and we tried to cover the film finance scene in 30 or 40 countries. And in the course of making these books, we sold about 11,000 copies. We sort of sustained ourselves through doing them. I kind of started to understand what was going on in this so-called Hollywood accounting. So we come back to another example, Harry Potter. 300 million budget, 942 million at the box office. It's loss-making, right? Now, I hope I'm not going to get into trouble. This was leaked. This has been published on a bunch of websites, but this is the Warner Brothers sort of revenue payout for Harry Potter, and it sort of breaks down where the money's going. You see here, above that, you've got the defined gross, 600 million. Here, a distribution fee's been taken out, 200 million. Here, there's a 200 million in distribution costs. So the costs are taken out after the fee. And then here, you've got like the money that Warner Brothers has lent itself to make the film and the interest on top of that. So altogether, you get a situation which actually probably was in everybody's contract. It just depends where you were in the agreement, whether you're going to get a profit. It's not profitable if you're getting your money at the very bottom of this waterfall. But if you're Warner Brothers, who's distributor, or the debtor, it's totally profitable. It just depends where you are in the recruitment schedule. And this is the kind of the key thing that people who are sort of new to film don't really necessarily know, that studio films control finance, production. Very normally they control distribution, and often they control exhibition for the same film. And this is known as single-party finance, finance from one person. Indie films separate production, distribution, exhibition. It's also known as multi-party finance because it's from multiple places. So here you've got a classic indie film, multi-party film financing agreement. At the very bottom, actually, we probably better work from the top because this is the easiest stuff. The soft money is like tax breaks, grant money from the National Film Board of Canada or the British Film Institute or CNC in France. You then get equity from investors. You get pre-sales for rights. You get deferrals from different actors and producers who say, we like this project, we'll put the money in kind. We will work for you for free. And then usually at the very end, you'll get the bank gap financing who said, okay, you put together this deal, you've got 90% of the money, we'll put in the final little bit. It means that the film then comes into profit earlier because the pre-sales don't need repaying, the soft money, grants, the tax breaks, they don't need repaying. You get recoupment at 70%. And that means your equity investors, they can start to see a profit share, and the actor and the director who also kind of maybe deferred their fee, they get a share. So this is it seems really complex, but this is actually a really simplified version of a typical film distribution agreement. And indie films, because they want to go back to the investors for their next film, generally want to give the investors some profit share. They want to say, this film was a good investment, come back again for our next film. Okay, so that's history of film and how indie filmmaking works, and I'm kind of sorry that I'm throwing this at you on Sunday afternoon after everything else you've been trying to learn. I'm now going to go into comfort zone. We've got web monetization arrives, and suddenly it opens up this question. It's a kind of exciting technology, money streaming from a wallet to content producers. It's the direct link between the person paying, the audience, and the creator that has been absent for a lot of the time in between. It gets really exciting, but then you have this question, who exactly is being monetized? Is it the creator whose work is hosted on the site? Is it the person sharing the creator's work? Is it the platform? And this kind of, the more I thought about it, well, okay, so the creator's your producer, the person sharing the influencer is the distributor, the platform is the exhibitor. And as we know from film, there is powers depending on who's in control of those bits of the process. In an ideal situation, you split it. So I'm here using an example of the probabilistic revenue sharing builder from the Web Monetization ecosystem. So I don't know if has anyone used probabilistic revenue sharing? Well, yeah, okay, I guess, yeah. So this is a way to split money between payment pointers on a random basis. You have 3 people who want to get paid for a website. Let's say in this example, the Jedi Order have somehow made a deal to show a film by the Force on the Galactic Empire's website. Somehow they're all collaborating. Let's not go into the nitty-gritty of how they pulled it off, but they're collaborating and they've agreed that they're going to split the money 3 ways. Anyone who comes to the website, and so you would put, I'm going to try this pointer. You put in the header of your website the 3 payment pointers, and you say, yeah, you pay them a third each. And anyone who comes to this site, they've got a 1 in 3 chance of paying one of these payment pointers. This is great if you've got 1 million visitors to your site. That's quite a successful, it's going to work. It's going to balance out 33% each. If you've got 10 visitors to your site and the film's 2 hours long, well, firstly, 10 doesn't divide into 3. So one of these guys is going to get less than the others. But also it's randomness. So there's a total chance that the Jedi Order get, I don't know, 2 views, the Force get 8 views, the Galactic Empire don't get any, and then they send in their lawyers and TIE fighters, and it all gets really messy. Like, it's random. You don't know if you can predict it. So we started thinking, what is the other ways you could do this? And yeah, robo-lawyers. Maybe number 5, maybe Johnny 5 could come and solve this all for us and start paying out money automatically. I was like, someone must have written this. So I kind of started doing the reading. I mean, obviously, smart contracts, we all know about smart contracts. Nick Szabo, 96, legal actions as code. Also in 96, Ian Grigg came up with Ricardian contracts. So they're not the same, obviously. Smart contracts are implemented at point of transaction. Ricardian contracts are more like describing documents, but the key thing is they've got to be human readable. This was quite appealing to me, because if you want to go to a lawyer with a dispute around a smart contract, or a judge, they've got to be able to read it. Something that's both human and machine readable at least serves the purpose that a human can read it, and you can also feed it to a computer and make sure that it implements correctly. I think the only implementation that I know of other than this, and if there's more, please come and find me afterwards or say at the end, is the Accord project, which I think, they don't say it on the website, I think comes from Dan Selman. It definitely comes from Clause.io. And this is a Linux Foundation project to develop smart legal contracts. And they have 3 layers. They have a text, a model, they have the logic underneath. The thing is, this is way too complicated. All we really need to do is say, pay these people in this order, and do it in a way that anybody who can read a shopping list can understand. So we kind of conceived this idea of a revenue sharing language that would be written using YAML, which I know isn't a super fashionable language. There's lots of problems with YAML. I can talk about the Norway problem all night. But it has the advantage that it's a bit easier to read for a lot of people than, say, JSON or XML. It's kind of, it doesn't have too many brackets. It doesn't have too many quote marks. So it's not for writing legal contracts. And that's one thing I want to say from the off. This isn't a replacement for a long legal contract explaining stuff. It is for writing repayment schedules that could be added to a contract. It's not the code for implementing the payout. It's the instructions that an RSL parsing code can use to make a payout. It's something that could be printed out on a piece of paper and stapled to the back of a contract, but you could feed it into a machine and it should pay out the revenue sharing agreement in the right order. It's hashed, obviously, to prevent alterations. So there's a very simple example there, but I'm going to sort of break that one down in a bit more detail. An RSL agreement has 3 parts. There's a header at the top. It's data for the whole agreement. Only really needs to have the name and the currency, but you can have a lot more stuff. The steps, these are then paid out sequentially. So the structure of it, you basically, you have a step, then another step, and then another step. And then inside each step, you're going to have payees. And the payees are paid out concurrently, and the steps are paid out sequentially. And this allows you to do 2 types of payout. A fixed sum, which is effectively going to, we'll show this in a demo hopefully, but a fixed sum will pay out a pari passu type payout, and a percentage sum will pay a pro rata type payout. These are two different types of payouts that are used in lots of kind of financial settlements, particularly in film, but I think in other sectors as well. These all go together to describe the way you want to structure a revenue sharing agreement for a film, or for anything. So, you know, the sort of motivation, I guess, is it's increases transparency and trust. If I'm saying, hey, my new record is going to give all the proceeds to charity, but in the back of my mind, I know that I first have to pay my hosting costs, I have to pay the studio time, I have to pay the band members. I can declare that publicly, so you don't later go say, I thought you were giving all the proceeds from your record to charity, and I say, well, I had loads of debts that I had to settle first, obviously. You know, also for crowdfunding and patronage promises, where you say, give me all this money, and I promise I'm going to do this with it, you could be quite clear. I'm going to do this with it, and these are the people who are going to get paid. The other area where transparency, trust helpful, I think, is when you're collaborating with people you don't yet know, and you want some kind of way to just say, okay, we're on the same page. Obviously, the obvious one in all the discussion about financial inclusion is most people cannot afford an accountant or a lawyer, and they certainly can't afford an accountant and a lawyer to chase stuff down. I mean, the chasing stuff down bit we're not really going into, but at least getting an agreement that you both agree on, you know, that includes probably the majority of people in the creator economy. Includes stuff where the amount's just too small. It's like $5. Is it worth bringing in a lawyer? No, you know. Or stuff where you don't know if it's worth it yet, like the great song we'll all sing in the bar tonight that we'll split 50-50. It also can maybe widen revenue participation. So this is kind of one of those, and if this works, then parts of the whole concept. But by automating the structuring of these, you could then say, well, I'm hosting my film on your website. Someone then shares it somewhere else. Someone then remixes it. Someone then choreographs a dance. At various steps of the value chain or of the distribution of that, there's lots of people making money, advertisers. Maybe the different people who are participating along that step also could be participating in that monetization. And maybe it could automate that process in a clearer and more transparent way. So the tool set we built around this, the first thing is Cascade. So RSL is the syntax. Cascade is the WYSIWYG builder. We started just doing a very simple JavaScript native version, and then the guy Rich Lott, who was doing the testing, they said, okay, this should be re-implemented in Svelte. And yeah, I'm going to show this in a moment. I'm having Civi. It's interesting because the fonts have completely changed in the translation from one system to another. So yeah, Civi Split then is the implementation of a Cascade builder. So the Cascade is used to build an RSL agreement. Anyone could implement that in their own system. And then we wanted to try and then save RSL agreements and then hook them into the Uphold API. We would have done it with GitHub if we'd had sufficient API access. I don't think it was built out at that time. But this is built on Civi CRM. Civi CRM is, I don't know, does anyone here know Civi CRM? So it's an open source CRM. It's a non-profit CRM used quite widely by the non-profit sector. It's got about 11,000 installs in it. It's got a pretty powerful API. It integrates with Drupal and WordPress and Backdrop, but it's old. It's like a PHP framework, so it's sort of, and it's been around for a long time, but it does things like payment handling, contact management, messaging. It's got a very, very good developer ecosystem, and it itself is non-profit. And its origin story is fun, but I won't talk about that. I've only got 8 minutes left, and I've got to do the demo. So Civi Split Agreement Builder creates and saves RSL. Civi Split Processor checks the balance and calculates what's owed. And then, yeah, then you can create payment processes that integrate with different APIs to then basically save each RSL agreement with a payment pointer. That can then be related to a sub-account on whichever payment network, so then money can go in, and then the processor part will check the balance, see what's owed, and pay it out accordingly. Okay, so time for the walkthrough, hopefully. So this is Cascade Svelte just running in the wild. It's available if you want to download it on lab.openvideo.tech. Oh, that's the description of RSL there, but yeah, you can also download. It's all GPL too. So if I clear this, I'm going to just create an agreement for a film collaboration between two people who are trying to monetize their work online. So you obviously set the currency. The decimal separator is because a lot of the world uses commas as decimal separators. So Japan uses no decimal separator. There is no decimal for stuff that's in yen. So we wanted to make sure it was international. You don't need to add anything more than that. But you could add a payment pointer, or that could be added later. And then you start adding a step. So so a fixed payout. You wouldn't have a cap to that, and you would just be saying, and you would add another, you kind of get the picture. So you basically, you build them out, and you've got warnings on the right telling you that you're not doing it right, and the second you do it right, it starts to build your RSL out. If we add now a percentage step, we also have ratio, because if you had 3 percentage payouts, you try and split. We get back to the thing that there's got to be a remainder. You want to split something 3 ways equally. You'd have 33.33333% recurring. In that situation, or anything where there's a recurring number, you would want to use a ratio. But if I do a percentage payout, and I'll put on a cap, which basically means we'll pay out this percentage until this cap is reached. I don't know why I just used Bob and Susie. I realized that I didn't show the slide which had the characters that I was going to build this. I sort of jumped ahead because I saw the time. So we've got the ILP address, and then obviously you could use other payment pointers or other addresses. And if this doesn't add up to 100%, the system will tell me off. So I'm going to quickly add that in there. And the key thing here is obviously, because of the cap, the payment processor, when it reads this, will stop. It will first pay off the debts of $400, and then it will split the next $1,000 50-50. But if I swap these over, so if I have to save that. If I put this here, you see we have a problem. We split it all 50-50. We hit the cap of 1,000, and we never get onto this stage of paying off the debts. So RSL has its own logic. You have to do things in a certain order and do things in a certain way. And whatever is passing it has to be able to interpret that logic. Okay, so this is the Civi split suite. So I've got running here the agreement builder. I'm going to just create a new agreement. I mean, I can also just show you, once an agreement's in here, it's then got reporting associated with it. But I got 3 minutes. I might just try and create an agreement. Does anyone have an agreement like that they want to throw at me, and I'll try and quickly write it in? Save me coming up with really boring names and trying to stretch my imagination at this point of the day. Okay, I'm going for the wild card then. The creation of DNA, commercial exploitation. Yes, so add a step, payoff costs. What have we got? So add pay, Rosalind Franklin. She was always buying lunch. Oh no, I put lunch here, I could put lunch here. I have to say how much the lunch was. It was 50 quid. And because this is built in Civi, the payment pointer is stored on Rosalind Franklin's record. You could build this in your own system and store the payment pointer however you wanted, but that's just how we're doing it here. I'm going to add James Watson. He is buying dinner, and that's 100. And then you've got Francis Crick. He's buying something else. And there we've got the cost, and then we're going to add a step here. And the commercial, so let's say split the rest. Percentage, World Health Organization. Yeah, there we go. And maybe they take a little bit for the NHS at the same time. So we save that. We save that. And at the moment, if I just click Save Draft Agreement, oh, we've got an error. Step 1 is missing a type. Okay, so I have to come back here and select the type. It's a fixed payout step. Now I can save it. You can see the agreement. So if I click Save Draft Agreement, I can still keep editing this, sharing it with everybody until everyone's happy with it. When I click Generate Final Agreement, that locks the agreement. And at this point, it can't be changed anymore. It's been hashed, as you can see here. And this hash will resolve as a URL. You can see it up here, so other people can show it and view it and share it. And now we can see, you can see I tested this earlier, DNA commercial exploitation just been generated, and we have a report, and so far, yeah, nothing's been paid back yet. Got 13 seconds, so I'll just have to show you one I made earlier. Yeah, so then obviously as you start paying money in, you then get them being paid out, and here you actually get a pari passu payout and a pro rata payout, the fixed and the percentage. But if you want to see more, then just come and say hello to me after the show. Thank you very much.
I know you want to, but no questions. You're gonna have to find Nick in the breaks and ask him any questions you want. Thank you so much. Last but not least, Snake Nation. Are we gonna? Are we gonna? Do you want me to clown for you?
Yes, please.
Oh no, I don't want to clown for you. Come on, you can do it faster. Come on, give them some encouragement. So I've heard you've got slides, right?
I do have slides.
I feel like we might have not sent over the assignment properly. I think you're doing a panel.
I am doing a panel.
How does panel?
Yeah, I saw this. It works well.
So is this a all-in-one?
It's an all-in-one situation. It's good.
Do I pay discount?
It works well.
Do I pay discount for it?
No, you don't. It's full price.
Enjoy.
All right, cool. Okay. So the assignment is a panel. But because we're talking about creative economy at a tech conference, I thought it was important to talk about, excuse me, make sure my zippers down. I thought it was important to talk about what is a creative economy, right? And so often when we have these conversations, we're in the midst of talking to government, we're talking to banks, we're talking to tech companies, but a lot of people are not aware of who we are and why we're doing what we're doing. So Snake Nation, we're a culture, content, and technology company. Our focus is helping young, diverse creators enter the creative economy as a means of alleviating youth unemployment and poverty. And all of that is in the service of people of color owning the narrative. And so oftentimes when you have these narratives out in the marketplace, they precede you. And oh, by the way, those narratives are also pieces of intellectual property that generate revenue. And so we want to make sure that those people are sort of being served twofold. One, in the advantage of being able to see yourself portrayed in a positive, authentic light. And then two, participating in the value chain that creates those narratives. And when you start to talk about the application of this on the continent, which we'll get into in a second, is massive, as there's an incredible trade imbalance at play here. So what's the creative economy? So let's talk about it. So creative economy is a $2.2 trillion annual economy. The focus for today's presentation is Africa. What you'll notice quickly is we'll take APAC here. APAC has the #1 creative economy on earth, $743 billion in annual revenue and 12.7 million jobs. But then Africa and the Middle East combined have about 1.1% of GDP coming from the creative economy. That gap, that 2% gap, is over 70 billion, is over 110 billion in terms of the gap, and then 10 million jobs. So you can see there's a massive, game at play here, right? Like, how do you make sure that you can start to close the gap and that you can create jobs, and also in the creation of jobs, you're also simultaneously creating intellectual property. So this is a creative economy value chain, and so one of the things as this whole weekend has been progressing, I've been thinking, okay, cool, so why do fintech people care? Why should anyone care? Well, every single part from the technology used to create content to its impact on society and culture, from concept creation on to production, aggregation, distribution, and ultimately consumption, there's payments that happen every single cycle, every single step of that value chain, right? And so whether or not that's me as an end user paying a subscription to Netflix, or I'm a production company paying a cameraman, in Djibouti, who knows, right? But the point is, like, when you create these products, you run into real challenges just like any other business in moving money, and we know this because we've done it, and it is a pain in the ass, excuse my French. So, for example, we employed 100 young people in Burkina Faso, right? And, none of them really had bank accounts. We employ them in the creation of content and design of strategy and so forth. And we ultimately had to buy everyone a phone and then go mobile money, but the process of us moving mobile money from the US into Burkina and then ultimately be deployed, we had to give it like a week and a half. And of course, everyone's time involved, just like brutal. So we think that this is going to be a massive area of employment and thereby an area of focus. So this is just a readout on the job creation that's happening in the creative economy. So you could take a look at that there. And this is this particular one is sort of 9 selected economies. So none of these economies are actually on the continent. So you can see, like, as a job area, this is actually on the uptick. And so why do we want to target youth? So we want to target youth because they ultimately are the earliest adopters of technology. They're super social, so especially when you talk about like multicultural youth in particular, when we're talking about the continent, this is what we're talking about. They over-index on every type of social media, and every type of adoption of technology. They have massive buying power, $3.4 trillion in the States, multicultural markets, $1 billion plus on the continent and growing. And of course, it's kind of hard to get accurate data on the buying power of multicultural millennials on the continent. But we know that it's obviously going to keep growing. And we think it's important to build with them. So when you put technology in the hands of young people, then they tend to lead the way in terms of adoption. And when you start to talk about the power of culture, culture actually precedes technology. And so, once a culture picks up your technology and finds it useful, then it ultimately leads to the adoption of the technology. So our approach has been to integrate technology and culture. So we have college societies, we have social studios, and we have digital and mobile, all in the means of saying, hey, how do you make sure there are no barriers to entry if you're a young creator and you want to enter the creative economy? So either we're on your campus, we're in your city, or we're in the palm of your hand is the idea. And so people are able to upload content. We're working with ILP on the off-ramps on this app. And so basically opportunities come down from anybody that wants to employ a young creator. And so and this is a big area of discussion and investment from governments on the continent. Because, like, for example, South Africa has 50% youth unemployment. So you can imagine, like, no matter what you do, you come out, like, you're almost like flipping a coin as to whether or not you get a job. I mean, it's that serious. And so on the youngest continent on earth, you really need to have tools built for it. And so this is the app that we're building now that's currently in the App Store and, of course, growing. And this is really where we intersect with Interledger Protocol in the off-ramps for the value that's created in our app. So everybody that gets a social media account also gets a digital wallet attached to it. And the idea there being that most young people know how to use social media. We don't have to educate them on that, and no one cares about how a digital wallet actually works. So as long as they know that, they don't care. So our goal is to make it as simple as possible and to speak the language that they already speak and for them to do activities that they're used to doing, which is why we chose social media. So before we dive into why media and web monetization, I want to take a beat and just kind of explain who's coming up to talk to us today. And so we have a really, really dope panel that I want to read their bios. So first up, we're going to have Gabrielle Deculus join us. Thank you so much. And so I've known Gabby. Welcome to the stage. Thank you. Thank you. So I've known Gabby about 10 years now. I introduced our common friend, technologist out of Houston. Gabby is a dope entrepreneur and operating in the space of culture and technology. I'll read her bio here. So she's a creative marketing strategist and social entrepreneur with over 15 years of experience. She is originally from New Orleans area and works between here and Cape Town. She's a founder of St. Josephine Consultants and as well as Business Rules for Women and the NOLA Zydeco Festival. So welcome, Gabby, to the stage. Thank you so much. And then I'm going to bring Uchi to the stage, and I'm sure this guy doesn't need any introduction here, but I'm going to do it anyway. And so Uchi is a developer who loves building things, especially at hackathons. So currently he is the Director of Developer Relations at Coil, where he is taking Coil strategy for developer engagement globally and building a community around web monetization, Interledger, and Coil's products globally. He's also the founder and CEO of Chi Money, a platform that aims to unlock the potential of money for everyone in the world. Chi Money enables the exchange of value between multiple types like crypto to mobile money, airtime to gift cards, banks to mobile money, and so much money empower players for Google, Microsoft, and others. So Uchi, welcome to the stage. And thank you. I'm super excited about this panel. And then last but not least, I want to bring our CTO, Snake Nation CTO, Tawanda Brandon, to the stage. Tawanda is a super dope brother. We met in Cape Town at Rise, where we also met Adrian, which is how we've been like following you guys for so long. He's a software engineer and also a tech founder with a background in corporate IT, banking, and IoT. Currently, he's building bridges towards a more inclusive financial economy across Africa. And so welcome Tawanda to the stage. Thank you so much. So this format's a little different. What we're gonna do basically is have the panelists respond to different data points that we're gonna use the screen to share, right? And so we'll basically say, hey, what do you think about this? What do you think about that? It's really more of a free-flowing conversation. So I know we got about an hour, so hopefully we enjoy the ride a bit. So why media and monetization? We can kind of go here. Here's this massive explosion. So what we talk about here real quick is what happened after COVID. And so, of course, COVID hits, everyone's locked in, the amount of content that gets consumed goes through the roof. And so just really interested to hear your guys' input on like how you saw it impact in culture, how you saw it impact in tech, and just how you've seen this sort of online consumption impact and touch your worlds. So we'll start with Gabby.
Okay. Yeah, actually when COVID happened, where I was sitting was producing a conference. And I immediately decided to pivot and keep the conference, and we fought through COVID. I actually had COVID when we produced the virtual conference. Probably within 2 weeks of us being in lockdown, we just did it. And from that point moving forward, I realized like what we had done. And that, everyone was eager, hungry, and wanted, to be entertained, to be engaged, and to be connected because we didn't know what was to come. And so where I sit as a creative marketer, outside of creating, the Business Rules for Women conference and keeping our community engaged, I found myself helping other companies that saw that same opportunity and thought that that was important. And so from where I sit, you know, the things that I had in my back pocket for years that weren't necessarily needed just yet, COVID gave me an opportunity to really jump into tech, show people what I can do, and show them that they can continue to push through and do the things that they want to do as well. So on the consumer side, they're building a better community. On the creative and business side, you know, we're in demand.
Yeah, dope.
Yeah, thanks. So for me, when COVID hit, we were planning the Africa Hacks Hackathon, and also we had to pause that, and we kind of said, how can we support the community? So we went back and reached out to everyone in the community. So Africa Hacks is a community of 10,000 people based out of multiple African countries. So we reached out to them and said, how can we support you? Because lots of people have lost their jobs. Some of them were home from school, and Africa has committed some funding to basically distribute to the community. And the interesting thing that happened was that even other community members decided to also match the funds that were contributing. But the highlight of it all was that we were inspired to build a platform to bring everyone together. So this platform, the goal was to build something that allowed members of the community to earn, to learn, and to play. So those are the three things that we work towards, and that's how the Start by Africa Hacks platform was launched. And as part of all of this, even after COVID, this platform also is used to host hackathons. So last month, we just hosted a hackathon in partnership with the Office of the Vice President of Nigeria and some financial institutions in Nigeria. And that's the hackathon that the ILF was part of. So, I mean, COVID, I think, was an inspiration for us to continue to support youth on the continent. And I'm really inspired by what this nation is doing. And I truly believe that it can unlock lots of opportunities for the continent and beyond.
Give thanks, give thanks. Mr. Brandon.
All right. I think from my end, what COVID really did for a lot of places in Africa was, kind of catapulted us into the future of where the rest of the world was, and as far as technology and tools and digital tools and how we use them. And what I mean is, for the first time, we were all locked up. You couldn't go anywhere. You couldn't go to work. And the work still needed to get done. Schoolwork still needed to get done. And for the first time in a very long time, or at least in some areas, for the very, very first time, we saw institutions and governments getting involved, alleviating some of these barriers to entry that had always existed, that they quite frankly didn't care about. And a good example is we always talk about mobile data and how mobile data is a barrier to entry to just the internet in general. During COVID, we saw universities and educational institutions and government involved buying data for students who couldn't go to school anymore so that they could do their lectures online, et cetera, et cetera, et cetera. And some of that stayed on, some of the changes, some of the universities that we're also working on with some of the programs we're doing. Some of the students hadn't gone back to campus until like earlier this year. So for the first time, we also saw a lot of that happening, and it hasn't gone away. That online element, people understanding that you can actually just get on a call with someone and actually conduct business and not ever need to meet with them. We also saw just the rise of the use of online platforms by creatives just as a way to make money now. You can do live shows, you can do any of the sort of like appearances that you could make money from. And now they were kind of like leading, they were at the forefront of pushing everyone else onto like, this is the new normal, and just the impact that this move or, that this gradual change into this increased utilization of these digital tools has also come with the benefits that they bring. And, that I believe, they've managed to turn the heads of the governments, the slow-moving big dinosaur corporates, into where we kind of need to be, especially for companies like us trying to build these tools that are serving the same people. That conversation has been very easy for us, trying to explain to someone that they should probably get, a video on demand subscription. They did that during COVID. You had the whole day, you couldn't go anywhere, you couldn't do anything. And, we started to see, a lot more of this becoming normalized, as opposed to what people were used to. A lot of utilization of social media, not only from just the social side of things, but from the dissemination of information. So, all of the information that was around what's happening with COVID, what's happening with, like the laws that were just changing left, right, and center. We started to see more formalization, or some of the organizations that used to be, in person moving online, and they've stayed there ever since. Yeah, and
it reminds me of I don't know if anybody follows D Nice here, DJ D Nice, right? But, so D Nice started what was it, Club COVID, right? So Club COVID. So Club COVID was D Nice, streaming his set. So D Nice is a famous hip hop DJ, basically. Nowhere near as famous as he is now, though, and he got that love from everything that was happening in COVID. So of course everybody's locked up. And, he starts to spin. And, he's a very high-paid DJ, so he's spinning for hours and hours and hours. Next thing you know, Michelle Obama's in his room. Everybody's in his room. I mean, you're talking 500,000 people following a DJ set online. And, he had to have a tip jar, And this is where I think when we talk about, like, the power of web monetization and culture, and I think, making sure that the tools are ready to meet that level of demand, right? Because had web monetization been ready then he would have been basically able to like capture that value, right? But because because the tech is still in development, you have people sort of doing ad hoc, like it's not built into IG, and so he says, cool, well go here to do a separate. Maybe I'm using Patreon, I'm using something else, and so you see creators constantly navigating and trying to figure out like, how do I turn this following into income, which is why they're perfect candidates for web monetization. So let's shift gears a bit. We're going to talk a bit about two trends: subscription video on demand, right? And this is the growth. So this is a projection on the players on the continent right now, right? And so you'll see everybody from like smaller players all grouped under others, to Showmax down to Disney Plus, which looks like it's going to eat, and then Netflix, right? And so these are all new players to the continent. Obviously, some are bigger than others, some are homegrown. But when you combine the subscription video on demand with the demand as well for online video, you can see that there's going to need to be an uptick in content creation. So I'm just curious, just from the standpoint of your different sectors, like how you're seeing these sort of trends impact the work that you do. So you see, this is a bit of a jump ball for everybody. So I'm just curious, like, so you got online video on demand, you have subscription video on demand, you have this massive demand for content that started in COVID. Like, how are you guys seeing this play out in culture and marketing and then across the tech space? So anybody wants to raise their hand on that one to go first? Yeah.
It's heavy in my world. It's so heavy. If I can be transparent, I'm here at this conference, but the demand for content creation, online streaming, and in-person experiences, as you can see, is at an all-time high. And so that's what I meant by my first comment, is that it went from the intensity and importance of focusing on in-person experiences to going online and actually creating that content. The subscription piece attached to it that all content creators and brands should have. And it's like, it's just a no-brainer. If you're not doing it, it's time to start doing it, because people have budgets for it. They're ready to spend their coin. And that's how we build trust as brands, too. Now, we have to go where the people are. And we have to stay connected to them. Community now, I think, matters more than ever before. And that includes, of course, online. So, I just think that it's a big thing. it's a big part of my work. Went from mostly in-person production to, like I said, being able to do more tech-centered production, which is something that I've always really wanted to do. So I think that it's a cool way for creatives to harness their skills, learn more things, and then become attractive to not just your own community, but to other people who want to build communities too. You can help them do that.
Copy. Now, before you leave this point, something just occurred. So, how many followers does Business Rule for Women have?
We have probably about 230-ish thousand.
Okay. And then, so what do you think about, because there's sort of like your community side of 200,000 plus followers that you have to service as a creator.
Absolutely.
Then of course there's, your business side where you're doing more B2B.
Yeah, there's different elements that I look at this from.
So maybe put on your Business Rules for Women hat right now and just kind of say like, I'd love to understand like what are the things that you're looking at to monetize your following, for example.
The more that I sat in the sessions throughout this summit, I've been thinking about some ideas that I had a while back in the capacity I didn't have back then that we may have more of now. I was speaking to Tawanda about this, is that, any community in general, but especially the community of women in business or women handling business, we need payment platforms too, and we want to support payment platforms that are created by women and or have an interest that goes back into the things that women want and care about, and then those who support us. And so I think that, right now I'm actually thinking and figuring that piece out. I've actually had Business Rules for Women on ice so I can figure out what is our next step, what is our best next step. And it has everything to do with web monetization, but also processing, invoicing, and transferring money. I feel like if we launch something like that, or when we launch something like that, really, it's going to be huge. So I'm thinking about the opportunities from our community more now than ever in regards to not just monetizing for myself, but helping them monetize through our platform.
Copy. Cool. No, thank you for that.
Yeah.
Okay, so Uchi, you're next on the hot seat here. I know this is near and dear to Coil's heart in terms of online video, so just would love to hear how you guys are seeing the future and, when you see this data, what does it make you think about?
Yeah, so when I see this data, I think about the change that happened before we started seeing more adoption to online video, right? So when I look at the developer community, for example, previously, most of the events needed to be in person, but now we're forced, I guess it's not forced, we're encouraged to mostly, even with in-person events where there's always going to be an online video component, right? And we're starting to see lots of developer training move from just a month-long or 2-month-long training to a community-based training program where there's a community online and there is also online videos as part of this community. So when you're learning with a community, and as part of that, they provide some incentives to interact with others that you're learning from. So, and like what you said, the opportunity to promote a business by using online video and partnering with platforms like Women in Business, I think is really huge for all kinds of businesses, right? There's massive adoption or massive growth in online video, and I think that for everyone, just being able to have or bring our products and services where people are, it's massive. And I think the platform that you've built is really impressive and a big opportunity for, most of the companies that are here to work with women in business. So.
Cool. Thank you. Mr. Brandon.
Yeah, so I think specifically from what I see, you had another slide up with
I don't know how to go backwards. How do I
online
go backwards?
video.
The red one? Boom.
Perfect.
Tech support. Thank you.
So, look, the previous slide, it was clearly showing the growth of online video in general. So, SVOD. And what I like about this particular slide that we're looking at, the projections, like what it's going to look like over the next couple of years, that others section, is, from a Snake Nation perspective, with our platform, that's kind of like where I'm imagining us being categorized as, because this other section has been in existence since 2019 there, and we can see that in 2025, the share that it has over, just all of the subscribers that are going to be subscribed to video on demand, bit like Netflix, et cetera, is massive. Now, this presents an opportunity for like some really meaningful work from, specifically the complexities surrounding, the payments side of things. So when you look at, we're looking at the stats between, I think it was Spotify, Apple Music for audio on demand. And I think in total in Africa, they had just
under a million.
Under a million monthly active subscribers. And that's like all three of them put together. And we found that to be very surprising. And a lot of it isn't necessarily that the subscription itself is expensive. I think a whole lot more people than just a million, a little under a million in Africa, there's billions of people there, can afford, a $9 Netflix subscription a month, considering the stats clearly show that this is something they're looking at. Well, why they are not doing that is kind of like, where this opportunity I'm talking about comes in. So how can we make it easier for, people to buy these credits or, to make these subscriptions if they are unbanked or if they are on mobile money or, if they're actually just holding cash. Or, how also, right, say, we've given you this platform, well, how do we also ensure or make sure that you actually have access to the said platform? Data will always be like, a very big barrier to entry if you're trying to target anyone who is, coming from 90%, like 99% of the countries in Africa. So this person is thinking, okay, I can pay $9 for Netflix, and I will be able to watch, as much content as I want 24/7. But do I have the $25 or the $30 in data that I have to pay for this, right?
Exactly.
And it's like and even from our end, we've kind of thought about different workarounds. Just from a customer acquisition perspective, when you think about it and say, okay, well, how much would it actually cost as a tech platform to zero rate your platform, as in to do reverse billing, right? So users can have the network, say they do have network coverage. How can you make it that they shouldn't need to pay their telco, they shouldn't need to buy data for them to access your service? Something that we've seen, like in South Africa, all of the banks have zero-rated apps. So you can top up your data.
Facebook as well.
Yeah, Facebook was doing the same thing, right?
Yeah.
So
Meta, sorry.
Meta. So like so the opportunity, right, that it kind of like presents is like, from when you're thinking, how do we get this, or how are these people going to jump onto these platforms? How are we going to meet those stats? I actually see that with the work that we are doing and the opportunity and the problem that we can actually solve for, will blow those stats, the numbers that we're looking at right now, at least twofold. And it's a question of how much data can you buy with $1 million, and what does that translate to? If you remove that need, I want to use your platform, I want to pay, I want to come and watch your video. This is a creator, right, in Africa, and you're speaking to the people you're supposedly supposed to be making this content for. Your fans actually want to support you, they want to pay, they want to buy whatever you are selling, but some of the costs that associate what you are selling makes what you're selling way more expensive than it actually is, or what it's supposed to cost. And not to beat on this for too long, another layer of it is just when you talk about just cultural export in general, over 95% of cultural exports right now are coming from developed countries. And when you talk about Netflix and people in Africa joining up Netflix, when I'm in South Africa and I'm watching Netflix, how much content on Netflix that I'm watching is actually coming from South Africa or Ghana or Tanzania or any of these places we're talking about. And I mean, it's very important to look at it from that perspective because these trillions of dollars annually. So what does that look, when we move that 5% that is being shared across, most of these developing nations to 10%. This is a country where we've already had a lot of 90% or over 90%. There's a stat I just had in the previous talks. I think it was about 90% of the people in Africa are living under $8 a day. Consume less than $8 a day. And when you think about how much you need to make for it to be considered employment in an environment like that, it's the kind of numbers that you would get by just moving the needle a little bit. I have friends that pay $20, $30, for their rent. There's college students, right? But this is unheard of. It's unheard of in South Africa. It's unheard of, in most of the places that I would go to. But you go to Zimbabwe, you go to a lot of the places that we've been doing work in. $50 is enough for someone to get a roof over their head for the whole month. Maybe another $50 for you to get your groceries. And all I'm trying to say is $200 a month, $250 a month is considered employment in a lot of these areas. And when we talk about just SVOD and the creators getting a share of all of this revenue that is going to come from this opportunity, it is going to go a very long way in some of these marginalized communities that we're doing work in.
And I think it's a great point around the economics. And so oftentimes we hear criticism of oh, well, who cares about the little bit of money you're going to make on web monetization? Well, shit. When you look at the amount of minutes that are going to be consumed, for instance, and then the impact value of the dollar right now, for instance. So when we were employing these young people in Burkina Faso, we were paying them $200 a month, and they worked for us full time. They were making more than their parents, right, to put it in perspective. So, the point is, it's better to be a working creator probably than anything else. And even when you talk, I think there was this whole TikTok thing that came out, it was on 60 Minutes recently, right, where we're the Chinese version of TikTok is different than the American version of TikTok, right? And, when you ask a Chinese, they ask Chinese kids, what do you want to be when you grow up? And number one answer was an astronaut. And then in America, the number one answer is an influencer, right? And so, which is scary.
Which is scary because they are filtering what their children consume, and they're letting the rest of the world consume whatever comes their way in the algorithm, and it.
Yeah.
I sent you that article.
Yeah, I'm sure you did.
Because he has a brilliant daughter, and I'm just we talk about these different apps and the things that she's using and things like that, and I immediately thought about Maya, and thought about just her generation of. I don't want to go too deep here. I was gonna, indoctrination, But anyway, word.
Yeah, no. I mean, so I kind of have a different reaction. So I look at that and say, all right, well, what are the chances of someone becoming an astronaut? They're probably about as high as becoming a pro athlete or as high as becoming an influencer, right? Everyone thinks they're gonna, right? But what's interesting about what's being built here is the application is shit that can actually be a job in a way that it's not now, right? So when someone says, hey, I want to be an influencer, everyone thinks you're full of it until you show up with a check. And it's what you hear artists talk about all the time. No one believed in me till I bought a house for my mom, or nobody believed in me till and so what I found interesting in the early days of developing Snake Nation was, the work that was happening at Steemit. And what I really thought interesting about what Steemit was doing was that they were saying, hey, you can go to YouTube right now and be like, I paid my rent with Steemit, was one of the videos I saw, right? And so when I'm we had just raised money, so I was just got all this time, I used to be at Rise just going deep on is this real, is this viable, da, da, da. And I think the answer, it is viable. because basically, you know, brands, I spent a long time working in brands, and so with brands, I ran an agency for 15 years. Brands don't care where their content comes from. All they care is that it moves the needle, right? So the ability for there to be more connective tissue between the business world and the creator, to me, that's the promise that web monetization delivers on. Because ultimately, like, if there are easy ways for brands to say, hey, here's $100,000, make sure this gets to everybody whose video engages, you know, right now that's what Google is doing for them. You know, if you think about it, right? And there's a whole other sidebar around like fraud in web advertising. That's super interesting. We would get into that at the W3C. So anyway, we're gonna keep rolling along this. Is this helpful? Like, are y'all like this format? Is this cool? Okay, cool. Yeah, we're just bouncing off of data up in here. All right, cool. So Africa, why Africa, right? And so I think, you know, you hear like a lot of things about Africa. Africa's the future. Africa's got the youngest, you know, continent, you know, on Earth, and is for a lot of people the next frontier of growth. I think for a lot of people that read this, they immediately think, it's 1 billion new buyers. And I think what's interesting that we should be thinking about is like, well, how do we make them producers? Because producers are going to be ultimately buyers as well, right? Like, you know, so how do we make sure that we can change that poverty narrative and take advantage of business conditions that are at play, right? And so my job is to kind of understand what's being built, but then figure out like, well, how does this make money? And how is this useful to the general public? And so here's an interesting one. So I don't know if everybody's keeping up with what's happening with the African Continental Free Trade Agreement, but you know, this is the setting, right? This is the environment. So Africa's going to one market, and they're also going into, there's a big, massive movement afoot called Smart Africa to go to one single digital market, right? And so you have, you know, barriers to entry being blown away sort of internally. So imagine like Africa's version of the euro likely to come. But then you also have, you know, an acknowledgement and no, you know, marriage to legacy systems in a lot of these places that says, hey, how do we get to one single digital market? And so Tawanda touched on this a bit before. So this is kind of the nut to crack I think we should want to dive into here. So 95% of cultural exports come from developed countries. And then 0.05% comes from the developing countries, right? And so, you know, that gap means that you have, you know, people that are largely consumers and not producers, right? So I'm gonna park it here for a sec and then go back to the panel. Super interesting to see like your thoughts on the role that web monetization can play, and government, ideas on policy and all that kind of stuff, around shifting these numbers. Because Tawanda, to your note, imagine if you can get that number up by a couple of percentage points. As we saw, these are massive numbers, so you know, moving something 2 or 3% can actually be millions of jobs, right? And, you know, billions of dollars, because it's a massive economy. So just super curious on the role that you think web monetization can play in shifting this current reality. So I'll pick it back to the panel. Jump ball, who's on it?
I can go for it.
All right, cool.
So web monetization, and I would say, I'll speak on Interledger in general. I think it has a lot of potential for the continent, right? Because when we look at the population, the youth population is really large. And not just large, but also very ambitious. And I don't want to use hungry. Ambitious and willing and full of vigor and will to get stuff done, right? There's this population of youth. They want to work. They are smart. And also, they could do a lot with like less. So I think for Interledger and for the payment space in general, an opportunity I see is some of the resources in the space could be used to harness some of those talents, right? I believe that 10% of investment in the space could achieve like 80% of impact compared to like, it's like the 80-20 rule, right? So 20% of resources put in Africa has the potential to accomplish what 80% of resources put in other parts of the world, or in North America specifically, could accomplish, just because of the youth, mostly the talent there. So I think there's an opportunity to explore programs that are targeted towards providing opportunities for maybe tech talent, developers, content creators on the continent to start exploring use cases that help to unlock utility for Interledger, right? Because when we look at the payment space in general, Web3, crypto, and the rest of them, there are lots of value that are being created. But the challenge that we're seeing is that this value don't mean much in real life, right? So you might have $10,000 in some token, but when you think about it when you think about it from the perspective of what does this mean in creating value for maybe paying bills or paying tuition or paying healthcare bills and stuff like that, people are not able to use those funds to basically make their lives better. So I think for Interledger specifically, something that should be explored is how can some of the resources that are available be targeted towards programs that support the growth of youth, and programs that help youth on the continent to start building with Interledger, to start creating content focused on Interledger, and to start playing with Interledger. And I mean, this applies to a lot of ecosystems, and definitely Snake Nation is the community to work with to make this happen.
Give thanks. And yeah, that's an unpaid endorsement.
So Snake, yeah.
But you touched upon something that I thought was really interesting, because we were just chatting about, like, well, how do you help drive adoption of Interledger, right? Like, and so, you just touched upon video. So I'm just curious around, what you see as implications for, like, online learning, for example. Like, how do you see that kind of playing out in terms of, like, the Interledger adoption and so forth? Yeah.
For sure, yeah.
That was a question for you.
Okay, for me?
Yeah,
Okay.
yeah. That was back. That was a follow-up for you.
Okay, for sure, yeah, I can answer that. So, like what Tawanda mentioned earlier, that in some parts of the continent, data, which is like Wi-Fi and internet data that, most of us, we have it on our phone. We don't really worry about the amount of megabytes or gigabytes that we spend. It's just there, it's always there on our phone. We can watch as many YouTube videos as we want to watch. We can watch Netflix on our phones without it being a concern. But for some parts of Africa or some countries in Africa, that's a big challenge, right? So you're paying for each megabyte that you spend. So like Tawanda mentioned, even if you've paid for the Netflix subscription, you are limited by the amount of data that you can afford. So I think to help with the adoption of Interledger, something specific that can be explored is the model that Facebook or Meta did. So what they basically did was that they made it free to browse facebook.com in partnership with all of the mobile networks. So if you have the SIM card, or if your phone is from a mobile network, when you open facebook.com, it's free. It's paid by the company. So I think there's an opportunity there to maybe partner with existing learning platforms that are focused on the continent. I think Snake Nation is building something like that, like an existing learning platform, then working with maybe funding, providing funding to pay for data in partnership with the mobile network, so that any content that is Interledger specific, or any content that is Interledger specific basically is free, so they don't have to pay for data, and because that's like a very, very big problem, right? And for us here, it's not an issue for us, but it's definitely like an issue, and I think it's a big opportunity that we can explore. Lots of companies, Meta, Facebook thought about it and it worked a lot. And that's why you see Yeah, so I think so I think it's a big opportunity. That's all I'm gonna say. Yeah.
Yeah. No, and you know it's interesting because you know when you talk about just some of the challenges on like, you know, on the continent at large. And what's interesting to me about the school environment is like they have Wi-Fi. Let's just start there. They've got infrastructure, right? And so, you know, the ability for, you know, students to tap in, I think is big. But what you're seeing, we saw Microsoft do a push. Liquid, of course, also has a push. I don't know, I probably talked to 2 or 3 different, you know, people that want to do massive online learning platforms for the continent. Because I think everyone realizes it's there. But you know, what will be interesting as an application for web monetization will be if those courses can, of course, be monetized, right? So I'm Karl, I've got some knowledge to share. There should be some self-service way that I can do that, right? Yeah.
Yeah. Okay. Yeah. Go ahead.
I've had a couple of thoughts as I've listened to you talk, and also connecting back to what we were, the last slide, and then listening to the attorney that works for Wikipedia earlier, who was up here talking. You know, so whenever you show that graph, that data with the others in 2050, you know, I was like, how much of that is YouTube and how much of that is a learning platform or learning platforms? And I think that data connects back to what you just shared as far as the opportunity for, you know, exporting out of Africa. There are some serious bridges that need to be built. You know, there's eager people ready to work, and they're hungry for education around the things that are going to get them paid. And to talk up and to in regards to the communities, that I love that idea around partnership. It's going to take partnership, but also we have to remember that there's people that move around this continent and that continent specifically because they're eager to get to where the money is so they can go back into their communities, right? And take care of their people, take care of their villages and develop, et cetera. So we have to understand that there is a major journey here that is attached to any effort related to investing in the youth of Africa. You know, like it's a trickle effect, a domino effect. You know, education is gonna be a huge part of that. Yes, we have lots of platforms that, you know, free information is available. But I think that something that is a bit more specific around these skill sets would go a long way. The work that Snake Nation is doing in, 52 universities right now in the college societies, in the student societies, is major, major work. Those are the types of programs that people in this room should be, you know, partnering up with, so we can continue to make an even bigger splash and impact through the work that Snake Nation and similar companies are doing. But just connecting the dots here, like all of this is deeply connected and necessary. You know, yes, these are our comments, but this is also a call to action.
No, thank you. Thank you for that.
Yeah.
And there's really interesting that this wound up being like one of the most popular slides in the deck. All right, cool. So we're going to go to the next one here. And so we talked a little bit about the environment. Like, so government has a significant push happening right now for one digital market, one continental free trade agreement. And so I'm just curious in terms of your thoughts around the players that are currently operating. Because obviously, like, fintechs are blowing up on the continent. But as you can see, there's still, like, obviously it's a big continent and lots of room to play. So just super curious around, like, any other players in the space that you've been watching, that you find interesting, their approaches, you know, things of that nature. So I think this is an opportunity for us to kind of talk about that, especially people that are focusing in this space of, like, how do we ease the friction, you know, as much as possible. So I'll open that up to the panel.
Okay, so I'm just going to try and lead this a little bit. I had some points around the web monetization stuff we're talking about, and I'm just going to try and tie it together with this. So I think this was right before COVID, 2019, 2020. Some stats were published for Econet and EcoCash, which is a telco from Zimbabwe with a mobile money service called EcoCash. And they had just over $80 billion in revenue over that particular financial period. And we found this to be very interesting, mostly because the nature of most of these payments are micropayments, right?
Mm-hmm.
This is not a big government entity pushing out payroll. This is people buying tomatoes on the street, maybe bill payments here and there, and why this is relevant specifically for web monetization and what Interledger is kind of like allowed us to do is micropayments kind of like drive economies. And it is very exciting to find technologies that kind of help push and are actually built around the nature of micropayments. What we are trying to do with our web monetization integrations, part of it is, well, okay, our platform, just a rundown, users have wallets and all of the monetization, all of the earnings on the platform, they get awarded in a token that lives in their wallet. And when we talk about micropayments and what that can allow us to do is, so for example, if you're a user on our platform, we can reverse bill the data that you are spending on our platform and just charge you directly from your wallet, so you don't have to pay the telco, right? Opportunity right there. How are we doing that? That's exactly how telcos bill for mobile data, right? It's like micro payments in their nature, but in the form of the data that you bought from them. Every time you load a page, 20 kilobytes, 30 kilobytes, they subtract that from your account with them. And what we're just trying to do is, we pay the telcos upfront, and then we bill the users in our token, remove the first barrier of entry. And then, secondly, okay, well, now you don't have to worry about the data that you need to spend to watch whatever you're going to watch, right? Then another layer to it is like, well, we're not also going to assume that you are comfortable with just spending $9 or whatever you're making on online entertainment. We know you can just go to Facebook and scroll through. We know you can go to YouTube. How about we only bill you every time you watch an episode? So you have a subscription, you have access to all of this content. We're just going to bill you for the minutes or the seconds that you're going to watch. So when you come back from work and you open up the Snake Nation platform and you continue watching a series that you're watching from yesterday, we'll start billing you, from there, kind of move away from the whole subscription side of things. And we believe that this is a model that these users are already used to from just the way they are already interacting with their telcos. Mm-hmm. This is the way that, this is how they're paying. I mean, most mobile plans are prepaid, so they're already used to, I have $1 and it's going to cost me 5 cents every minute. The telco is going to bill me as I do it. It's the same thing. I have $6 in my wallet. I want to watch this movie. This 1 hour, 30 minutes is going to cost me so much, right? Mm-hmm. And this is something that, web monetization and the Interledger, quite frankly, is kind of like opened up for us. Advertising had kind of been sort of a dead model. In Africa, most specifically, not a lot of people are spending internet advertising in an area where there is no buying power. So the amount of advertising revenue that is going into the US, and what's coming into Southern Africa, for example, a fraction of it is going that side. So putting into context that whole conversation, I realized that saying $1 million in data is like $1 million is a lot of money. But $1 million is not a lot of money in the context of people who are spending tens of millions, hundreds of millions of dollars in marketing and just like trying to bring customers on board. I mean, when it's all said and done, there is going to still be a need, for this layer, this foundation of moving the money that works in all of these different fragmented territories. And we are trying to, of course, like any entrepreneur would do, we're trying to take over the whole space and kind of be that, de facto utility token that people are going to be using across all of these different services. But, we do acknowledge that the work that everyone else is doing. We have no intention of reinventing the wheel. Recognizing all of the different partners and all of the different players in the ecosystem, the things that they are doing, what we're seeing from here, and trying to figure out ways to integrate and connect into them has kind of been our strategy around it. And with our token, in whatever blockchain our token is going to be living on, the Interledger is kind of like removed the need for us to kind of like stress too much around who's doing what, where they're doing it. It's kind of like now a check of, how is this coming back around to like, these payment pointers that we're going to be allocating to our users and piggy bank off that. Now, what's happening with Smart Africa and in PAPS, for example, is also very interesting from the perspective of when we think about other barriers of entries to just countries or nations in general. When we talk about a little bit, forgive me for saying this, when we talk about countries that are on the OFAC list, for example, Zimbabwe being one of them, these users that are in those countries are still experiencing the same financial problems that anyone else, anywhere else is experiencing. And we see, sort of like even this regional trade or just the ability or the existence of a frictionless foundation for payments, going across these regions, kind of like alleviating a lot of that because most of the stuff that we are consuming, most of the platforms that we are using are coming from across the sea. And when they come to Africa, and I'll point back to Zimbabwe again, this is a country that is also on the OFAC list. In as much as Interledger is going to be able to work there, as much as like all of these cryptocurrencies are going to be able to work there, when you get to the exchanges, when you get to whatever financial institutions are supposed to use to then like do the off-ramp from whatever that fiat, whatever that crypto is going to be to fiat, you are not going to be able to do so. And that has nothing to do with anything that you or your parents or anyone, quite frankly, that your fans, your producers, everyone you're working on, you're not involved in that. And it's a function of government policies and just the politics that is, quite frankly, in almost all of these countries at a certain level. So I also see this as an opportunity that is going to kind of alleviate some of the issues that come with that. So, if I can't access whatever service because I'm coming from a country that is on this particular list, well, at least now I can trade with, or at least now I can get subscribers to my content from users that are coming from, Ghana, or that are coming from from South Africa or wherever, where this particular restriction, is not going to be an issue. Yeah, and that's millions and millions of wallets. The way I look at it, there's populations with millions and millions of people, and when you put those together, just from the impact that the lack of access that all of these individuals will have, that is all going to go away, with this regional, or at least a regionally accepted foundational frictionless payment system.
All right. Any builds on that?
Yeah, I can go.
Okay.
So when I look at the players in this space, I kind of look at it in 3 levels. And the first level are the mobile networks. And the top 3 that come to mind are Safaricom with their M-Pesa solution that lets people to send payments via offline funds. And then there's Airtel, there's MTN. So that's the first layer. And then on top of that, we have companies that have built APIs that connect to web and mobile apps to the offline mobile networks, such that you can send a payment from an app to an offline phone directly. And on that layer, we have players like Cellulant, MFS, and all those other partners, API layers. And then on the other layer, we have folks like Chimoni. I'm going to plug Chimoni. So we have Chimoni, of course, that Xiaomi has integrated with all of those people in the middle layer such that you can go from crypto and Web3 directly to the offline stuff. And then from Snake Nation also, potentially to the Xiaomi API, to like an offline mobile money wallet. And that's kind of where we want to be, where like we're connecting from any value to an offline user in maybe a rural part of the continent, so that user doesn't have to have internet on their phone, right? So they go from the Snake Nation token or from SRP Ledger or from Interledger through the Xiaomi stuff, through the Xiaomi API, and then Xiaomi API already integrates with Cellulant, MFS, and all of those stuff. And then it goes to Airtel or M-Pesa or MTN. So I think that's where we want to be, where like any value or any earnings that someone has earned from the Snake Nation platform, like what you described, where people are watching videos or doing some work and earning some funds in the Snake Nation token, they could instantly cash that out regardless of where they are located without like needing to have a bank account. So that's the future I see in terms of payments on the continent. So enabling people to have utility of their funds regardless of where they are, regardless of what device they are using, regardless of what mobile network they are using, and bringing all of that to Interledger and making Interledger global.
No, I love that. And it's interesting because, you know, when you think, at least when I think about telcos, like in the States, Netflix doesn't need to be Verizon. Like, it's a non-issue. But in Africa, you better have a data strategy, right? And so that's why when you talked about earlier about like how few users, and one of our friends was working in Universal Music, that's how we heard about how small like Apple Music was on the continent, for example, or Spotify is on the continent, is because of the data. So we're planning all this incredible like take over the world tech, but it's like if people can't use it because they can't, you know, access it because they don't have the data, then it's like this sort of hidden speed bump that I think we should just all be aware of. For us, the way we approach it, just for full transparency, is that we approach Liquid Telecom. We're like, hey, we want a reseller agreement. You know, we want a reseller agreement because we need to get that data at cost, right? So, you know, and then you can then help make sure that some of that value creation that happens on the platform can actually come to our users as data, right? And so that's another dynamic as well. So, you know, there's lots of ways to kind of skin the cat, but just throwing it out there like that the data costs continue to be like a major roadblock too, which is interesting when you think about like how it actually prevents people in the case of web monetization from earning a living, you know, even as well. So there's probably some trade-off that can happen there if there's money being generated and data is a barrier. I think we're running tight on time, so we're gonna just end this with like, what are some of the tech trends we're seeing in culture? And I know we talked a bit about DAOs and NFTs, right? And why we're talking about these is because this is really where we saw creators like dig in, like call it pre-COVID, you know, you talk to a creator about NFTs and be like, what? And so, you know, people didn't really care, average people, not talking about the people in this room, but like users who are in the space that adopt, but don't necessarily understand blockchain and don't necessarily, you know, at that time didn't understand the use of NFTs. And so I think what we've seen in the last couple of years is a massive uptick in the use of NFTs and in DAOs as well. And we've seen it both from like community foundations developing DAOs for neighborhoods, down to, of course, creator collectives establishing DAOs and using NFTs. And so, Gabby, you had a really interesting use case for NFTs. We tried to implement last year, but we had an unwilling, short-sighted client. But I'd love maybe you to talk about some of the uses for NFTs that you're seeing, like even here in the city. You know?
Yeah, you know, earlier this year we had an opportunity. We were working with a cool client, and I was like, what if we just do NFT tickets? You know, and this was before Coachella dropped there. So I was so pumped when I saw Coachella drop their NFT ticket, because I see that as the future as somebody who's a producer. I see that as, you know, I see that as now and the future, to have NFT collectibles and merchandise, and recently heard about digital NFTs as well. So as far as here in New Orleans, you see the culture here. You see, you know the vibes. New Orleans is a cool place, but New Orleans is very much so unbanked. There's a high poverty rate here, illiteracy, et cetera, but we have brilliant artists. We see that in these types of space, in these types of communities, right? Because we build art based off our experiences. And so as someone in this space, I'm very passionate, interested, and very much so in the weeds about minting NFTs on site at experiences, and also creating collectibles and things like that around things that people love and they spend money to go to. And so that's just one way you can utilize an NFT. But of course, there's tons of ways. There's music, there's art, there's minting the art while you're doing the art, and offering just like I said, the digital piece where it's physical. It's a physical but also digital component. I think that a lot of us saw NFTs based off of the apes and the this and the that, and building communities around that. But I think that there's a bigger opportunity to build community with NFTs around special interests, in organizing and allowing people the artists, going back to creatives in these communities like New Orleans, to make money forever, and for their families to make money forever. New Orleans is playing a big role, is really pushing festivals and everyone that comes here pretty much to figure out how to get the culture bearers involved in the things that you're doing. That's why you all saw that second line here yesterday, right? That's why you're seeing these different elements, because not only do we want to perform and entertain, but we want to monetize. And so this city has a special interest in seeing NFTs and Web3 really come to life here. We just had our very first local but national conference here around Web3 and NFTs, because we are slow adopters. We still have, until COVID, a lot of people were not even using a POS system that they should be using, collecting data at all. So I really commend New Orleans for pushing folks to not only help the culture bearers monetize their talents, but also just get up to speed, man. Get up to speed and just jump in and participate, and and improve the economy and lifestyle of those who we enjoy their works. So there's many ways that we can use NFTs.
And it's interesting that you touch upon that, because when I think about culture and like how culture drives tech adoption, right? And really, and that's why you see like Web3, like, the promise of Web3 is really the promise of the creative economy. And so it was really interesting to see like how they're taking NFTs, and I'm sure a totally different direction than they were originally intended, which was like, who would ever think that, this is now can replace ticketing. But, who would have thought that it would have taken COVID to drive QR code adoption, for example, right? So some of this is like, how do you be flexible? Because it was like, everybody's like, QR codes is like, from a marketing standpoint, a couple of years ago, I was like, fuck, QR code, why would you do that? But now it's like, you don't even have to tell people what to do to use QR codes. So just an example of like how like these external factors influence, the adoption of technology. Like no one could predict, except maybe unless you're Bill Gates, that, COVID was coming, right? That's another story. Okay. So, but what's interesting, when you hear about, so let's kind of take it a step further around NFTs, and you start to talk about metaverse real estate, and how you have all of these different, problems occurring of like gas fees and things like that. So that's why I think what Interledger is doing is super interesting. When you start to get into this lane of like, now we're going to extend NFTs into now saying, I want to buy a piece of real estate in your metaverse. What does that look like? And you're seeing a lot of players enter that space as well. So Diddy, Snoop, all of these guys are now starting to be like, oh yeah, I'll make an appearance in Fortnite. I'll make an appearance here and there. And so it's very interesting. Like Travis Scott did a Fortnite concert, for example. So just as, this is where that adoption happens. And so they're finding audiences wherever they are. You know, whether or not they're in person or online. Like if you could say, simple math is, hey, if I could do a concert for 1 million people, that's great, right? And so that's how the artists are now looking at these technologies, which a couple of years ago didn't mean anything to them because they weren't, you know, driving any value for them, you know? And so just a long arc on the adoption. So I think we're gonna.
I just want to comment real quick on that.
Sure.
You know, I put on my Oculus a couple months ago, and I was in the metaverse. I was just like poking around and stuff. And Big Frida, who's a huge artist from here, is performing in the metaverse.
There you go.
It just didn't get a notification about it. Didn't know it was happening. So when we talk about culture bearers and we talk about, you know, Interledger and we talk about just opportunity, like I think that the possibilities are endless.
Absolutely.
You know? And it's good to see that there is adoption, it's slow adoption, but we all have a role to play to educate people around us about it and to support it.
Yeah, I did not know that Big Frida was in the metaverse.
I was like, what?
So does everybody know who Big Frida is? So would you please educate us?
Big Frida is a bounce artist from New Orleans. Big Frida has their own shows and on like Bravo and in a few other platforms, but definitely the sound that you heard on Beyonce's latest album, you know, Break My Soul and the backdrop, that is New Orleans. That's New Orleans music in the backdrop of that song, you know. So Big Free, I would say the internet, then, you know, Web3, and then, you know, NFTs will do big things for artists and creatives. I mean, and Big Frida is proof of that.
Copy. Okay, cool. I think that is our time. I'm getting the evil eye over here from Alex.
No,
so I'm gonna leave now before he throws something at me.
No, actually, sit down. I hate to be the guy to do this. First of all, sit down because I want to hang out with the cool kids as well.
Thank you.
It makes me feel young. Second of all, thank you so much for doing this conversation. I feel like it sparked a lot of other conversations. The sad part is we have to end here. This was it. This was the Interledger Summit. The good thing is there's no party tonight, by the way. The good thing is, though, we've got the space until 11:59 p.m. If you want to continue the conversation, hang out, the snacks, there's going to be whatever. Hang out, enjoy yourselves. And if you really want to continue the conversation, we have a community space, we have a Slack. Join us. Be there, be present, and hopefully we'll see each other next year.
Absolutely.
Thank you so much.
Thank you.